particularly thrilled, maybe, on his side. But you know what I'm saying? You're going to hear that about. And remember Kamala Harris and Joe Biden at the debate? She reamed him about busing and segregation, and now she's the vice president. So politics, things happen like that. It may look like we have issues at times, but we don't, because it's there. The love is there. The love is deep. Underneath the surface.
It's down
just
there.
way under, way down.
Deep,
layers
deep.
Under, like you need like a drill bit to get.
Or chisel. Shares of Micron sharply lower, earnings and revenue both beat analyst estimates, but investors were seemingly looking to see a bigger impact from AI in the company's forecast. The current quarter guidance was in line with the average analyst projection, but fell short of some analysts' loftier expectations. Additionally, Micron said demand has been sluggish in some of its traditional markets, including PCs and smartphones. Before today's drop, the stock had been up 67% year to date. Micron CEO will be on Mad Money tonight. Of course, they make the high bandwidth memory, HBM, which is part of the AI trade, and they said they're mostly sold out for full year 2025. But some analysts are saying, others, like TSM, said that they're fully sold out. So,
should I still look at it as just commodity memory type stuff, or is it gotta have proprietary stuff now? Micron.
You should have proprietary stuff. I mean,
no, is Micron there now? Micron always was
that business is completely cyclical.
Right, that's what I mean. But these
but
are,
now it's escaping that.
All right, because the stock's doing much better. Over the years, it was feast or famine.
Right,
depending on
solely on the price of DRAM.
Exactly.
Yeah. Meantime, bank stress test results. The Federal Reserve said the biggest banks operating in the U.S. would be able to withstand a severe recession scenario while maintaining their ability to lend to consumers and corporations. The stress scenario included U.S. unemployment surging to 10%, commercial real estate values plunging 40%, and housing prices falling 36%. In that hypothetical scenario, banks could absorb nearly $685 billion in losses and still exceed minimum capital requirements. And now, of course, the wait is on for banks to outline any sort of plans about capital allocation, share buybacks, dividends, et cetera. The Fed said, probably won't happen until Friday after 4:30 p.m., but others say it's not going to happen until Basel III is ironed out. We know the details.
Those numbers sound,
horrible, right?
Well, where we are today, it sounds like that could never happen, but we know never say never. And we got a pandemic,
right.
We got some. I don't know, they're somewhere in the world they're vaccinating people about bird flu, which when they try to scare you, they say the mortality rate could be 50% for bird flu. And I don't know, that's probably very unlikely. We went through remember before COVID, the reason we initially didn't think COVID necessarily would be like that was because we had been through MERS, SARS,
exactly.
We had been through so many other possible Ebola, so many other possible pandemics that when that one really did take hold, it was a shock. And now we're ready to accept the possibility of another one. But hopefully bird flu is just as unlikely as it was the first time. But what else? How else do we get to 10% war? I don't know, a dirty bomb. It's hard to imagine 10%.
Could be a massive cyber attack on our grid.
A massive cyber attack that could do a terrible black swans that we're talking about, but we don't think 10%. We think.
Look at the impact that one cyber attack had, on CDK,
right.
On the auto industry.
Right.
They can't do. They have to write pen and paper. But on a grander scale, obviously that's small. But you can see how an industry can be paralyzed if you attack the right sort of common threads, the right platforms that they depend on.
Banks are important. But the kind of things that we're talking about that would get us to 10% unemployment, I'm more worried about those events than whether the banks are able to weather. I mean, it is important. You don't want the financial system collapsing. But the type of scenarios that you're talking about have their own set of scary
We'll
things
have a whole bunch of other worries.
Yeah, we will. And we do. And I do worry. Boeing is facing, I worry about the guys up in they can't get back. What are we going to do? Send a space? Let's say, what if Boeing has to ask Elon to bring those guys back guys and gals from the ISS? That's sad. Boeing facing new whistleblower claims. A subcontractor mechanic alleges retaliation by Spirit Aerosystems after he raised concerns about work that he observed on the 787 Dreamliner. He said he witnessed holes being improperly drilled on the plane's bulkhead in a way that deviated from Boeing's manufacturing specifications. Boeing said in a statement that the claims were reported previously and thoroughly investigated and posed no safety concern. And regarding the whistleblower's claims of retaliation, Boeing said it isn't involved in the personnel decision of subcontractors. A Spirit spokesperson said leadership is looking into the matter and encourages all employees with concerns to come forward with the company's protection. And I'm not even going to reference the last couple of whistleblowers that maybe are not with us at this point.
They are not with us.
They maybe are, yeah, but maybe, yeah, a couple are not with us, which I'm sure is nothing more than coincidence, hopefully.
That's what they say.
Yeah.
All right, at the Aspen Ideas Festival this week, NBC's Lester Holt met with Airbnb co-founder and CEO Brian Chesky and OpenAI co-founder and CEO Sam Altman. He asked Altman about his experience last fall when the board fired him from the company he founded.
The whole board firing me and coming back thing, I mean, Brian was an enormous help during that. It was obviously a super painful experience, but I do understand why anxiety levels are so high. And I think the previous board members, like, they're nervous about the continued development of AI, had whatever feelings they had about me and how we were doing things. And although I super strongly disagree with what they think, things they've said since, how they acted, I think they're like fundamentally good people who are nervous about the future and trying to figure out how we get to a good outcome. I'm super excited with the new board. They're extremely constructive and helpful and experienced and strong. It's been a very productive thing since then, but that was a horrible experience to go through. Not during the moment where it was just like, this is a crazy thing, let's figure out how to undo it. And Brian was like unbelievably helpful, but then the period after that, where I just had to like kind of pick up the pieces in this like state of emotional shock, that was really bad.
What I noticed in those first 24 hours was not a lot of people sticking up for Sam. And I, in my darkest times, in my crisis, have had people stick up for me. And that's what I wanted to do for Sam.
Much more from the Aspen Ideas Festival throughout the morning.
Up next, stocks on the move. Ahead of the opening bell, check out the shares of Amazon. The company's market cap crossing the $2 trillion mark during yesterday's session, making it the fifth big tech company to join that club, along with NVIDIA, Apple, Alphabet, and Microsoft. We'll be right back. The S&P 500 and the NASDAQ logging some back-to-back gains. Joining us now, Corey Firestone, and co-founder of Aureus Asset Management, and a CNBC contributor. More to come, Carrie, at this point in your view, even though halfway through the year we're up about 15% on top of 26% last year.
Yeah, hi, Joe. Well, I think that the rest of the year could be more volatile than the first half. I mean, we've had really no correction. If you go back to the beginning of 2023, it's been almost a straight line higher, and it's been more and more concentrated. And that becomes an issue when 10 companies represent 76% of the gains in the S&P for 6 months. You know, that's pretty extreme. I mean, we've seen it before, but for short periods of time. This is extended for a long period of time, and that weight, and it's primarily, you know, NVIDIA is 34% of the gain for the whole S&P. The 15% gain for the entire index, 34% of that is NVIDIA. So we think that there is upside, but we feel that we could have some ups and downs along the way through the rest of the year. There's no recession, unemployment is low. We still have an economy that is positive. We have not fallen as so many people had predicted. We continue to grow. But on the other hand, it's a soft landing still.
You may not, if you don't want to play those leaders, you may want to look at some of the other areas that, because you always have to be invested, don't you? You never go.
We're pretty highly invested.
Yeah, you never go to 100% cash. So with the implied, you're implying maybe there's some volatility in those top 10. So there's some other stocks that you think aren't overbought.
Yeah, exactly. We own the big names, but if we're looking at what has not moved or what's been hurt by, of course, all this huge surge. If you have $1.5 trillion that's moved into NVIDIA over the past 12 months, that money didn't just come from cash. It came from other names. So the software, enterprise software, other than Microsoft, for example, and Meta or Google, if you call them software companies to some extent, names like Autodesk or Adobe, CRM, which is Salesforce.com, those stocks have been hurt as people have moved away from enterprise software. And we think they offer great opportunities. Their multiples are down. Their stocks have underperformed. A couple of them, Autodesk has started to move higher. Adobe has had a little surge, but they're still attractive. They offer mission critical offerings in their areas. And the customers who might have been a little weak last year because they weren't sure where the economy was going, they have deferred spending, and they're going to have to move capital spending back toward the software environment and not just spend it on chips, because there aren't even enough AI chips available for people other than the big buyers to own. So we like those names. We also see opportunities in names like American Tower. American Tower has been an underperformer. It has a lot of debt. They had a Sprint transition. They had properties in India that weren't working. We think they have things moving in the right direction. The stock is selling at a low PE relative on their cash flow, and everyone needs more and more digital communications. Plus, AMT owns a lot of digital storage centers, which is another way actually to play artificial intelligence. So we like that. And the last name I would give you is Thermo Fisher. So TMO was one of the stocks that really benefited through COVID because of all the testing, of course. And then the stock had a setback, naturally, because we weren't in COVID and people were not testing so much anymore. It started to come back, and we see that earnings growth continuing. Next year, we're going to see better numbers than we've seen for quite some time. And also, if you mentioned bird flu earlier,
don't you dare use bird flu as a reason to buy this stock. Shame on you.
Anything else, and anything else that turns up, they're going to provide tests for it.
You know that company well, I feel. That's a local company up there, isn't it?
A long time.
Yeah, Thermo Electron, and then Fisher, and I think it's a Route 128. Yeah, Route 128 company, great.
I know exactly where. Yeah, I used to work on Route.
Unbelievable company. It's all coming out of those great schools, and once again, way for you to get to the Harvard connection. All right, Carrie. You like Carrie or Carrie? I like Carrie.
Carrie.
You know what I'm thinking of?
You can call me whatever
Incredibles.
you like, Joe. I
Think
call
of The
you Joe,
Incredibles.
and you pick the name for me.
Carrie. All right, Carrie. Let's go with Carrie. Just spelled K-A-R-I. All right, Carrie Firestone.
Nice to meet you, Joe.
Good to see you. Thank you.
Take care.
Coming up, the CEO of Airbnb speaking to Andrew about fallout from the pandemic, the Paris Olympics, and the Taylor Swift effect. That's next. And later, get ready for tonight's debate. Pollster Frank Luntz will join us to talk about the messaging from Presidents Biden and Trump. Squawk Box will be right back.
See a peacock.
Headlines on the Aspen Ideas Festival, where NBC Universal News Group is a media partner. Andrew has been there all week, and yesterday he spoke with Airbnb co-founder and CEO Brian Chesky about the state of summer travel demand.
Let's talk about this summer. What are you seeing just travel-wise?
Oh my God, it's totally like.
Are we still YOLO? It's still YOLO.
I think we are. I don't think we're ever going back. I think what the pandemic did is travel and experiences was taken away from people, and sometimes things are taken away, they don't go back. And this is something that is innate in all of us. And I think there was I think there's this appetite for experiences that is actually greater in travel than pre-pandemic. I think it's how people ultimately want to spend their time. I think we're more mobile, more nomadic. I mean, now more people can do their jobs by laptops. And we're seeing that there's a lot more travel happening in the world because people are flexible. I'll give you a couple examples. One, the total eclipse. We saw a massive increase in Airbnb bookings along the path of the solar eclipse. And during that period of time, a quarter of the bookings in the entire United States were on that path. Another thing we're seeing is the Olympics. We are literally seeing hundreds of thousands of bookings in Paris for the Olympics. I want you to imagine an Olympic stadium. Now I want you to imagine filling like 4 or 5 Olympic stadiums. And that's how many people will be staying in Paris on Airbnb.
Well, we're going to see you there.
Yes, absolutely.
By the way, one of those properties is part of the, I don't know, is it technically part of the Icons?
Yes.
Selection?
Say d'Orsay, we took the clock room and we turned it into an Airbnb. We got the designer who designed the Olympic torch, and he designed what may be the best seat in the house for the Olympics, because the Musée d'Orsay overlooks the Seine, which is the river where the opening games are.
How much does it go for?
It's free. It's more like a,
You book it like,
thousands of people, one winner.
how many Icons, by the way, are there total now?
I think we launched with 11. We probably announced 3 more since. So we just announced the Inside Out house.
Right.
You can basically stay in Riley's mind. We announced the Incredibles house, and you can stay in the Incredibles house. And these are like truly once-in-a-lifetime experiences. They're really fun.
Is there one you can tell us about that you want to have happen that hasn't happened yet?
Yeah. So last year, the Barbie movie came out, and we turned a house in Malibu into the Barbie dream house.
Right.
But I always imagined, I don't know if you ever saw the opening scene of Barbie, like Barbie World. I want to start eventually building entire like streets and worlds. I think it would be really fun. Almost like Disney, but like at a level of detail even they've never gone to.
Taylor Swift effect.
Yes.
It's an amazing thing, but does it concern you that it's not a repeatable thing?
Well, it doesn't concern me because I think our business is so adaptable. I mean, we saw during the pandemic, people stopped going to cities, but they started going to less urban areas and staying in big homes. So yeah, we've seen a 70% increase in bookings where Taylor Swift actually has a concert. But I actually think there's tons of events that are huge opportunities for us. We have the Euro Cup, we have Olympics, and I think events are going to be a really big part of Airbnb's future, because I think more and more, why do people go to Taylor Swift concerts? I don't think they go for the music. I think they go for the shared experience. I think increasingly here's my theory. The more time we spend online, on social media, on devices, trying to get that feeling of connection, but it never quite feels like that energy, people are increasingly gravitating to concerts, stadiums, festivals, conferences like this.
Right.
So I think you're going to see a lot more of this.
What's going on in Barcelona right now?
Barcelona
Apparently they want you out.
This has been a very, very long, like over a decade-long story with Barcelona. We work really, really hard. We're in, 100,000 cities. Barcelona's been one of the more difficult challenges for us, but we're trying to find continual ways to operate and be successful there.
What do you need to do to convince them?
I think there's a lot. I mean, well, here's the one thing I learned. It's like, oh, you have 100,000 cities, and like there's Barcelona, or like New York.
New York.
It turns out there is not one person, right? So take New York. You have the city council, you have the mayor, you have different parties. So you have real estate developers, you have hotels. So you end up having enormous number of stakeholders. And here's the other thing. All the stakeholders change every few years because people come and go out of office. So these cities are like living, breathing organisms, and you have to have many relationships with these cities, and then every few years, they might start over. So imagine doing this in 100,000 cities. So it's a lot of work.
In the next hour, more of Andrew's interview with Airbnb CEO Brian Chesky on his friendship with OpenAI CEO Sam Altman, how he stepped in when the board ousted Altman, and how he thinks AI will shape the future of travel.
Coming up, major banks did pass the Fed's stress test. We're going to talk to an analyst next. And then pollster Frank Luntz is going to tell us what strategy to expect for each candidate in tonight's debate as we head to break. Let's look at yesterday's S&P 500 winners and losers.
made affordable.
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square. I'll check the futures this morning. Some red, not too much. We'll see what happens once we get into the regular session at 9:30. But the NASDAQ's a little bit lower. Did trade higher yesterday. The Dow Jones down and the S&P back. It's Tom Lee said, 5,500. We got there.
55, yeah.
But we
A lot
haven't-
of analysts are at 55.
Now they're year-end 55. Or
Year-end
56.
55, right. Now to the stress test, the Federal Reserve announced that all major U.S. banks could endure a severe recession while continuing to lend to consumers and corporations. Joining us now, Ibrahim Poonawala, BofA Securities Senior North American Banks Analyst. Ibrahim, great to have you with us. All 31 passed, but obviously there are differences in how they passed, how well they passed. And I think people were really keyed into that yesterday when the results were released. Goldman and Wells did not look as good. Can you walk us through why and what the implications are?
Sure. So first, thanks a lot for having me. And we said this going into this, the stress tests are inherently opaque and create surprise. Last year, there was a little bit of a positive surprise across the board. As you pointed out, Goldman, Wells did not look as well. And you saw their, what's called the stress capital buffer that drives the minimum requirements, go up year over year. And I think you will see, just from a very near-term standpoint, those stocks come under pressure this morning. Is the thesis changing? No. But I think, again, it takes you back to how intertwined all things regulations and the banks are. And it impacts in terms of how equity investors think about valuing the group and thinking about the ROE outlook for the sector.
Does it underscore Wells's, for instance, higher exposure to consumer? And maybe that could be a concern for investors if you are a believer that the consumer is under pressure.
So I think the conversation that Joe and you were having earlier, it's worth reminding the hypothetical scenario.
Right.
Unemployment rate going to 10%, equity markets down 55.
It's drastic.
It is
Yes.
drastic, right? So I think it needs to be put in context of how it's hypothetical, it's opaque. But you're right. I think as we think about fundamentally, if the economy has a hard landing, what do you worry about? You worry about business loans, you worry about consumer and credit card loans. So it's a good reminder of where the loss rates could come if the economy doesn't quite have the soft landing that many are hoping for.
Do you think any of the banks will announce increased payouts as a result of this, or are they going to hold? It would be prudent for the banks to hold off until Basel III is finalized, since there's some rumblings that it could be less onerous.
So yes, and I think there's uncertainty whether we receive any clarity before the elections or not on Basel III and which route the regulators take. But we do think the one name that sticks out in terms of the big bank, Citigroup, they saw some relief, and I think that's a management team that is keen on increasing sort of buybacks. I think investors would like to see that. We expect Citi to react positively to last night's results.
How about JP Morgan? JP Morgan's already had a large payout, but Jamie Dimon has said our capital cup runneth over. I mean, or should we expect more from JPM?
So I think if you think about JPM, they have, give or take, about $50 billion of excess capital, even after the slight increase last night. And it's less about the minimum requirements, and it's more about their CEO Jamie Dimon's views around the macro. Things could get worse, and having some dry powder for those scenarios relative to the stock trading north of 2 times tangible book, all-time highs. So I think it's a function of just management's view around the outlook and their own valuation, as opposed to having the wherewithal to buy back stock.
As time goes on, are you less and less worried about a hard landing in commercial real estate? Have the fears sort of abated, or the larger banks don't have as much exposure, but the regionals still do?
It's a great question, and again, to us, there's a lot of headlines around CRE over the last year. The CRE office, which is a unique sort of stress point in and of itself, and there's all other things CRE. I worry about all other things in CRE if we get into a stagflation. Employment rolls over, but inflation is sticky. Then you get the worst of folks can't afford rents, but cost of borrowing is still high for these landlords. So you could get there, and that's what, every month we move without the Fed having to cut rates, you worry about that scenario, less about the back half of the year, but into 2025.
So it is an issue still.
So it's an issue, and I think that's why you see regional banks react negatively to higher for longer rates, because they are economically sensitive, and the stagflation scenario could create some pain points next year.
Ibrahim, thanks so much for coming by. I appreciate it.
Thanks for having me.
Coming up, showdown in Atlanta. We're going to talk debate strategy with pollster Frank Luntz straight ahead as we head to break. Here's a look at the major currencies around the world. Squawk Box will be right back. Joining us now with what to expect from tonight's presidential debate, Frank Luntz, FIL pollster, political strategist. You haven't talked to a focus group about this. This is going to be just your musings, is it not, Frank, about what to expect? And it's going to be, multifaceted. So many different things to try to anticipate or predict. Let's start with the format. It doesn't even seem like a debate. How's that going to work? Where mics are cut off, no audience. It's almost like someone gets asked a question, they get to finish it, and then the next guy gets asked a question, and maybe he can respond to the previous one. Or how do you see it playing out?
Well, the mics are actually close enough from where they're standing that even if you cut off a microphone, you'll still be able to hear President Trump if he disagrees with Joe Biden and vice versa. But in preparing for this, I've got something very specific for both candidates. Number one, they need to have 3 rhetorical questions that there is simply no answer, such as Ronald Reagan. Are you better off today than you were 4 years ago? Do you feel safer and more secure today? Is this a stronger country today? In all 3 cases, the answer was no, and that was the end of Jimmy Carter. So start with 3 rhetorical questions. Second, you have to have 3 unassailable successes. They both were president. You compare inflation, that's Donald Trump's success. You compare investment in chips and technology, that's Joe Biden's success. You have to have 3. 1 is random, 2 is a trend, 3 is proof. Next, and there are 4 in total. Next are the 3 key priorities. Nothing matters more than affordability. Which candidate is going to make your day-to-day life more livable? Healthcare, housing, food, fuel, that's number 1. The second issue, immigration. Who's going to fix the border? And by the way, that's another clear advantage for Donald Trump over Joe Biden is the border situation. Now, for Biden, he's going to talk about women's health. He's going to talk about the abortion issue. But in the end, you focus on 3 key priorities for the future. And finally, 1 audacious mission, whether it's to cure cancer, send a human being to Mars, something that gets people to dream. Those are the 4 key aspects that make a difference in this debate.
What about the moderators? Will stories be written about that tomorrow? Will stories be? Yeah, and then
By the way, the moderators, the Trump people are going to beat up on the moderators because that's what they do. The Biden people are going to beat up on the moderators because that's what they do. The fact is, it's a thankless job. It's Chris Wallace, I'm sure, regrets ever doing it in 2020. Everyone likes to beat up on the moderator. Here's the rule, Joe. The campaign that does the most yelling at the moderator is the campaign that knows it lost. If you believe that you appealed to voters, that you were successful in your messaging, the moderator doesn't matter. If you believe that you failed, you're going to blame the moderator for your failure.
we were, I guess I don't need to share everything we were talking about. Usually I do.
Sounds like you're on that road, Joe.
I mean, we are going to look at the mental acuity of both candidates, Frank. And, you know, people that think, this is what I said to Melissa, people that think Trump is showing signs of dementia, they thought Trump was demented when he was 30. They thought he was demented when he was 40. They thought he was demented when he was 50. They thought he was demented when... They just think he's demented because they have TDS or whatever. He's still the same demented Donald Trump. I mean, I've known him a long time. He's still... I don't see him really missing a step. I cannot say the same for President Biden.
Well, and that's I'm not going to take the bait, but that's a really good point, which is that voters are going to be turning in. I think Joe Biden's got more to prove. And I'm not taking Joe Biden's side.
Can he do it? Is he up to... I mean, what... You know, if it's not... The State of the Union, Frank, was a teleprompter. So being able to read a teleprompter with, you know, with... energy and vigor is one thing. Remembering facts, dates, names, I mean, maybe for 7 days he's been just saying it over and over and over again, and, you know, he could go play Hamlet or something because he's memorized actual lines for a play or something.
Hey, Ed, you're really amusing this morning, but I want to make a serious point.
Okay.
The expectations for Joe Biden are much lower than Donald Trump. The assumption is that Trump will just hammer and hammer and hammer. This is what Trump has done. His campaign made a big mistake. Month after month, they criticized Biden's inability to serve as president. So here's the deal. He went through this back in 2000 with Al Gore and George W. Bush. When Bush took the stage and was able to complete really complicated thoughts and had policies, he so exceeded the expectations that Gore had set for him that Bush was the winner. The same thing in 2024. If Joe Biden comes out and has a clearly defined game plan, clearly defined priorities, clearly defined success stories, then the story is going to be that Joe Biden exceeded expectations and that he won the debate.
Right. Well, the expectations are low for a reason. So, and we'll see if it's like we're asked to, you know, don't believe your eyes. But what else are they going to tell you? At this point, because he's the nominee.
Actually, it's believing our ears, and I think we're going to see each other tomorrow, and you're going to get a chance to see. We found, it's really tough now, 15 undecided voters only from the swing states to have them watch the debate. These are people who actually don't like Trump, don't like Biden, don't like Robert Kennedy, and they're going to vote for the least worst individual, which is kind of sad for American democracy. But I'm going to be able to show you which clips, which statements, which sound bites made the biggest difference. I will tell you that I'm more interested in the opening 30 seconds for each candidate and the closing 30 seconds than I am anything else in the entire debate, because the opening and closing will make the difference in how we make up our minds.
Okay, Frank Lunch, we'll look forward to seeing that Friday, I guess. See you later.
Yeah.
Thanks.
Thanks.
Is that tomorrow? Yeah, it's after
Tomorrow's
Thursday.
Friday, today's Thursday.
Did I share everything we talked about? Kind of. Not
No.
really. Some of it.
Talk about a lot of things.
We did.
Coming up, AI-generated Al Michaels will narrate the Olympics next month. We have the details after the break.
.com.
Let's talk about the Olympics. Our parent company, NBC Universal, is using now the AI-generated voice of legendary broadcaster Al Michaels to narrate a customized daily highlight reel of Olympic events for Peacock subscribers. Peacock's program has been trained from Michaels' NBC clips to formulate coherent, realistic-sounding sentences. Michaels granted approval for the use of his voice, and subscribers who want the daily highlight reel can select the Olympic events that interest them most and the types of highlights that they want to see. Peacock's AI will will work each evening to generate a custom package using Al Michaels' recreated voice, which will narrate the events. He gave his go-ahead, obviously. He's watched it. He was absolutely flabbergasted at what he saw. He's not criticizing it. I think he's a little bit shocked that, wow, you really don't need me because.
Right.
But just to talk about this man. I mean, he didn't win a bunch of NBA championships, and he didn't win 7 Super Bowls or whatever. But he is the GOAT of this, and he's got the most of what he does. Got the most famous line ever. Some people think it was, "Do you believe in miracles?" I think it was. I think it was this. I think we have it.
Live from the most powerful city in the world, New York, this is Squawk Box.
Now that's not AI generated.
That's
real.
Al Michaels.
Why we don't use it anymore? Maybe we can. I don't know why. But he's a viewer. He's a friend. He's like an incredible guy. So, I mean, he's so good that. So he does 11. He does 11. I think it was 11 like NFL games. I think that's what he's done to now. You know what his salary was? 11 million, I think. So it's like he shows up, got to go to a football game. Mm-hmm. I'm going to do the play-by-play,
right.
And someone's going to write me a check for $1 million for what I do. That whatever it is.
That good.
Yeah, he's that amazing.
Yeah.
So that's my 2 cents on Al Michaels. Might be watching right now. I don't know where he is. Actually, I saw him not too long ago in Los Angeles with his lovely wife. But love this guy. And he's 79 too. So all you people, you think I'm going somewhere?
It's always AI Joe too.
Yeah, there's always AI Joe. Not gonna do it. Gotta come together, not stay apart. Coming up, a closer look at the pharma stocks poised to benefit from the surge in the popularity of weight loss drugs. That's coming up next.
CNBC.
Shares of Eli Lilly trading near an all-time high, soaring more than 90% over the last year. Joining us now, Louise Chen, Cantor Fitzgerald analyst. Louise, great to have you with us.
Thank you. Good morning.
Certainly a huge rise in Lilly, in Novo, and the only criticism that one might have is that maybe people are getting too ahead of themselves in terms of pricing into the stock what future demand is. How do you address that as an analyst in terms of, all the future applications? They just released, the positive sleep apnea data. There's so many other indications for the drug which are still being studied that perhaps we're too far ahead of ourselves.
I don't think people are too far ahead of themselves that own Lilly. I actually think Lilly and Novo are very interesting stocks. We do have buy ratings on them. And I think these downstream applications can be really huge for the company and be blockbuster products as well. And the one thing for these products to remember is they might likely get better reimbursement than obesity.
Right, exactly. I mean, an insurer might be more likely to reimburse for sleep apnea or for cardiac events, right, as opposed to obesity, and same with Medicare. But in terms of the competition that's coming online for, future better GLP-1s, future better weight loss drugs in general, there's Structure, there's Zealand, there's so many other smaller players. How do you assess what the competition is out there?
Yeah, so I get asked that a lot. I think for these smaller companies, the thing that you have to keep in mind is we don't have phase 3 data for a lot of these products yet. And in order to get into phase 3 studies, they have to have the commercial scale in order to make that product. So I think that might be one stumbling block they have without a partner. And then secondly, it's not clear that the data are overwhelmingly better than what Lilly and Novo have shown. So I think that remains to be determined. There are a lot of obviously other mechanisms of action that are happening as well, but I feel that some of those are just trying to get into the market a little bit later in the game with something a little bit differentiated.
Novo just announced a $4 billion investment into new manufacturing. How do you sort of model out what they will need in manufacturing? Are they trying to meet the need that exists today with a manufacturing plant that will open up in a couple of years? And will their manufacturing needs change as they explore new formats for the drug?
Yeah, so I think Lilly and Novo are really ahead of the game on manufacturing, and they've been doing it for a few years now. It will probably take a few more years, in my view, in order to get up to scale to meet demand. That being said, I do think that they have very good manufacturing and they're going to be very successful from that perspective. That's something that smaller players really have to contend with. They enter the market. Our estimate is that it takes tens of billions of dollars to build an incretin manufacturing network and probably 5 years from the time you break ground to get up to capacity and scale.
Right. Louise, got to leave it there. Thanks so much for joining us.
It's just after 7 a.m. on the East Coast, and you're watching Squawk Box on CNBC. I'm Joe Kernan, along with Melissa Lee. We don't have a countdown clock. 12 hours, if I got that right.
For what?
Among today's top stories, Amazon plans to launch, there's this thing happening tonight.
Okay.
9 o'clock.
I know, the debate. We've been talking about it a lot. Of course I know what it is.
You were thinking other things. You were thinking about that 10 a.m. thing. See, if you had written down
in the Squawk
on the Squawk Planner, you'd know what I was. Okay. Amazon plans to launch a new discount store aimed at taking on Chinese retail giants Temu and Shein, not to be confused with Henry Schein, the dental place, which is what I used to think. Allowing Chinese sellers to ship directly to U.S. consumers. The storefront, which was unveiled at an invite-only conference in China yesterday, mine's in the mail, I guess, will feature a range of unbranded items, many priced under $20 each. State Street Global Advisors plans to launch its first cryptocurrency fund in partnership with Galaxy Digital. State Street is the third largest ETF issuer in the U.S., overseeing $4.3 billion in assets. And Google has added new mobile shortcuts to its Chrome Action feature that will let you call, read reviews for, or get directions to a restaurant or other business right from the address bar. Google Actions, which was rolled out in 2020, lets you quickly perform tasks by typing in specific queries such as edit passwords or translate this page.
Walgreens just out with its quarterly numbers. Drugstore operator reported a adjusted profit of 63 cents a share. That is 5 cents below consensus estimates. Although revenue did beat forecasts, Walgreens is also lowering full-year guidance, now seeing fiscal 2024 profit at $2.80 to $2.95 compared to prior guidance of $3.20 to $3.35. CEO Tim Wentworth told CNBC that expectations of stronger consumer demand have not played out and that pharmacy industry trends continue to be challenging. That stock is down 4% immediately on this news. Let's take a check on the futures right now and see how we're doing. We're looking at a lower open across the board. S&P down by about 7, Dow down by about 58, and NASDAQ looking to be lower by 38. Let's get to Frank Holland now with a look at this morning's pre-market movers. Morning, Frank.
Morning, Melissa. Morning, Joe. Good to see both of you. Let's start off with an earnings move. We're taking a look at shares of Micron. They're under pressure this morning. You see, down more than 5.5%, despite the company reporting better than expected quarterly results. You can see here on the chart. Investors, they're instead focusing on its sales forecast that really failed to beat some lofty expectations. While Micron is getting a boost from the AI computing boom, demand remains sluggish in its PC and smartphone businesses. Micron is the largest memory chip maker here in the U.S. And then coming up tonight on Mad Money, CEO Sanjay Mehrotra is going to talk to our Jim Cramer. Imagine going to talk about the quarter and also the recent chip pullback. All right, another earnings mover. We're talking Levi Strauss, also under pressure this morning. Shares down big, down more than 15%. The second quarter sales of the jean maker just falling short of analyst estimates despite a surge in denim popularity. The company says consumers have been, quote, generally cautious and are not spending a lot on discretionary items. Along with raising its dividend for the first time in 6 quarters, Levi's is also working on its direct-to-consumer website while reducing reliance on department stores. And now we're looking ahead to Nike. Nike reports its results after the close. You can see right here, shares off to a very tough start to 2024, falling. They're the blue line, almost as much as the S&P has risen year to date, so big divergence there. A consumer spending slowdown and rising competition weighing on the stock. Estimates have revenue coming in flat year over year with profit increasing by 26%. Morgan Stanley says it expects the sportswear giant to actually guide below the street expectation, largely due to a lack of clarity in the company's innovation pipeline. UBS estimates it takes anywhere from 18 to 24 months for Nike to bring new products to market. We had a Nike investor on Worldwide Exchange this morning who said he's also looking for a lot more clarity when it comes to new products to help drive growth in Nike as it faces rising competition from companies like Hoka, or products I should say like Hoka and On Running. Joe, you ever try one of these, Hoka On Running? I see you more as like a New Balance 806 kind of guy. You ever tried it?
Nope, I got Hokas. I have Hokas.
Really?
They're very light. They're very light. I got the tan ones.
Do they have like a 2-inch sole?
No, the heel goes
Melissa,
up.
you're reading my mind. I see him more as like a New Balance
Mine don't have
806,
those. Yeah.
extra wide kind of a guy. I mean, am I off base, Melissa? It kind of feels like that's where Joe's in. That's the zone.
Totally. Yeah. No, I just need light, and I don't even know if I guess if you use them for 6 months, does the foam need to be replaced? Is that true? It's like planned obsolescence. Do you know? I mean, my knees do hurt in old shoes.
Joe, I see you as more of like a Velcro sneaker kind of guy. Am I off? That's not you?
I'm not sure where you're headed with that, but yeah, I think you're off, Frank. Nice try. I don't. Send me an explainer. Maybe I'm like Joe Biden in the morning. I don't understand what you're talking about. Coming up, former White House Chief of Staff Bill Daley joins us to talk about what investors should be listening for in tonight's presidential debate. Plus Andrew's interview with Airbnb CEO Brian Chesky from the Aspen Ideas Festival, his take on the AI boom, and much more. Squawk Box will be right back.
Dave.
Off my chest already, Bill. Both President Biden and former President Trump are courting CEOs and executives as the race for president heats up. Joining us now to discuss what Wall Street is looking to hear from both candidates at tonight's debate. Bill Daley served as Chief of Staff to former President Obama and Commerce Secretary under former President Bill Clinton. He was a Democrat. That's so weird, isn't it? Are you sure?
It's a long time ago.
Who's moved where? We've had you online. You're a Citigroup guy, right? Or what bank?
No, I was with Wells.
Wells. Okay, yeah. And so you're a bankster. You're a private sector guy. I don't mean banks. I mean you've worked with the private sector, so you're not necessarily in lockstep with maybe a lot of things that the current fringe of the left is in lockstep with.
Absolutely.
Okay.
Absolutely.
So we
never have it.
Right, and so I like having you on for that reason. But to talk about tonight, I know you think Trump has issues, obviously, and people that vote for him obviously have issues. But you concede that to vote for Biden, you have to overlook some things as well at this point too.
Yeah, but look, it's obvious based upon the polling. People aren't real happy with either one.
Right.
To be honest. And the race has been close. If you look at, even though President Trump has been in the lead, it's really in each of these states within the margin of error.
Right.
So big surprise. We have a close, divided nation. It's going to go down to the wire as it did 4 years ago. And this debate will be important.
It will be.
Because everyone has expectations. One is whether President Biden can come out and perform. And two, whether President Trump goes back to sort of the style he had in the debate 4 years ago and gets everybody all riled up. And I think they're both fighting to counter those narratives.
Right. And I think at this point, I'm not convinced that President Biden is going to keep saying convicted 34 times by a jury of his peers.
I doubt it.
I don't think that's a smart move. And you've seen, who was it recently? Guy I'm starting to like, again, former Governor Cuomo was on saying, look, would have never happened. This case would have never, ever been brought by anyone against anyone other than Donald Trump. I mean, that, as far as the way the justice system was used, and maybe Biden didn't orchestrate it, although maybe he did, because he did have the guy that was second in charge. One of the Justice Department guys did come and help Alvin Bragg. But the way that was done, he raised $140 million after that, because people in this country don't like something like that.
There's no doubt that it, in a negative way, really reverberated it against the prosecutor. The president got sympathy, President Trump raised a ton of money off of it, and it energized his base because they thought there was a certain unfairness to pick out one guy. Now, nobody really disputed the facts of the case, but it was just whether or not this was a special prosecution for one person.
What do you mean? What were the facts of the case?
Well,
the facts of the case were, it's not illegal to pay off to do an NDA. It's not. What they got him on was that it was classified as an expense instead of as a campaign expense, and that's a misdemeanor, and the statute of limitations was already over.
But you did have a jury. You can argue whether a jury was fair or whether blah 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 in New York. Anybody can be fair on Donald Trump, all that stuff. But the fact is, the case is over. In many ways, it helped.
Be reversed on
it helped Donald Trump.
Right. So, what does Biden run on? You know what I would run on? Infrastructure. I think I wouldn't run on the CHIPS Act because I'm not convinced. We give all this money to Intel. Is Intel? Do we know which winners and losers to pick?
Biden should run on infrastructure.
He should run on getting that through.
Yes, I agree.
Why are you looking at me like I'm crazy?
In each part of the all over the country, you're seeing projects being built off of that, and he should highlight those. Whether you have a bridge being built or a highway being redone, those are the things that not only create jobs, they create positives in an economy around the nation, and he should definitely run on it. To me, that's probably the most important thing. That and the Inflation Reduction Act.
You could even say, okay, after COVID and we spent a lot of money, and that maybe we should have, maybe not. We spent $2 trillion after that. Maybe it's worth it because maybe there was some inflation that people are still feeling, but maybe we'll get something out of that at least.
Yeah, overall the economy is in good shape. I mean, you talk about it every day on this.
It is good. Okay.
But for a certain group of people, obviously those who are stressed.
Anybody who gets a paycheck is
not
making less.
anybody. Not anybody.
That's why
Not
Anybody making a paycheck is making less than they made when Biden came into office.
Those who were stressed before COVID are stressed once again in a very solid
real
way.
wages are down 3.5%. They were up 9% under Trump.
That's what would be debated, whether or not people feel good about it.
How can they feel good if they? How can they feel good if they have less money than they had 4 years ago?
Not everybody does. We don't. You don't.
No.
A lot of people in the country are doing
Stock
much better
market
than they
performance
did.
was great under Trump too, though, as you know.
But maybe not as good. The unemployment's been low and tremendously low for the last 2 years. So look at this is a close election. Debate tonight will be. It'll be interesting to see how many people actually watch. We've never had a debate in June, whether people really focus, and then how many people stay with the debate. And then the spin tomorrow will be whether or not either one of them met the expectations, which is with social media today. It will start at about 9:01 tonight.
All right, brass tacks. So you think that I mean, he's not going to have a teleprompter, President Biden.
No.
You think he can bring it and won't have memory problems and won't
there's
really?
no question in my mind. Yeah.
And you think
Yeah.
four or 5 years from now, with world leaders, you think he can do the job?
Well,
of
I don't know,
president?
4 or 5 years.
Well, that's what we're talking about. Or Kamala Harris.
Can you
Take
guarantee
your
me
pick.
right now Donald Trump will be alive 4 years from now, or 4 months from now, or 4 days from now, or
we
4
don't know.
hours from now?
Yeah, but
No.
you told me not to believe my eyes. And then the other thing with Trump, how's he going to act tonight? Is he going to be the Donald Trump of the first debate?
Well,
Last
remember,
time
he
with
had
Biden?
COVID the first debate. So he acted, in my opinion, he didn't get tested that night, and he had COVID, and they knew he had COVID, and I think that's
Well,
what
he was
added.
defensive or something, you mean? Or
That's why I think he acted sort of a little more aggressively than he would have as he did against Hillary 4 years before.
Trump with COVID is that animated. Biden without COVID looks like he does. So that's an easy choice too, right?
Yeah, my guess is that Trump will look a lot better than he did 4 years ago.
You think he can? You think he can not take the bait?
Yeah, I think
January
I think
6th.
yes. I think he will be. I will be surprised if he takes the bait. I think he will spend a lot of time going after the moderators. You talked about that with Frank Luntz. I think he's got a belief amongst his base and his supporters that CNN is biased against him.
Well, you've never seen any sign of that at CNN, have you, Bill?
All networks are unbiased. Everybody's unbiased, right?
Unbiased?
Unbiased.
On this
I know
show.
everybody is. Yeah, I know. So, but I think he'll spend a lot of time, and especially his allies, starting with the first bit of the debate to the end, going after CNN.
Well, as I said, thank you for coming on.
Yep.
It wasn't so bad, was it?
Never is bad. It's always fun.
It's good. Thanks.
Up next, Andrew's interview with Brian Chesky of Airbnb from the Aspen Ideas Festival, and later from Colorado, Senator Joe Manchin and daughter Heather Manchin, who is the former CEO of Mylan and now the founder and CEO of Americans Together. Squawk Box, be right back.
Time now for today's Aflac trivia question. Meaning to give something that was once received as a gift, the term regift was coined in what sitcom? The answer when Squawk Box returns. Now the answer to today's Aflac trivia question. Meaning to give something that was once received as a gift, the term regift was coined in what sitcom? The answer? Seinfeld.
Andrew's at the Aspen Ideas Festival this week. He sat down with Airbnb co-founder and CEO Brian Chesky yesterday afternoon.
You came out here in part to sit in a conversation with one of your great friends, Sam Altman, from OpenAI. And one of the things I thought was fascinating was you went pretty deep about what took place during what was a dark period for him.
Yeah.
And the work that you were doing behind the scenes to try to help him.
Yeah.
What was really, for you, though, the lesson of the whole thing when you were in it?
I think that there's an old saying, the absence of information is filled with dirt. And I think that everyone was assuming the worst of everyone else. And I think when you really unpeel it, I think people had much better intentions. And I think there was just a lot of fear. Things were going so quickly. And as I uncovered what was going on, I realized there was mostly a lot of misunderstandings. A lot of they didn't have full information, so people would assume the worst. And the other thing I learned was you learn a lot about people in a crisis. And they revealed themselves. And some people, I think, weren't the best. But I actually, and I say this as Sam's friend, but I also say this objectively, I was surprised in a good way at how he was not in self-preservation mode. When people are attacked, they typically go to themselves. And Sam was focused not on himself, but OpenAI. And that made me want to fight for him.
What was the worst moment of the whole thing? Do you remember?
The worst moment was when we thought that, okay, this is the worst moment. The worst moment was, it was probably 48 hours in. The board had led us to believe that he was going to get reinstated. And right before midnight, we get information that Emmett Shear is now the CEO, in which case it just seemed like the page had turned. And Sam and Greg said, we'll go to the Microsoft. And I said, you got to fight. This is crazy. You got to fight. And he said, we want to do what's best for OpenAI. We want to do what's best for the employees. And if what's best is for them to turn the page, they'll turn the page. And I thought that was the end of it. The miraculous thing was, it turns out Emmett Shear is also a friend of mine.
Right.
And that opened a new line of communication. And there were many other things that happened, but I think that allowed us just to have an open dialogue.
So how involved are you now with OpenAI?
I'm involved to the extent that Sam needs advice, and I try to help him in areas, anything that's not core technology. If he has a question, I'm involved. Right. So what are those things? How to product design, maybe marketing, advertising, communications, that kind of stuff. Things that are maybe above the layer of the stack of technology.
Right.
What do you do with the technology?
How much do you think about the safety issues and also all the headlines that we keep reading about this debate that's clearly happening internally at that company?
I definitely think about it, but I'm, to be clear, not involved in the company officially, so I am not inside the inner mechanisms, but I'm mostly focusing on giving him advice on how do you manage an organization? How do you make sure you instill trust? How much transparency is the right amount versus too much transparency, right? There's a lot of considerations. How do you tell a story to the public? How do you bring society along on what is no doubt a technological revolution? And, we should be transparent about things that could go wrong, but we also got to be careful about a lot of overly existential pontification when we don't really know what's going to happen, and to also tell a story about these are the practical 5 or 10 things this technology can do for our lives right now. Right. So it's a lot of judgment.
You went through your own fire, baptism by fire. Was there a moment that you look back on that you think is either a parallel or something you learned from that?
The thing I learned is you learn a lot. I said you learn a lot about people in a crisis, but the other thing I learned is you only survive because certain people have your back and believe in you. And when the crisis happened, my co-founders, my board, totally had my back. If they didn't have my back, I might not have been as decisive. And if I wasn't as decisive, we probably wouldn't have come out of it the way we did. And so that lesson for me is, when I saw it going, Sam said people need to have his back. And his company had his back, but people didn't quite know how to support him because no one was saying anything. And I just said, we're going to lean in. We have your back.
It was remarkable, by the way, how much the employees, for the most part, supported him.
I think that tells you something. I think that tells you that, that if there's only one piece of data you should know, it's that the employees have the most information. And in that moment, I think they rose up and they said,
this is what we want to do. We'd rather be with Sam somewhere else than with OpenAI without him.
Let's talk about Airbnb, but let's talk about it in the context of AI. You can't go anywhere here without talking about AI.
Yeah.
When are we going to see AI built in a real way into applications in Airbnb, but also applications across the board?
It's 100% great question. Over the next 2 years. So I think like one of the observations I've made is ChatGPT came out basically like 18, 19 months ago. And I think we all had this feeling like there's a revolution and it's gonna happen. And funny enough, you pick up your phone, look at every app on your home screen, and they're almost exactly the same. So AI hasn't actually changed our daily life. It's captured imagination, a little bit of our fear, but hasn't changed our app. It turns out it's taken a little bit longer, maybe not exactly self-driving cars, but that last 10% is where all the gains are, right? You can, if you get 90% of the task done, but it's wrong, that last 10%, it's actually terrible. So I think next year you're gonna see a bit of step forward, and I think within 2026, you'll see a giant leap. And I think apps across the board, 2 to 3 years from now, 2026, 2027, they're gonna look really different.
And is it all going to be one big chatbot, or do you, as someone who's into design, by the way, or is it going to be something else?
It'll be something else. I mean, I'll just preface this by saying, you know, I have a unique seat. I went to the Rhode Island School of Design. I'm one of the only designers running a giant tech company, S&P 500. Like, I don't think there's another one of us. So I'm a bit of an anomaly. And I think a lot about the user interface. And one of the things that I've thought about, and I've had this conversation with many great designers, including Johnny Ive, is in 1984, the graphical user interface was basically popularized. It came from Xerox PARC. It was the mouse, the point and click, Windows. 2007, the multi-touch, what we know as the iPhone and mobile, was popularized. So what's the interface for the AI age? I don't think it's goggles, and I don't think it's a chatbot. I think a chatbot is very cumbersome for things that aren't chat. Like if you want to check the weather, you want to chat the weather? No. If you want to have a calculator, do you want to like input through a sentence? Do you want to just touch the numbers? So every application is going to want a different interface. Without being able to tell you what it is, I think AI interface will be three-dimensional. They're going to not flat design. It's going to be like the three-dimensional space. You're going to be able to walk into space on screen. So it's going to be more colorful, more three-dimensional. It's going to be much more personal.
If you were coming to Aspen, or if I was coming to Aspen, you don't think that in the future you just say, got the invitation to come to the Aspen Ideas Festival, let's go. And then magically, it would all just happen.
Yeah, so this is a great question that somebody talked about. Is voice the interface of the AI age? And we believe that voice is a part of the interface of AI age. There's a lot of limitations of voice. If you're in public, you probably don't want to talk out loud. You know, you're like, there's some privacy concerns. It's also like voice is if you get an input back, like I want to find me a shirt to wear. Like how does the AI describe the shirt to you? Is words the best way to describe the shirt? So it turns out that it's probably multimodal. It's probably voice, it's visual, it's a much more multimodal application than just voice.
How far do you think we are from literally taking the invitation, forwarding it to Airbnb, and it all just magically happening?
A couple of years.
You're right. Melissa's right. Walgreens is something we probably should talk about. Dow it is being affected somewhat. How much?
Sure.
Walgreens had a new low.
It's down 9%.
About 9%. If you say you're shuttering a
significant share of its stores in the
more
United
than
States.
half of its 8,600 stores. Is that what they mean? More than half?
Significant share would imply, I would think it's more than half.
Walgreens to shutter a significant share of its roughly 8,600 stores. Also cut its stake in a primary care provider, but also missed on profits, lowered guidance.
Yes, there was nothing good out of this report.
I can't do it all, obviously. There are a lot.
In terms of his trips to the drugstore, we're talking, he's saying 3 times a week, I go zero. I order everything.
How old are you? You're like 30.
Old.
You're like 30.
But not as old as you.
No, you're not.
But everybody orders
Stuff
things
happens.
online. So the front of the store
is that what it
business
is? But online, we just read in the journal how much more expensive it is to do it through the mail. That was the story yesterday, right?
Well, it's still being done though, even if it's more expensive.
People don't. I just can't imagine not having a neighborhood Walgreens. Can you though?
Well, the Boots part of the business which they acquired, that was an acquisition that never worked out well.
Greeting cards. baby powder, deodorant, toothpaste.
What kind of margin do you think there is on deodorant?
Front of the store
Front of
stuff
the
is
store.
good. It's not good. I guess it's not anymore with Walmart and all those other.
Right. Think of all the other
Target.
places you can get these things from. Down 12% right now.
That's
WBA.
unbelievable. That's a real. So I need more details on what a significant share means.
I'm sure the conference call will be interesting.
Yep. All right, we're gonna have much more from the Aspen Ideas Festival in the next hour. Coming up next, a check on the markets and some of this morning's movers. Maybe we'll revisit Walgreens boots. Squawk Box, turn right back.
Welcome back to Squawk Box. We are seeing a little bit of pressure here on futures pre-market. S&P looking to be down by 6, Dow looking to lose 65 at the open, NASDAQ down by about 34. We are watching shares of Walgreens plummeting pre-market after posting its quarterly results. The drugstore operator reported adjusted profit 63 cents a share, 5 cents below, although revenue did beat forecast. Walgreens is right now down by 14.5%. It's lowering its guidance for the year. It is closing a quote-unquote significant share of its U.S. stores, 8,600 stores in total. It is trying to, as it says, basically align its U.S. pharmacy and healthcare organizations. CEO Tim Wentworth telling CBC that expectations of a stronger consumer demand of consumers have not played out. Pharmacy industry trends continue to be challenging. So there's a lot of things going on with this stock. It's got a lot of, it mentioned also a change in marketplace dynamics.
Yeah, sure.
Which I think,
it's true, but this is not good, and it, my memory isn't what it used because we made the joke. Walgreens booted from the Dow, so it's not in the Dow. And the other company that we said passed $2 trillion in market cap replaced Walgreens boots, Amazon, in the Dow. So, we're bringing it together. Yeah, that's, and you know what? It was February when Amazon went in. that looks prescient at this point. You don't need this. You don't need this. So what's the market cap now on this? I haven't looked. Although that is a new low market cap all the way down. Oh my, is that right? Did you see?
I have $13 billion.
Oh God. Yeah.
$13 billion.
That's not a Dow component.
Watch CVS shares, by the way, are also sliding in sympathy, down by 2.6%. Clearly not as bad as a 16% decline. But all the things that Walgreens is talking, those are concerns for this industry. So it really underscores the dynamic of the weaker consumer, of all the other competitive forces in terms of online, in terms of reimbursements, everything, all rolled up in one.
Sort of, also, it's a different world. I mean, compared to where in the old, remember Sears and Kmart and Woolworth, and that used to be a staple of America. And Walgreens, kind of the same thing. And it's, the Amazons of the world are having a huge impact. And you either keep up like Walmart and Target, or you don't with this. Oh, this is you. They're going to talk about Trump DJT. Something going on with that today. It's up or something. Back. Oh my God, that's volatile. It's only back to $40. It was just at 26, was it? DJT.
Couple weeks ago.
Yeah. Last week, I think.
Coming up, President Biden and former President Donald Trump set to square off in Atlanta. We'll talk about the strategy of each candidate next, and later in the show, New Hampshire Governor Chris Sununu will be our guest. Squawk Box will be right back. What's so shocking? I see the same prompter as you do, Joe.
I know you do. Well,
it's
a lot less than 24 hours. Yeah, it's less than.
Or tonight.
It's tonight.
The first
presidential debate of the 20. It's today. It's going to happen tonight. So you woke up on a Thursday. It's going to be on Thursday. The Bipartisan Commission for a Responsible Federal Budget is releasing a new and perhaps surprising analysis of the fiscal records of President Biden and Trump during their first term in office. Eamon Javers joins us now with more. What's going on, Eamon?
Yeah, good morning, Joe. In a new report first obtained by CNBC this morning, the Committee for a Responsible Federal Budget says Donald Trump presided over spending increase of $4.9 trillion in his first term, while President Biden, by comparison, has overseen $3.8 trillion in spending increases in his first 3 years and 5 months in office. Now, how did the committee arrive at these numbers? Well, they found that President Trump approved $5.3 trillion of what they call gross primary or non-interest spending increases over 10 years, 2.5 trillion of that non-COVID related. Now, that was partially offset by roughly $500 billion of primary spending cuts. Trump net spending increase would be 2.1 trillion without COVID. For Biden, the committee found that he approved $5.7 trillion of gross primary spending increases and 3.9 trillion without COVID. But Biden also had 1.9 trillion of primary spending cuts, which offsetted the higher spending that we saw there in his term. Without COVID, Biden's spending increase would be 2.0 trillion, the committee says. Bottom line, the committee says, given Trump's massive tax cuts, his record on the total deficit is much worse than Biden's. Trump added 8.4 trillion to the 10-year debt, as opposed to Biden's addition of $4.3 trillion. In either case, guys, the committee not necessarily happy with either number, but Trump's number significantly higher than Biden's number when it comes to debt and deficit in the first term. We'll see what happens if either man gets a second term. Back over to you guys.
So, yeah, I saw that people kicking that around yesterday, and it's a little fuzzy math going on there. COVID skewed everything for both presidents, as we know.
Yeah,
Eamon, and when
if you look at the non-COVID numbers, Joe, it's much
they're
closer,
the same
right?
almost.
Trump is still higher, but it's much closer. And then the question is, who gets the political credit?
One's 3 years and one's 4 years too.
3 years and some months and 4 years, right? Exactly.
Yeah, exactly.
And then the other question is, who gets the political credit and/or blame, right? I mean, Biden, you remember, was forced by Republicans on Capitol Hill to make some of those spending cuts that make his total here look pretty good, right?
McCarthy,
So was he forced to do that? Did he know he was going to do that and give it up in debate to let the other side have a win? You know, you can never really parse those things forever, but that's what the record shows.
It's amazing that, and both sides can, the way that you can frame it, Eamon, there's no wonder why the public, for example, Biden talks about cutting the deficit, and that's really because spending less than previous years. That's because we were spending like 4 or 5 trillion on COVID, and if you spend, if you have a deficit of 2 trillion after 4 or 5 trillion, you've cut it, but it's still well above where a normal deficit would have been in a normal economy.
And you're still measuring the rate. And you're still measuring the rate that you're digging the hole, right? I mean, the deficit is a measure of how deep the hole is continuing to get.
Yeah.
And overall debt is being added to.
Jobs created. When you go,
jobs created is another.
You start at the bottom of a pandemic, and the jobs that were lost come back, and you add those as new jobs. That's not. But then you get inflation, and you talk about that. What caused the inflation? If you're gonna. If you're going to take credit for reducing the deficit because of the pandemic, then you got to own the inflation. I don't know. It's all,
I think if you look at it though, the lesson here, I think, Joe, the bottom line lesson here is that both parties, when they're in power and they control Congress and the White House, don't cut spending, right? I mean, you've talked to a lot of people, Mick Mulvaney particularly, who was OMB director and then chief of staff under Trump. He will tell you that Republicans, when they're in power, there's just no political will to cut spending because that hurts. That's a political cost. So they just don't do it. They'll talk about it out of power and then they won't do it in power. You see the same thing on the Democratic side, except Democrats rhetorically don't talk about cutting spending as much. They talk about the deficit being a problem, et cetera. But when they're in power, they don't do it because it's a political cost.
You can brag about the regulatory environment. Republicans can, I think. Anyway, Eamon, thank you.
I mean, that's another subject, but yeah.
Yeah, no, all right.
Joining us now and with what Americans want to hear from the candidates, former Trump White House Legislative Director Mark Short. He's also CNBC contributor and former Democratic Congressman Joe Crowley. Gentlemen, great to have you with us. Mark, I'll start off with you. You make the point that voters actually like Trump's policies, but he may be his own worst enemy. I mean, he's got to be thoughtful. He's got to stick to the message.
Right. I think the reality is that the policies of those 4 years are generally favorable. It's unfortunately the personality that I think can get in the way. And I think the question is, how does he perform tonight? I think with Joe Biden, you have an incredibly unpopular president whose policies are unpopular too. And I think if Donald Trump prosecutes the record of, frankly, cumulative, even though the inflation rate is declining, cumulative 20% plus, the highest since the Jimmy Carter administration, he can prosecute that case well. I think he can prosecute the case that the inflation crisis, but also the immigration crisis, we now have, I saw a stat the other day that there's been more known illegal crossings than the population in more than 40 states of the United States. And ultimately, Joe Biden has promised a massive tax increase on millions of Americans if he gets reelected. And so I think if Donald Trump focuses on those issues, those are certainly in the sweet spot for most voters.
Immigration and inflation, I mean, you could even make the case that the Inflation Reduction Act will increase inflation in the long run because of nearshoring. So, Joe, how does President Biden overcome that? Because when the question is asked, are you better off than you were 4 years ago, many Americans will say, I don't feel better off at all. And you can point to the results from a McDonald's or from a Target that indicate that consumers are under pressure.
Yeah, it created more jobs than any president in history of the United States, increased wages amongst working men and women across the board. We're moving in the right direction. But I think what's really interesting, though, is that Republicans consistently have said how incapable the president is, how he's too old, all these other things. And yet at the same time, they're saying he's a great debater. We have to go in here tonight expectations that Joe Biden is one of the greatest debaters ever. It's really, really interesting to watch people kind of just flummox themselves when talking about Joe Biden. Joe Biden's going to be strong. Let's remember this. We have never had a president convicted of felonies in a presidential election ever in a debate. It'll be interesting to see just what really transpires and how those issues start to come out as well.
Wages, real wages are still down from when weekly wages are still down from when Joe Biden took office. You know that, right?
What we do know, Joe, is that there's more jobs created and continue.
And we just talked about that.
Would you rather, I think you'd rather have Joe.
When you bring back jobs from a pandemic, you can't credit those as creating new jobs. But just acknowledge that real wages are still down since Biden took office, which means
I love watching you tripping over yourself just a moment ago in terms of defending then Trump and his spending and blowing out the federal deficit. You can't have it both ways, quite frankly. There's more jobs. I think the American people.
Those are 10-year numbers, and you're now. Why
you never let me finish. I love you.
If you just acknowledge that people's paychecks don't go as far as they used to when Biden took office, that's all I'm asking you to do.
We are moving in the right. Joe, we're moving in the right direction. You never let me finish. I love you, but you never let me finish. We're moving in the right direction. You too much like that's the problem.
Someday we might get back to what we were making 4 years ago.
I think that the point is, though, Joe, that the numbers show that wage growth has not kept up with the pace of inflation. And so Americans, you can present any other, supportive facts that you want about the economy, but that's what Americans feel.
And if those jobs
weren't
there,
they don't feel good about where they are. So I think the question is, how does President Biden address that? I'm not trying to, we're not trying to take sides or anything, but that is going to be one major issue, because we see that time and time again with all sorts of polls and surveys. Many Americans do not feel better off because their paycheck doesn't go as far.
We are moving in the right direction. I think that's what the president's going to be talking about tonight. We also know that he has passed the biggest jobs bill in terms of the infrastructure package. Things yet to come that the next president, and I hope it'll be Joe Biden, will take credit for.
All right, we've run out of time, but that was a great debate in and of itself, guys. Thank you.
Sorry, Mark. Would have loved to talk to you more.
Crowley. Joe.
I still miss Crowley compared to AOC. I'll tell you that much. Coming up, why a growing number of wealthy millennials are saying no thanks to the stock market and opting for what they see as more lucrative long-term investments. That story is next. We'll be right back.
Good morning.
com/men.
What?
A vast generational divide is opening up between wealthy young investors and wealthy older investors. Robert Frank joins us now with more. Now, these two wealthy younger investors, what are they? No. Are they finally making it? Some of the millennials and
well, because of the great wealth transfer and that tax change,
oh,
which
their
we're
their parents are dying. Okay.
Or giving them money. Let's put a bright spot on it. Nearly 3/4 of wealthy millennials and Gen Zers surveyed said they won't be able to get above average returns with traditional stocks and bonds. That's according to a new study from the Bank of America Private Bank. Most investors over 44 still have a lot of faith in the stock and bond portfolio, but when asked about the best opportunities for growth, the younger investors listed real estate first, crypto was second, followed by private equity. Asked the same question to older investors, and domestic stocks topped the list, with real estate and emerging market stocks right behind. Younger investors have nearly 3 times more alternatives in their portfolio compared to Xers and older investors, and they have about half the share of stocks, about 25%. Another huge difference is collectibles. The young wealthy are nearly twice as likely to collect watches, classic cars, and wine. Nearly 1/3 of them are interested in collecting sneakers. Older investors say they collect because they enjoy it and they rarely sell. Younger investors see it as part of their investing strategy. They are more likely to trade in and out of their collectibles. You can read a lot more about the great wealth transfer and where the wealthy are investing in my new newsletter. It is CNBC/Inside Wealth. The latest issue just came out 10 minutes ago, so if you sign up, click on that little flow code there, and you can sign right up. CNBC/Inside Wealth. And Joe, you mentioned, how many investors, millionaire, these are 3 million plus in investable assets that how we measure wealthy. So how many of them are? Well, because of the Tax Cuts and Jobs Act, you can now give away $27 million as a couple to your kids without triggering the estate tax. So tax-free, you can give $27 million. That could expire next year. Oh. So wealthy families have been shoving money out the door as quickly as possible to their kids. They really
didn't. You're saying, I was kidding.
No, I'm not kidding. There's a huge amount.
They really didn't make it themselves? They got it from their parents?
Well, there are some making it themselves, but what's created this vast amount of wealth among younger people, accelerating that wealth compared to other generations, is this transfer of wealth right now because of that tax change, which allows $27 million tax-free. Now that could change, but they expect $84 trillion to pass to the next generations.
Wow. 84 trillion.
84 trillion in the next 20 years. So that's why these investors matter, and that's why wealth management firms care about these different dynamics and priorities with younger investors. They're going to be a big force in the market.
Amazing.
Thank you, Robert.
Thank you.
Up next, investors getting ready for jobless claims and real GDP data. Futures ahead of the open, indicating a lower across the board. We'll be right back.
NBC.
It is, wow, it's right exactly 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Andrew Ross Sorkin. That's it. That's it, Andrew. It's just us, is it?
Just
it's
the two of us.
Is it 6 a.m.? It's 6 a.m. out there, isn't it, right now?
6 a.m. 6 a.m.
And you are at
8 a.m. in New York, 6 a.m. in Aspen.
Exactly. It's 2 hours. I remember that. And, you know, it gets confusing with daylight saving. Who does it, who doesn't? But you're at the Aspen Ideas Festival. Becky's off today. Melissa, I don't, isn't something I said? I don't think, no, she had something to do. Andrew, so it's just us. I'm on our top stories. What do you think of this Walgreens stuff? Do you believe this, Sorkin? A significant number probably isn't as much as we thought. They're looking at a quarter of the stores to evaluate those. But I was wondering, do you have a good a feel for exactly what happened here? Is it changing that much? Do you get all your drugs through the mail or online or something?
I think people are getting them in the mail, they're getting them online, and by the way, there's the big issue of just how much theft there's been at these stores and what can be on the shelves. That's a big issue.
Because it's a pain to go in, and you have to get someone to get the slightest thing. Razor blades, Advil, whatever we're looking for. Bertha Coombs has a lot more on this, and we're going to be talking to her in a second. Shares of International Paper are down this morning. The world's largest pulp maker based in Brazil saying it's ended talks to buy the company. And Elon Musk's space company, SpaceX, will sell insider shares at $112 each in a tender offer. That's according to Bloomberg, which says the offer will place SpaceX's value at roughly $210 billion. Okay, back to you, Andrew.
Thanks, Joe. Meantime, I want to talk a little bit about what's going on here at the Aspen Ideas Festival, where I'm joining you again live this morning. NBC Universal News Group, the media partner here, and AI, artificial intelligence, of course, the topic du jour. You can't go anywhere on this campus or just about anywhere else without talking about it. But yesterday, the individual at the center of this revolution was here, OpenAI CEO Sam Altman, and he and Airbnb CEO Brian Chesky took to the stage with NBC nightly news anchor Lester Holt. Altman opened up about being fired by the board and calling in Chesky for help.
The whole board firing me and coming back thing, I mean, Brian was an enormous help during that. It was obviously a super painful experience, but I do understand why anxiety levels are so high. And I think the previous board members, they're nervous about the continued development of AI, had whatever feelings they had about me and how we were doing things. And although I super strongly disagree with what they think, things they've said since, how they acted, I think they're fundamentally good people who are nervous about the future and trying to figure out how we get to a good outcome. I'm super excited with the new board. They're extremely constructive and helpful and experienced and strong. It's been a very productive thing since then, but that was a horrible experience to go through. Not during the moment where it was just this is a crazy thing, let's figure out how to undo it, and Brian was unbelievably helpful, but then the period after that, where I just had to kind of pick up the pieces in this state of emotional shock, that was really bad.
What I noticed in those first 24 hours was not a lot of people sticking up for Sam. And I, in my darkest times, in my crisis, have had people stick up for me. And that's what I wanted to do for Sam.
Joe, it was a revealing conversation. One of the first times they went in depth at that level about it. And of course, you saw Brian Chesky earlier on the broadcast talking about some of these issues as well, just about what it was like in the midst of those headlines at the time. We're going to be seeing one of the new board members, Larry Summers, talking about the economy with him a little bit later, but he's now on the board of OpenAI here. And then later today, Peter Thiel, and we're going to bring you that conversation on the air tomorrow, of course, after the debates, and maybe get some of a preview about the debates from Peter Thiel as well. He's tried, I think, to stay out of politics this round, but I'm hoping maybe he'll give us a little bit of taste of what's going on in his head about it all.
He may be one of those quiet guys, Andrew, right? I mean, he doesn't say much anymore. And why, does anyone need that? When you're a tech guy, I mean, did he really need what happened the last time he he put his foot in, or put his toe in the water of politics. I mean, what did he get out of that exactly? Do you think? What's the upside for speaking up or doing anything? That's why I think those, Sonnenfeld's piece. I mean, how many did any of those guys he was talking about? Are any of them on the record giving money to Biden?
And that's the issue. I think you're not seeing a lot of people giving on either side this round, and that was one of the points I made. Obviously, when
but he would say, well, normally 70% are Republicans, and in the past they've always. So he would say, well, they never gave money to Democrats. He'd be able to say that. But I think the real story was that these guys have customers and employees that are on both sides of what we're going to be watching tonight. And it's crazy to poke the bear on either side if you're a CEO.
I think that's true to some extent. And, we're going to have Senator Manchin here along with his daughter, Heather, of course, former CEO of Mylan, so we can talk to her about being a CEO and being outspoken about politics. I think it's a little bit different in that it's unclear whether, if you were to say something about President Biden, whether you would worry genuinely that there'd be retribution about saying something about him in the same way. And I think that dynamic is a real issue.
No, but Andrew, I'm shocked when a CEO, if you back Biden, you're also backing some of his policies. And you heard Lonsdale the other day say, you put in that unrealized wealth tax and you're going to destroy an entire industry. So there are other reasons policy-wise, but there's no denying that Trump is the first time in history there's ever been a candidate that can inspire such, I don't know what you call it. I mean, you get Twitter. You see what people say. I mean, it is, he has a different kind of and the media has said that he is a qualitatively different candidate across the board for supporters and for haters.
Right. We're going to talk about that, by the way. Senator Manchin, who just arrived, Senator Manchin and his daughter are going to be here in just a little bit, and we're going to talk about
I like him. He's a patriot. He knows that. And we saw him in Davos, and you were pulling on one side of him, I was pulling on the other side, and it looked like we were going to split him in two. But give my best to both, to Joe and Heather. Now let's get back to the developing store. Walgreens closed many of its underperforming stores. The news comes as the company reported fiscal third quarter results. Bertha Coombs joins us. So they're looking at, maybe you can clear that up, Bertha. They're looking at a quarter of them. Doesn't mean they're closing a quarter.
No, but potentially that. I mean, essentially, Joe, we're in the era where the standalone pharmacy chain is sort of at an existential moment. Walgreens coming in with a mixed earnings report, missing on the bottom line, lowering its outlook. Revenues did beat at $36.4 billion, but earnings were a nickel below at 63 cents adjusted, and guidance effectively saying its fiscal fourth quarter is going to come in at about half of what the street was looking for. Pharmacy continues to be one of the areas where they're feeling some pressure, although the back of the store did produce better sales and better comps. The front of the store, very much a problem. Comps there down 4% between consumers not spending on discretionary and the theft problem, which we call shrink. CEO Tim Mortonwood says they're really looking at reevaluating their footprint. He told me that they plan to close a significant number of stores. At this point, only 75% of stores bring in what is effectively their revenues and profits. And so they're looking at non-profitable ones hit by shrink, but he says they are willing to work with local officials if they can come up with a way to help curb that problem. They also plan to reduce their investment in Village MD. This is the primary care services that they had expanded on under former CEO Roz Brewer. They've cut back on that. They're going to lower their investment there to get more liquidity, to reinvest in stores, to build up the ones that are profitable. The healthcare segment actually did post a smaller than expected loss and adjusted positive EBITDA or cash flow. So that's looking better. It looks like they're right sizing. But overall, Joe, this is a question of them trying to get costs under control. The one thing right now that is working, ironically, it's Boots UK. There'd been talk a couple of years ago about selling that off, but that's one of the areas that performed, and Tim Wentworth told me right now that's one of the things that's working for us. So they're not going to be selling that anytime soon. Back over to you.
Interesting. Great. Okay, thanks for clearing all those things up, Bertha. Thanks. Let's talk markets ahead of key economic data later this morning. Join us now, Kristen Durley, head of investment solutions at Citi Wealth. And Kristen, I'm hard pressed to find any. We've had someone recently, but I'm hard pressed to find anyone who's not sort of just along for the ride as far as momentum goes for this stock
Well, I think
market.
there's a number of things I'd point to actually pretty constructive for the market overall. I think you have to look at, first of all, just the cash that has been sitting on the sidelines. You have about $6.5 trillion in money market funds alone. If you look at all of the cash balances, it's almost double that amount. So there's a lot of cash waiting to step in. I think also the trajectory of the Fed, when we look at the probability of a rate cut in September, that's now around 70%, with November pricing in at 100%. And so knowing that rates have peaked, that inflation, we're starting to see some cooling in that data. We're seeing cooling within the labor market as well. So I do think it is a reason to stay invested, but be diversified across the opportunities that exist in equities and fixed income.
That's what I mean. So did you feel the same way all through last year? That was a much more unbelieved rally, and we went up 24, 25%. Now everybody's on board at 5,600, 5,700 for S&P targets.
You know what's interesting?
Yeah, go ahead.
Yeah, what's interesting about last year, Joe, is that the recession that a lot of people were anticipating happened last year. So last year in Q4, you had 7 out of 11 sectors that were in earnings recession. The rally that we saw was massively concentrated within the Magnificent Seven. This year, we're expecting that you're going to see 2024 end with 10 out of 11 sectors turning to profits growth. And so this broadening out story, while we don't necessarily see it in the share prices, we are seeing it in earnings. And we do believe that there's opportunities in that broadening story going into the second half of this year.
As far as technical factors at this point, like Kristen, does the complacency present a problem? Does the lack of volatility, 2% moves, does the narrow leadership, none of that presents it raises an eyebrow, doesn't it? That this might not be, totally on firm footing.
I think when you look at the overall index level, there's certainly a lack of volatility, and I actually think that's an opportunity. So for investors who are worried about elections, they're worried about geopolitics, they're just worried about light liquidity over the summer months, because volatility is muted at the index level, that gives you the opportunity to actually put some hedges on and stay invested. I think when you look under the surface, though, I mean, we had some volatility in semis and in chips just recently. And so I do think from an idiosyncratic standpoint, you're seeing that under the surface. But at the index level, I would say take advantage to put on some hedges to stay invested, stay diversified, but get through the next couple of months.
Okay, we'll check back, see whether that does come to pass. Kristen, thanks. See you later.
Thank you.
And coming up, newly independent Senator Joe Manchin and his daughter Heather Manchin will join us to get political donors to back centrist candidates. Stay tuned. You're watching Squawk Box on CNBC. Welcome back to Squawk Box. The futures right now, you can see the Dow Jones down about 75 points, NASDAQ down 35 for a while. Sorkin, we were, just for a second, said the Dow was getting hurt by Walgreens boots. But remember what we said, that Walgreens, Amazon booted Walgreens boots out of the Dow back in February. So that $13 billion market cap. Can't be a Dow component with a $13 billion market. How's Manchin looking? He's a young-looking fella, isn't he?
He's right here. He's right here. His daughter's right here. Let's do a proper introduction, because joining us right now, we got a lot to talk about. By the way, we should also talk about Walgreens, because Heather has a view on all this. West Virginia Senator Joe Manchin is here. Recently announced he's switched his registration from Democrat to Independent. Heather, Manchin is here. The brush. She's Senator Manchin's daughter, the former CEO of Mylan and the founder and CEO of Americans Together, with aims to get political donors to back centrist candidates. Good morning.
Good morning.
Both of you.
Good morning, Joe.
It's great to have you
Hey,
here.
Joe. Joe, you look good for 50. I can't believe it. What do you do exactly? What's your secret?
I've been set free, Joe. I've been set free. I'm an independent, set free.
Yeah, trying to promote those democratic ideals. Now that must be a lot easier for you. You know.
Oh, I just good American ideals. That's all.
That's it.
So you guys woke up early for us, so we appreciate it, on a debate day, and I'm hoping both of you can expound on what you think we're going to see tonight, and how important or not, maybe depending on how you view it, tonight really is.
Andrew, what I would like to see, not what I think I'm going to see, I have no idea. A lot could happen. It could be fireworks, as we know, or it could be basically two people who I want to see that are quality people who could be leading this country. So I'm looking for that. I'm looking for the leader of the free world to show the rest of the world that we can lead and we can come together. So I know as divisive and as our country is right now, people picking sides, it's almost like a sporting event.
Right.
It's not.
You've been a Biden man, though, in the past.
I've known Joe Biden for a long time. We've been friends. I want Joe Biden to be the old Joe Biden I've known. He's gone too far to the left. And we've had this conversation, he and I. I'd like to see him come back, the centrist Joe Biden that he has been, being able to make a deal with both sides, never looking at the other side as your enemy, but your friend who has a different idea. But now it's at the point they're just going at, if you're a D, you're supposed to hate R's. If you're an R, you're supposed to hate D's. And I said, I can't take it anymore. I like both sides. I want to work with both sides.
Okay, real quick, because then I want to ask Heather a question about how CEOs think about this for a second. But could you see yourself voting for the former President Trump?
I have a hard time, and I'll tell you why. The orderly transfer, to me, we've been able to, for 250 years, navigate through really some tough times as a country. And I was asked, what would our founding fathers think of us today? They might be amazed that we're still here, 250, but they'd be so proud that we've been able to weather the storm by self-governing, people governing themselves. But with that, orderly transfer of power and rule of law, the two of the things, the staple anchors that we have. And former President Trump, basically, I'm afraid, would challenge those to where he doesn't accept orderly transfer of power, or protecting the rule of law and the judicial system. That's all we've got. That makes us so much different than any place else in the world.
Does that mean your mind is made up there, or is there something you can say tonight that would change it?
I don't know. We'll have to see. Tonight's a big night. We're going to see what happens.
Heather, speak to this, though, because you're a former CEO of Mylan. You've spent a lot of time in the CEO community, and we've been having lots of conversations, even in the past week or two, about whether CEOs are supposed to speak out, not speak out, whether this year is somehow different than in the past. Jeff Sonnenfeld had a piece in the New York Times that went around. We've been debating on the air. What do you think?
I think it's like everything else. We have gotten to such a point that it's been so weaponized to have an opinion. I think that what makes your life, compromise, common ground, getting around, and CEOs do it every day. You've got to find ways to navigate your way through the public markets, through your industry. Right. So we should be able to sit down with administrations and with senators and Congress and have discussions about what needs to happen on a policy. And we've made it so personal that if you have to either like everything or nothing, and you're pitted against a side. So I feel for CEOs today. It's like I can't comment on a policy, good or bad, because then that means I'm endorsing everything about everybody.
But how much of it today is a worry about what the customer is going to think, and how much of it is a worry about what the former president might think if he becomes the president, right? I mean, part of it is that there's sort of the customer issue, and then there's the shareholder issue, and then there's, by the way, what government could do to you.
For sure. That's the problem. So not only are we weaponizing it, but our politicians are weaponizing it. So when you hear people lash out to want to call out a position that a company is taking or a CEO vocalizes, I think the personalization is what's got to end. We've got to have respectable conversations with each other again, and not hold each other accountable to words.
What do you think as somebody in politics?
Let me just say this: that I don't hear, for the last decade, I have not heard anyone saying, enough, this is good for the country. Let's do this is good for the country. We know that we've got to fix the border. We know that we've got to tackle this debt. Almost $35 trillion of debt. We cannot sustain this. It'll be the first time since World War II that we're going to be paying more on interest to satisfy our debt than we are to defend our country. It makes no sense at all, and we're digging ourselves a hole. So we know how to fix this, but the bottom line is, they'd rather basically blame you. The system works, the duopoly of the businesses of the Democrat and Republican. If I can blame you, I look better than you.
Okay, but hold on. You just made 2 points about immigration, or the border really, and about the debt and deficits.
Yeah.
And I think a lot of people would look at President Biden and say, he's not scored on those fronts.
Well, let me just put it this way. As far as on the border, I've been saying from day one, you've got to fix that border. You've got to basically control the border. You can't have pardon at the border and catch and release everything that went on. He can say from defending himself, President Biden, is that out of the compassion he had for people who are displaced around the world after COVID, but he never it went too far. We got overrun. Now he can say also, but the Republicans, we had a bill, a bipartisan bill. And James Langford, who's a good friend of mine, I wasn't sure James could ever get there, but he did. And then he walked away from it because President Trump. So who's the worst? You follow me? That's what politics. You want to know what's wrong with politics? We could fix the gun problem. We could fix, in 2013, we had a bill. We had the Manchin-Toomey bill as far as in 2013 on background checks. Politics prevented that from happening.
Joe?
Yeah, Senator, you can cherry pick different policies, and you can take the politician out of West Virginia, but you can't take West Virginia out of the politician, I don't think. You have problems with Biden's energy approach. There's just no two ways about it. And now we're seeing it come home to roost and toward GM and a lot of these companies that are, they're rushing this transition. And so that's one. I mean, you got to put that in Trump's. You got to put your check mark in Trump's policies as far as that goes. Now, character issues. You got any problem with influence peddling and what was going on? You have no doubt you're sure that Joe Biden didn't benefit whatsoever from any of the stuff that was going on around the world with his son. Are you absolutely sure?
Joe, first of all, let me go back to the energy, if I can talk about that.
Yeah,
we are now
too. No, I know.
We're the number one
because of $80 oil. That's not from it. That's in spite of Biden.
We're the number one producer, Joe. We're producing more energy. We're producing more. Right, we're producing more energy than anybody in the world. We're number one producer. 38 trillion cubic feet of gas, 4.7 billion barrels of oil last year, and we're on track to do it again. And we're investing in new technology too, as far as small modular reactors and nuclear we're bringing back. Hydrogen's coming on. My problem with the Biden administration is we wrote the energy portion of the bill. I know what it's doing what we wanted it to do. We're having a hard. They're trying to basically implement a piece of legislation that they didn't pass. I said, just stick with the bill that we passed, that you signed. The IRA, the bipartisan infrastructure bill. Those are bills that are bringing investments back, but you can't overreach and basically not bring manufacturing back because you're allowing China to still compete unfairly with people trying to get up and run.
They pulled the rug out from under you on the permitting piece.
I'm fighting. No, it's a little slippery right now, but I'm still fighting it, Joe. We're going to win this thing.
Okay. As an outsider, maybe you do it. You didn't talk about you totally avoided the other thing I asked you in terms of character
Okay.
issues.
The other thing I was trying to kind of slide through that one too, Joe, when you caught me.
Yeah, both of them. Yeah.
No, hey Joe, on that.
You don't have to answer that. We won't.
No, it's a bad situation. The bottom line is they're being scrutinized every way humanly possible. I believe in the rule of law. I believe the rule of law, basically, no one's above the law, whether it be President Biden or former President Trump or anybody else. And with that being said, if he has done something and benefited unfairly by that, used his office, I know one thing. I went into blind trust immediately, and I wanted to make sure that I did not have any tentacles as far as where I could benefit from.
Heather, can I ask you, I want to just pivot the conversation for a second, because when we came on the air, we were talking about Walgreens.
Yes.
And you are a healthcare expert. You've been talking about healthcare and how to fix this country for a long time when it comes to healthcare. But how would you make sense of these headlines this morning about Walgreens? Because I think a lot of Americans are waking up thinking, oh my goodness, my store, the store closest to me may be closing.
Right. I think it's the issue that's been an issue for now decades. It's transparency. You have no idea. It's the only industry where you walk up to the counter to purchase something and you have no idea what it's going to cost, and it costs something different every month. We're the best shoppers in the world, and we cannot shop for our pharmaceuticals. The Walgreens, the biggest difference between Walgreens and CVS is CVS owns one of the largest PBMs in the country, Pharmaceutical Benefit Manager, and Walgreens doesn't. They've had a standalone model, and I think we're seeing, unfortunately, what a PBM will allow you to hide or give you cushion that without it you don't have.
So when we saw CVS buy the PBM, did you look at that and say that's good for the country or it's bad for the country? Meaning that should the PBMs be part of it, or you're saying 100% not?
100% not. I think that vertical integration made it more opaque. So we didn't have transparency when PBMs were standalone. And if you'll remember back early 2015, 2016, I continued to talk about the fact that we have a $1 trillion industry that no one on Capitol Hill knew what it was or what they did, and they still barely do.
Let me speak on that one second.
Please.
PBMs, from the standpoint, now the Senate and Congress are starting to understand their tentacles and how basically they're jacking prices up. If we could, as Medicaid and Medicare, if we could all buy into the VA system, let VA do all the buying, because they bypass PBMs, we get the lowest prices possible.
Which candidate do you think is better on healthcare?
I'm not sure if either one of them, from the standpoint of getting a handle. Who's going to have to? Either one talking about PBMs?
We're not talking. No transparency for healthcare.
PBM has no value to the process, no value to the cost and what you're spending, and basically getting the prices down. Nothing.
Okay, real quick before we go, who do you think former President Trump would choose as his VP? And who would you like?
Well, I know all the people that I don't know Doug Burgum as well. Okay, I'm partial to governors. Okay, I'm partial to anyone who had executive experience. They've got to make a decision. A governor can't be a Democrat or Republican. Governor's got to be governor of their state. Okay, and they've got to make decisions every minute of every day to make life better for their constituents. So, I think the dark horse might be Doug.
And do you think there's ever an opportunity truly for an independent third-party candidate?
We're going to make sure that happens sooner or later.
I think one thing on Americans Together, the reason we started it is we have got to change the incentive structure for politicians. Right now, it's completely out of whack. And just like a corporation, the incentive structure drives performance. We've got to change the incentive structure, and that's what we're going to try to do, and build a center for the center of American politics.
People are unhappy with the choices they have going into tonight and going into the election in November. The process, the political process we have, prevents us from having more options. That's got to change. But I want to say this, as an American, me being a U.S. Senator for 14 years, I don't care who's elected. I'll make my choice, and my vote is one vote. But as a senator and as an American, I want to make sure I do everything I can to support the person. At orderly transfer of power, or if it stays where it is, I'm going to do everything I can to make them the best president and make all of us proud America.
Senator Manchin, Heather, thank you guys for waking up early and being with us, and we'll all be watching the debate tonight.
Yes.
Thank you both. Joe?
That was good. He's still, well, of course he still has it, but I don't think he's finished. And I'm sure Heather's not finished either. And I look forward to watching what happens for both. It's time for breaking economic data. Rick Santilli standing by at the CME in Chicago. Rick, what are the numbers?
Yes, everybody get comfortable. We have a long list of important numbers. Let's start out with initial jobless claims. 233,000, close to expectations, following 239,000, which was a subtle revision. 233,000, just to put some perspective, the recent high water mark was 243,000, and that was at the beginning of the month, and that was the largest since October of 23. If we look at continuing claims, which have been staying above 1.8 million, they remain there, 1,839,000, hotter than expected. In the rearview mirror, we lose a bit from 1.828 to 1.821 million, 1,839,000. That is the highest level going back to November of 21. November of 21. Let's look at GDP, shall we? Even though it is the third time around the block, this is first quarter. It remains 1.4%. Excuse me. That's expectations. That's 1/10 hotter than our last look, which was 1.3. But this quarter, even at 1.4%, remains the weakest, going all the way back to the minus signs post-COVID of the second quarter of 22, when it was minus 0.6%. Let's look at consumption. Now, this is interesting. Considering this is the third time we're looking at this, consumption, which was ramped up, now goes right back down. It jumped up to 2%. It's back down to 1.5. 1.5 is the slowest growth of consumption since the second quarter of 23. And if we look at the price index, it moved 1/10 hotter, from 3% to 3.1. 3.1 is the hottest since the third quarter of 23, when it was 3.3. But here's an important fact. In between this quarter we're evaluating and the third quarter of last year, it moved down to 1.6 in the last quarter of 23. So it's resurged to some extent. And if we look at the core aspects of this, also a 10th hotter at 3.7% versus 3.6. It equals the second quarter of 23. You go to the beginning quarter of 23 to find a hotter number, up 5%. And once again, in between all this, the third and fourth quarter of last year were at 2%. Now let's go to durable goods, shall we? Durable goods headline number up 1/10. That is much better than we were anticipating. We were looking for down 0.5%. And if we strip out transportation, it deteriorates into a negative number, down 0.1%, and down 0.1% after a huge revision down to last month. Excuse me, not a huge revision. On the headline, we went from 0.6 to 0.2. Ex-transportation remains up 0.4. And if we look at, finally, retail sales quickly on inventories, retail inventories were up 0.7. Wholesale inventories were up 0.6. These are both much bigger bills than we anticipated. What's the aftermath of all of this? Interest rates have moved down a little bit from loftier levels on longer maturities. We see the pre-opening equities have improved a bit, but they're still in negative territory. Lots of numbers to decipher. Back to you.
All right, thanks, Rick. We'll get Steve Leisman to at least start with some decipheration. Did I just come up with that, Steve? You ever heard that?
No, I haven't. What is that?
Rick said you're going to start decipher. We got to decipher some of these numbers, and I said, well, we got you, and you can begin some of the decipheration. I'm going to look that up. If it's not, it should be.
Look it up, Joe. You're a wordsmith. I'll go with you on it.
No,
look,
it's not, sure.
I don't know if Rick's still there. I can't find, because of whatever reason, the number I'm looking for, which is the capital goods investment ex aircraft. Let me just give you a caution on the jobless claims number.
Minus 6
Okay, that's what I was expecting. Thank you very much, Rick. And I want to talk about this issue, Joe, which I have been talking about several months earlier, which is we had risks in the economy, but no apparent weaknesses. And now I'm afraid some of those weaknesses are showing up. The jobless claims number bugs me a little bit because we had Juneteenth last week, and that could have an effect on these jobless claims numbers because it happened in the middle of the week. Some 25% of people still use the phone or go in person to get jobless claims. And Rick correctly made a point about the continuing claims being on the rise here. So we need to watch that. The capital goods shows perhaps that the capital spending numbers, which had been pretty good, are now weakening. So what we had in the first quarter, Joe, I think was kind of like a faux weakness, although maybe now with the consumer it's a little bit weaker than we thought. But still, the core numbers of spending by business and consumer were good. The second quarter is where it seems like, Joe, there's some real weakness going on and some concern that maybe now we're in this 1 to 1.5% GDP range that's not going to be totally created by trade and export. So it's something worth watching on the jobs front, something worth watching on the capital spending front right now as we look to maybe some gathering weakness in the economy. And I think that's perhaps why yields decline. Joe, back to you.
Thanks, Steve. Rick, are you gone?
I'm here.
Rick, Maya McGinnis sent me some info and said that there's nothing fuzzy about those numbers, those Trump-Biden deficit numbers. There's something weird, the assumption. What was it about that deficit?
Well, I think what's fuzzy about the numbers is, so we all know COVID put us in a very strange situation in terms of spending. The country and the world were in an unknown place. But once the issues were known and how we dealt with spending that money was not very good, and how we continued to spend after, for the most part, we started to get a much better grasp on the situation is another issue. But the fuzziest part is how we deal with the static versus the active handicapping of tax cuts and many of those issues, because they improved certain conditions, they improved business conditions for lowering the corporate tax rate, they created onshoring, and much of those benefits gets lost in the spending column. And that's the problem we have, the spending column.
It's still, you can still make numbers do a lot of things depending on which side you're on.
Of course, all you have to do is look at the traditional media. They do it every minute of every day.
Right. And now everybody tells me disposable income is up, but wages are down. But disposable income included COVID payments. Anyway, everybody's got a line. Coming up, New Hampshire Governor Chris Sununu is going to tell us what he's looking for on the economic front in tonight's highly anticipated presidential debate. I think he's, believe it or not, he's a Trump backer now. The debates tonight, 9 o'clock. Join us now with a state-level view of the presidential race and what he's looking for from the candidates. New Hampshire Republican Governor Chris Sununu. I guess I could have written this intro, Governor. We know we don't want to bury the lead. You were on this show multiple times as a backer of Governor Haley, Ambassador Haley, and you've got plenty of criticism that you leveled at former President Trump. over the years, over the months and years, but yet here we are. You think that Trump is a better choice for president?
Well, there's no doubt about that. I mean, elections are about choices. When you go into the ballot booth, you don't have a debate with anyone. You're filling in this box or that box, and that's where it goes. And so it's binary. So there's a lot of folks that clearly don't like Biden, wish there was a better choice, but will probably hold their nose and vote for him. And same with Trump. They don't like a lot of what he's done and in terms of his approach and all of that sort of thing, but they want change. And I think that's what this election is about. Can Trump connect with voters, especially on a night like tonight, and connect with their anxieties, if you will, to say, look, if you want to change, if you want to feel better about your economic situation, then you got to actually come out to vote in November and kind of be part of that action. So I think he has got a huge opportunity to do it. He can't just say, hey, inflation's bad, right? He's got to bring some solutions, right? Talk about controlling spending, releasing some energy to get the energy costs down. Talk about a free market in healthcare. He's got to bring some type of solution here that people will understand very simply, that people will understand. And if Biden sticks to the same talking points of everything's fine, the economy's great, clearly that hasn't worked for him for the first 3 years. If he sticks with that message tonight, he's in real trouble, and people are going to get very frustrated very quickly.
And people need to grow up, obviously, and realize, because a lot of people would point fingers at you and say you're a sellout or whatever. Just like, but what about Democrats that know full well that President Biden has probably passed the point of the toughest job in the world 4 or 5 years from now is probably not what most Democrats would pick. They're behind him 100% because they have to be. And you need to, as a Republican, it shouldn't shock anyone that you're behind the party's candidate. But I still need to ask you, Governor, you had a lot of character issue problems with President Trump. Do those still exist? And I've had people tell me, look, policy are one thing, but the country's going to survive bad policies. It might not survive a dictator or whatever. You've heard all the rhetoric from the other side.
Yeah, so look, I'll say this. Every criticism I've ever laid at Donald Trump, I stick behind it 100%. I mean, I do. But at the end of the day, what you have there is folks judging other folks' priorities, right? For some families, inflation is a priority, immigration is a priority, how they deal with their schools is a priority. For some families, January 6th was a disqualifier. I don't judge anybody for that, don't agree with it, but I don't judge anybody for that. Everyone has to stop judging each other's rank of priorities, and every family's different, and every family is going through anxiety. Some people say, well, Trump's on trial, so we shouldn't elect him. Guys, nobody is staying awake at night worrying about the trials of Donald Trump, but they are staying awake worrying about how they're going to pay their rent and how they're going to pay their groceries. And you have to respect that. You have to understand that. And that's why Trump is doing so well, because when you're gaslighted by the actual president who's telling you that your economic worries, all that credit card debt that you have isn't really a big deal and you should be fine with it, that gets people really, it shows a disconnection, and it gets people just really ticked off that there's no empathy or sympathy from those that have kind of affected the problem. So that's where Donald Trump has an opportunity tonight to connect on these issues. I think you just say something simply like, look, we're going to get, and I think the Fed is largely responsible for this inflation problem, by the way. I think Janet Yellen is an absolute fool. And I think if Trump went out and said, we're going to get rid of the people that were in part of this problem, right? We're going to drive change. We're not just going to talk about a problem, but actually bring an answer. The other thing I want to harp on a little bit is Trump has an amazing opportunity to harp on the international issues tonight, right? He can very simply say, there wasn't chaos in the world when I was president, and look what we have now. We are a world leader, and look where we are today. And that's a very simple message. So if you can keep the message simple and make sure that Biden, who, as we all know, is a guy that's going to be up past his bedtime, if that guy kind of gets under Trump's skin, it'll show weakness. So Trump can't let Biden get to him. He's probably going to take a little bit of his frustration out on the moderators, I imagine. I imagine we'll get a few mic cutoffs tonight. That might be kind of interesting. But he can't show that he's getting rattled by a guy that he thinks is too old for the job.
Right. And we mentioned that, Governor. And I'll mention VP for a second because we do. This is part of the calculus. Vice President Harris is less popular than President Biden, which is, you're getting down there when you get to that level of popularity. And every Democrat that is unequivocally backing the president knows that there's a chance maybe that you know, everybody's different at 81. There's Warren Buffett at 95, and then there's other people that are, you know, in their 70s. They shouldn't be president.
That's right.
So we know she's waiting in the wings. Who do you think Trump should pick?
Well, I'm like former Senator Manchin. I'm partial to governors because they're managers. They do the job. They're 24/7. Obviously, I think Doug Burgum would be great. He's a great friend, great governor. You know, I think Tim Scott and Rubio are also in the mix. I'll say this: I don't think it matters a whole lot. I know that
Really?
I don't mean to give a no. I don't think it's going to matter. People are going to vote for Trump or for Biden. They're gonna look at who the vice president is, but I don't think it's going to sway the vote. Those are two very polarizing characters. They both were, you know, one's a current president, one's a former president. That's who they're really voting for. And I think it's pretty rare that a vice president starts swinging votes. So I think it'll be interesting, and I hope he picks, you know, somebody solid. As you just mentioned, pretty much anybody in America will be more popular than Kamala Harris. So right there, he's guaranteed a win in terms of the popularity contest. So I just hope it's somebody that's effective and understands that America needs action. They need management. Right? Words matter, not just this policy fluff stuff that you see in Washington, D.C., but real kind of CEO-style management to get to help be part of the team to get things back on track.
All right, it's great to have you on, Governor Sununu. A lot of times I do get a little, I think you'd be good. I do. And you're young, and maybe that's something that we'll see in the future, but there's a new breed of politicians coming along someday. Andrew, just want to tell you real quick, run this by because I saw it yesterday. Thanks, Governor. I saw it yesterday in the Journal about Doug Burgum. It said that you know he sold his company to Microsoft and then worked with Steve Bannon, and the Journal said, or some op-ed writer said, and he got along with Steve Bannon. So somehow, you know, saying that makes him like, would that be hard to do? I like him, don't you? Balmer?
I don't know if that's a singular qualifier, but he's a governor, as we talked about, and runs a good state. We got a lot more coming up right here from Aspen. In just a moment, we're going to be joined by the CEO of GE Vernova. We're going to talk energy demand, powering the AI boom, and so much more. Stay tuned. You're watching Squawk Box on CNBC. Welcome back to Squawk Box. We are here at the Aspen Ideas Festival. Nearly 3 months ago, GE Vernova completed its spin-off from GE. The stock now up more than 25% since then. Joining us right now is GE Vernova's CEO, Scott Strazik. Good morning to you.
Andrew, thanks for having me. I'm thrilled to be here.
It's nice to see you. I think this is your first big interview since this all went down. Curious what it's like been, before we even get into what's going on in the energy sector, just being a CEO of a public company like this now.
It's fun. I mean, listen, this is a company that matters to the world. I mean, we're electrifying and decarbonizing the world every day, and markets that are really growing. So I see clear opportunities for us, and we're having a lot of fun.
So one of the conversations, we keep saying it here, is AI is happening wherever we go here at this conference.
Yes.
And yet one of the underlying issues is that of energy.
You bet.
And how much energy is really being used. I spoke to Mustafa Suleyman, who's the CEO now of Microsoft AI, and he seemed to indicate that he didn't think it was a problem, like that we had enough energy, that it was going to be okay. Do you think it will be?
Well, I think we can meet the growing demand. I mean, there's clearly a lot of load growth that's coming. AI is one of those factors, EVs, just U.S. manufacturing growth. The reserve margins very clearly in the U.S. are coming down, so we're going to have to invest a lot more into the electrical power system. But we've got the ability to do that. We have the technologies to do it. And with these hyperscalers and technology companies and the balance sheet and their operating history, partnering with them, we can grow into this electricity demand. But we've got a lot of work to do.
And where do you think it's going to come from in terms of clean energy?
Well, it's going to be an all of the above technology. The reality is this is going to be a multi-step journey. I mean, with the amount of power that's going to be needed this decade, gas is going to be important.
Right.
We'll decarbonize that gas over time with hydrogen and carbon capture. Wind is going to grow and play a real role. Solar is going to be important. But we're also going to move nuclear to the left.
Right.
Small modular reactors is going to become a much bigger piece of
You
the
actually
equation.
think it will be?
No question it will be. We will be commissioning the first small modular reactor in Ontario, Canada, 2029. It'll be in
that's in
construction.
Canada. That's not here yet.
That's in Canada. That'll be the first one.
Right.
You got to start somewhere. And that'll be the first one. And then we'll grow from there. But in the U.S., this is going to be an important part of the equation. Tennessee Valley Authority, TVA will be our customer launch in the U.S. We're working with them today.
Big concerns or questions over wind, especially offshore wind.
Yes.
And whether that can be a profitable business. And frankly, I mean, we're going to have the debates tonight. There's also a political question given the positions of President Biden and former President Trump on wind energy.
You bet. When you think about wind, I mean, it generates about 7% of the world's electricity today. Most projections think it needs to be 2 to 3 times that for us to meet our electrification and decarbonization objectives. Wind is an important part of the equation. That said, the whole industry has gone through a difficult chapter. We're working our way through that right now. I see clear pathways of success. At the end of the day, the storming and some of the scary headlines you see in the news today on offshore wind, projects getting canceled, customers losing a lot of money, I actually think that's really what's going to lead to a reset in an industry.
So what has to happen as a result? I mean, the losses are in the billions.
Yes. Starts with price. The reality is when you think about offshore wind, prices is going to have to be much more analogous to building a new nuclear plant, putting carbon capture on gas. Offshore wind prices aren't going to be equivalent.
How do you get those prices there without subsidies?
Well, I mean, at the end of the day, there are incentives today to really help. No question, not just
And do you think
offshore.
those go away based on this election?
No. I think at the end of the day, this is something that there's real infrastructure investments that's going to be required for us to electrify and decarbonize the world. There's going to be incentives in many parts of the world to support these industries, including offshore wind.
Everybody here is talking about the debate tonight.
Yeah.
And everyone's also talking about the role of CEOs in either talking about politics and policy. How do you think about that today?
I think in the electrical power system, governments matter, and policy definitely matters. I mean, we've built this electrical power system over 100 years, and we need to completely transform it in the next 20. So I certainly spend time in D.C., spend time with Republicans and Democrats.
But so do you say in this election there is a president that it would be better for your company than another?
When we have these conversations and we talk about the investments that are required, especially in the infrastructure for electrical power, really comes back to jobs, innovation, energy resilience, energy security, and to a large extent national security. And the reality is the investments that are required for the electrical power system, both parties support those investments. So we're focused on serving both parties.
Scott, I want to thank you. It's a Cornellian, so I'm a Cornellian. Go Big Red. Go Big Red.
You bet.
We got a lot more coming up when we come back. A final check on the market as we count down to the opening bell on Wall Street. You're watching Squawk Box in Aspen, Colorado, and
You got this.
Checking Walgreens one more time now. 20%. The CEO just saying on the conference call that plans to finalize the number of store closures are in motion. He said we're at a point now where the current pharmacy model is not sustainable. That stock down 20%. Are you back here tomorrow, Sorkin? Are you on?
I will see you tomorrow post a bit. I should tell you, by the way, because you had asked the question, I asked Brian Chesky. Chesky's staying in an Airbnb here in Aspen. I know you'd asked me that. I wanted to get you the answer.
A nice one, I'll bet. So you're in studio here tomorrow?
No, I'm going to see you from here. With
from
some
there. You're
tape
still
from
there.
Peter Thiel. We'll have all the reaction
That's
from
right, Peter Thiel.
all the mockers
That's right.
out here.
That's right. I'm losing it too. My name's Joe. Make sure you join us tomorrow. Squawk on the Street is next.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber has the morning off. Futures are getting challenged by a trio of poorly received earnings. Micron, Levi's, and Walgreens all down 5 to 20% pre-market. Of course, Nike tonight. Our roadmap begins with the chips under pressure. Micron does fail to top the revenue forecast despite executives expressing optimism about AI. Walgreens plunges ahead of the open, slashing profit guidance in what it calls a challenging consumer environment. But then the shares of Amazon climbing again after becoming only the 5th U.S. company to cross the $2 trillion market cap. Let's begin, though, with Micron not getting that AI boost in the pre-market. The memory chip maker among the biggest laggards on the S&P. Revenue guidance overshadows a quarterly beat. But last night on the call, Sanjay Mehrotra did express some optimism about AI demand.
We expect continued price increases throughout calendar 2024,
despite only steady near-term demand in PCs and smartphones. As we look ahead to 2025, demand for AI PCs and AI smartphones and continued growth of AI in the data center create a favorable setup that gives us confidence that we can deliver a substantial revenue record in fiscal 2025.
Jim, you're going to get a chance to talk to him tonight.
Yeah, okay, so do people know Sanjay? I mean, I read all the headlines, and Chris Stanley had a good piece. Chris Stanley's always solid. He's been around for a long time. There's a way to be able to look at what Sanjay talks about, and I've gone over with many calls with Sanjay, and I'm glad I have him tonight. And it's always like, Sanjay, why didn't you give bigger guidance? And it's always like, Jim, that's not who I am. And then it's always like, yeah, but you see, it's going to hurt the stock. And then he's going to say, oh, I don't do it for the stock. I do it to be able to make it so what I think we can be. I don't want to lead people on. I don't want to create aggressive expectations. That's what this quarter was. So you buy the stock when it's down. I mean, it was down 10 at one point, so maybe you had a chance to buy it down 10. But I think that there is some benefit to age. It's hard to find, other than my daughter's letter X tweet that I just put up. Sanjay is a person who has a style. And we have lots of coaches who have styles. I've seen coaches go into, I've seen Andy Reid say, listen, I don't know, we're just going to be, oh, there we go. That's, of course, a real live picture and a reincarnation. We were back there that year. But well, I don't know why people don't understand who Sanjay is and what he does. This was typical Sanjay. I mean, do you know that that in the last call, 2 calls ago, I went out with something really positive, and he had someone rein me in. And I didn't change my view because I didn't want to get ahead of the story, but that's him. Had me reined in because he just, Jim, come on. I mean, I'm doing the best I can, and you've created unreasonable expectations. So, look, I love the guy. I have to admit, I just think he's one of the best executives in the country, and he's done a lot of things. The only thing that's strange is that he's got this New York facilities building, and apparently there's a problem with bats.
Bats?
Bats. Not baseball bats, but like, you know,
yes.
the ones
I don't remember reading about that in the CHIPS Act.
Yeah, no, we're focused on the bats issue, but I just really want people to understand that this stock has moved up a great deal.
Yes.
And that this is very typical. The actual, if you go back to 94, you usually get a 2-year run in that. And this is 94, so I'm really talking about, I'm talking about 30 years of being very involved with the stock, and you get a 2-year move. You don't get a move since October. So yeah. Now again, that's the benefit of age. I remember the 94 decline. It was one of the most brutals ever, and it signaled a major decline. When you have a major advance, it does not last for 3 quarters. So people should understand the history rather than just shoot from the hip, but they don't because they're young.
True. Goldman today does reiterate it by the JP Morgan desk, not feeling any panic around these results.
Perfect.
The bear arguments, though, do kind of center around the CapEx guide for fiscal 25, which was heavy.
Well, I mean, look, then he immediately says, listen, we can't meet demand. So what's he supposed to do? Is he supposed to say we can't meet demand, so we're not going to meet demand? I think we can't meet demand, so we want to meet demand. Now, these guys have the younger people who follow it are all used to the idea that as soon as you increase your supply, you make more machines. And by the way, if you really want to profit off that, just go buy Lambert Search. Just buy Lambert, go LRCX. Just go do it. I don't even give it in.
But a lot of the CapEx is just in construction.
Exactly. Well, they have to. Now, remember, a lot of it is being provided by Secretary Raimondo. Thank you. But I want to just emphasize that he has no choice. The thing that people don't seem to realize is that he's getting more positive on telco and getting more positive on PC. Why they don't focus on that? Because those have been so horrendous for so long, nobody gives a damn. Nobody gives a darn. I'm sorry, I don't mean to be. I get very upset about this.
It worked for Red Butler. I think you're okay.
You know what? My parents once said, don't listen to the last line of this movie. I do feel strongly that this is just quintessential Sanjay.
Yeah.
And so those who are troubled by it should read between the lines and recognize, a la Broadcom and Hock Tan, a la Corey Barry at Best Buy, that we're going to get really good PC numbers, and that these have been a drag forever.
That's interesting. We're going to talk some retail in a minute. Really quick, just to put these charts in perspective, semis versus the S&P, first 6 months of the year, best in history.
Well, you know, best in history is really amazing because you're dealing with periods like 95, 97, where you had the penny, where you had Intel. with every different iteration. That's incredible. And you also, by the way, you have amazing numbers from Lam, from KLA. You would think, once again, if their numbers were really great, then that would be flooding the zone, and therefore there are too many chips. But inventories have been, has finally worked off. I remember in October, I was to be Sanjay, Jim, inventories. And I was like, no, inventories, and this is what when you speak to this man, he is a person. I emphasize person because there's a lot of automatons who are CEOs.
Well,
they're automatons. This man is not an automaton.
On that point, we did have the NVIDIA meeting yesterday, where Jensen Huang talked about literally trillions and trillions of heavy industry that are going to get automated, and robotics one piece of it. Take a listen.
Trillions and trillions.
The next wave of AI is set to automate the $50 trillion in heavy industries. Soon, robotics factories will orchestrate robots that build products that are robotic. We developed Omniverse, a revolutionary virtual world simulation platform where the physical and digital world converge for developers to create robotic systems.
This ain't about chatbots.
He has a vision.
Anymore, Jim.
No, and I didn't. They weren't supposed to say anything.
I can understand exactly what they're going to do. Robotics. I've been in business for like 35 years, and it's been the hardest thing for me to ever do is find good help. Dedicated help with the heart that I have. I mean, I want it done right, and you only get 3 chances. If you don't learn from your mistakes, and you keep making them, I can't have you around. You costing me too much money. And I had an art gallery, picture frame shop where precise mattered. And if you couldn't do the first frame right, it's going to cost me $100. If you couldn't do the second one right, that's another 100. And then I have no profit. Same as janitorial. I only have one thing about if you don't clean the toilet like I do, then you're not cleaning it. So I had this one guy come in, I always like to leave the toilet bowl water in, the cleaner. I said, no, you don't do that. So I showed up the next day, and there he did. He had that frickin' blue water in there. And I'm telling you, I said, no. And I said, you clean it right the first time, then I don't have to worry about it no more. I don't care what they think. So I had to let him go. I mean, he wouldn't listen. I'm getting $5 to clean a toilet. I want it cleaned right. It only takes you 1.5 minutes to 2 minutes to do it right. And I went through 3 or 4 employees before I said, I'm just going to downsize and not worry about this no more. That's my biggest pet peeve. And I'm giving them $20 an hour. Come on. Who gets $20 an hour cleaning toilets and washing off a table? Not too many people out there. MU had guidance wasn't that strong, but they're still making money. So some are saying it's a worthy buy, and I think it's a worthy buy if they have a pullback. Micron. CMG. I had that knife yesterday. I was going to jump in this, and I just didn't see the split, or I would have definitely jumped in this at morning. You know, personally, I don't like Chipotle. I never see the parking lots full. I mean, they're not that good around here. They might be in your neck of the woods, but ugh. It's like eating hogwash. Slop. I think they made them a little bit smaller, the burritos, and didn't pack them as much and put all that gooey stuff in there. I think they'd be delicious. But just not my game. Spy did hit a resistance. I can go a little higher with it. So we got to have a little pullback or a continuation. Hello, nobody on? Wow. Hello, Ryan. 8 more minutes. Do 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 do. Good morning, Randy. I'll go get my water and tea ready. I'll just drink water first. Drink strawberry. I'll be right back. Amazon breaking out. I think it broke resistance. Meta, Apple, AMD's the one that's not performed yet. And we got Micron now. CMG, Tesla. Got Nike long. The Donald's debates tonight. We've had a few day bounce off that news. They really want to broaden this market out. I could tell by the way they're talking about the splits. They think all of a sudden now everything's overpriced. And I'm going, what?
Themes, 40 customizable themes, up to
I'm not sure if I need the VWAP on this side or not. Big spike right at open on volume. We're going to wait for the 200 SMA at 545.11. We could have hit a triple top up here. I don't have my platform up. The 28th on SPY. The 547s or the 548s, I like the even number. The odd number there, the even. 548 I like. It's got 800 some contracts on it right now. Got 10 contracts ready to be ordered. This is June 28th. I want to see if we can get down to 545.11. about ready to take Intel off my list. Morgan Stanley, UAL, Tesla's down $1. Damn, I had one hell of a run yesterday. Where's GME? Where the fuck are you? What happened to you? It was just there a second ago. Huh. There it is. The thing moving around fast. Somebody dropped the floor on him yesterday. Wonder if it was Dick Lick. Kitty litter. Talked about Lily yesterday. CCL. Bullish. You got Carvana. Home Depot was up. Tesla's down up 10 cents now. Now it just dropped. I think it can drop more. But yeah, there's a lot of volatility in these candles. A lot of uncertainty. FFIE. It's got to meet compliance, so it's going to have a split. Microsoft is up today. Pretty good run on Microsoft. Then you got Boeing. It's on the shit list. I gotta get that cord fixed because that's going to cause me problems. Spy's up. Just broke resistance. That'd been a good little trade right there. 88 to 110. More and more people are trading SPY every day. I think it's the easiest one out there to trade. The easiest stock of all of them. NVIDIA pulled back to support right at open. We got a double top resistance on NVIDIA. I know probably 8 out of 10 traders I know all over the board trade to SPY. I'm waiting for a pullback on the SPY before I jump in it. I gotta get this cream out of my face. I'm gonna be Eating it alive. Damn, 117. Well, I missed that trade today. Should have thought about it right here. 127. Jeez. That'd been $500. 600. Can't have one of them days again. Yeah, we're definitely down from the previous run we had, so this thing can find some resistance right here at 547.64. That's on the 1 hour time frame. 547.78. I'm going to set an alert off the 200. Oh, well, maybe right here. $545.55. That previous high. We broke resistance from yesterday, pre-market. Yeah, I should have jumped in that. Got some real good volume this morning so far. Now we're going to have FOMO in this trade. QQQ had a nice little breakout. So Levi Strauss slips after mixed second quarter earnings. SPX support is going to be right there at 54.8190. Meta, AMD did pop. Meta hit 520, up $8. IWM, I could have caught that one there off the 200 this morning. I would have took that trade. And I'd be out of it right now. Ugh. Create an alert for SPY at 546.23. Yeah, I feel dumbfounded not jumping in that trade. But I thought we were going to pull back and hit the 200, but it did not happen. Oh, I'm glad you showed up, Magnificent. I need to lay my head down on your shoulder. Randy. I got to go to work today too. I got to meet a roof inspector. Make sure I got my battery charged. Sold half Carlock, sold half his MU. What'd you do, short it? Good job. Okay, I've got some alerts going off. We're going to find out if we're a badass today. U.S. jobless claims are down a little bit, which is good news. But bad news for the rate cut. PCE prices 3.7% U.S. core PC price. There we go. There we go, roofing already. Always clean this gym. Yeah. Yes. Yep. Yeah, just go ahead and call me up before you get here and I'll meet you down there. After lunch? Okay, sounds real good. Okay. Thank you for calling. Well, that means I can be active trader now. I won't be stuck in a trade and have to leave. Come on, pull back, baby. As long as we respect the 9, we're still bullish. Volume's slowing down quite a bit. Okay, get ready. There's 21 EMA right here. Be nice if we saw it right back here at 570, 545.74. That's our pivot point. Right now we're at the 21. I have a feeling people are having second doubts right here. And weak hands will leave the trade right now if they don't believe in. Come on, get ready. Okay. We got a 1, 2, 3 right here, but I'm going to jump in right now. 0.93. We hit the 63. This is going to be a fast scalp. We can come down and hit the 200. We got a 1, 2, 3 right here, and we got a 1, 2, 3 right here. But I'm in this at 93 cents. Oh, shit. We just hit that support level. $93 in the 200 SMA. That's where I'll put my second load in. Right here we're at a double bottom. So this is where it needs to go ahead and do its thing. Oh, 90 and 80. Fuck, what am I doing? I thought I got it at 83. Hmm? Yeah, I got it at 80. That's right, 88 cents. The video trying to hold lows. Patience paid off so far today. It just seemed like a little bit out of whack right there this morning. 63 has been the pivot point on the 1 minute. Resistance is going to be this channel right up here. I had 546.14 this morning for a resistance level, and we busted past it. And up $100. We got to break the VWAP. That's the VWAP right there. So if we break the VWAP, we could have a triple top. And I gotta go make me some tea. I just keep smelling it. Ugh. And that'll be a double top. Or it could be a head and shoulders. There we go. Now, we got 3 white soldiers. You could take some profit right here. Out at 106. Profit. And the next resistance is right here. Holding few here. Let's do it. Well, I got it out of the way. It's always, I love breaking the ice. I come in nervous, kind of like Elvis used to do. When he'd get up on stage and after a couple songs, you know, kind of, I always get nervous. Even when I was on stage, I'd get nervous. And then that first song, I always got my choice of what song I wanted to play. Because I'd tell the band, I'd say, hey man, can we do this one? And that'll kind of loosen me up a little bit. They always said yes. I get a good grade on that one. I get a real good grade on that one because I was patient and I waited. I took the double bottom, which was perfect. I was in denial because I missed that trade, but still yet, I mean, I still got at my 88 cents. Fed Blazek speaking now, birds. CRM. $547.12. Yep. $547.12 on the SPY, huh? I have 546.14, then we broke it. I got 546.93. Yoko. Or 93, 93, 93, 93, 93, 93. 546.93. That's beautiful. I mean, that really was. If you don't have that 200 on your chart right now, shame on you. Remember, we got CMG. Now, I want NVIDIA split to be a learning lesson for you. The market's manipulated by these fat cats. Now, they didn't start crying resistance until it got down cheaper for the retail trader. And I was calling already expensive way before that. And still believe it. But now that this is split, I have a different opinion. And that's just the way I trade. But, you know. It's like this bottom on NVIDIA. Snake, breakout, pullback, boom. Okay, spike, now at 127, 125, get rid of your contracts. We hit the 1, 2, 3, out, 125. I want a real good grade. Yoko, bingo. Yahtzee. Man, that feels so good. Very good, mannequin. Mannequin give me an A+. Then the video's setting up again. CRM has legs. Mike says CRM has legs. Sexy. 1, 2, 3. This is what I've been teaching people. So let me show you a trick here. I'm going to show you another one. We definitely know the 1, 2, 3 is an exit idea. We called the 200 off the, we called it off the 200 with a hammer. I just went ahead and I jumped right in that trade. We came up, scalped, got out of some of them right here at my pivot point area. It realized that was a pivot point. Came back again. Now watch this. Say you missed all them trades. So you got inverse head and shoulders, left shoulder, right shoulder, right shoulder. Then we had a hammer. So that was a key idea to get in that trade right there. A dragonfly with fat wings to the triple top. Triple tops are resistance levels. They're hard to break. They usually pull back. People recognize them as a resistance. And then we pulled right back to the previous resistance that I had in the pivot point channel. So we got a 1, 2, 3, 4 up here. A 1, 2, 3 on AMD. Meta broke the double top. Came back and bounced off the 50 SMA. Amazon came back and bounced off the 200 SMA. What the heck? So we respected the VWAP. As long as we respect the VWAP, that's going to be our new pivot point for today on the we got about 30 minutes and I get up on the treadmill and do my half a mile. Today I'm going to have tuna and a salad.
Fascinating.
Exactly. Let's not overtrade. You know, we always talk about lunchtime. 11 o'clock Eastern to 1:30 to 1 o'clock. You get 2 hours to do your homework, adjust your trades. We got the big debate tonight. Everybody's going to have their eyes on this debate, probably one of the most watched debates ever. I think they're doing everything they can to keep them stupid protesters out of the building about Gaza. Plus, they're going to try to protect Biden as best as they can. They don't want people to laugh at him, for one. I just like to know what kind of drugs they give him before his speeches. It has to be something legal. So we got Meta at a resistance level. It's kind of a bearish flag for AMD, I mean. Things are pulling back a little bit. Well, I think it's sell into the news, mannequin, for Donald J. Trump. I have resistance at 41 bucks and a solid support at 36.40. Now we did pull back to a pivot point area. So yeah, I'm not going to be too bullish on it. Not now. It's one of them sell into the news events. Buy into the news, sell after it's over with. NVIDIA is getting ready to squeeze. We got two supports here. We got this one, and then we have the inverse head and shoulders. So somewhere in here, if that holds, we're still bullish. If not, we'll come up and break the 1, 2, 3. I mean, if we break the 51, that's a 51 EMA right there. Let's put the 63 on here. I want to compare these two. So the 63 and the 51 are like brother and sister right now. A little bit higher. I'm going to take off the 51. Now we got 1, 2, 3 down here. So we're in that support channel. Let's see what the video does. I think I'm not really very bullish on this yet. Now about that CRM. Damn. You still in that, Mike? Looking into Salesforce recent short interest. I was in a trade, not now. Damn, Mike's doing good on CRM. Short interest on it. Well, it broke out of my box on CRM that I have, Mike, at 250.13. We got a huge gap up to 266. That was a gap trade. That was a gap fill. I got the 200 SMA at 256. $257, 256, 257, and I see a head and shoulders right here at 260. But I like that 200 SMA if it fills it out. Overhead resistance. Oh God, you're talking 280 something. 268. $268. Okay, I'm going to give you another option. Ah, there, you had to throw that in there. Well, there goes that. You got me beat on that one, brother. Market slowed down quite a bit. CRM new high. What got the IBM in here for? Oh, yeah. IBM bounced on the 1, 2, 3 on the 5 minute. Meta. We got the 517.27 area. Or the 200 SMA. Apple's pulled back to support. Watch these stocks here. They're all pulling back. That means SPY should pull back. Yep. Almost said word off the 200. Go get my tea and I'll be right back.
Flowing here. So price is in kind of a rising wedge type shape here. Two lines both traveling upward, converging toward each other.
Talking about BK.
lately, a little bit more of a sideways move. Now, that's reflected here in the RSI. We have kind of a triangular pattern here. We have a downward sloping trend line connecting across some recent highs, as well as an upward sloping trend line here in green. So we're kind of bouncing around in this increasingly narrowing area, although we are above the 50 midline. So when you couple that with the fact that we're above our moving averages and they're all trending upward, things seem more geared toward the upside. Now, where do we go from here? We've worked our way through this volume node.
Now, before I
here,
go in the
58.
kitchen,
We've our
we got a
sights
1,
set
2,
up
3 on the
here,
SPY.
52-week highs near 60.87.
We got a 1, 2, 3 on the SPY right down here at the bottom. 1, 2, 3, 4. 1, 2, 3. 545.37. We got an inverse head and shoulders right here at 546. And I got a previous high right here at 545. So I'm going to put another alert right down here, right before we get there, at 545.47. I'll be able to catch that knife, and we'll have us trade into close, or maybe have it pulled back here during the lunch hour. These are my 3 support levels. I'll leave this up. Always clean this gym, may I help you? This call is recorded. Works every frickin' time. Okay, I might stick around here for a second. Now we got the 200 SMA right here. Where are you, bitch? We're at the 200 right now at 90 cents. So this is the lunch period. Johnny, where you been? You been in prison? How many years? Jim, that's none of your business. It's none of your damn business, buddy. break it. We could easily drop down to the 1, 2, 3. Remember this time period. Most days we slow down right at this time. You can see it in the charts. You can see it in the volume. You can hear it in my voice. And I waited for this 200 SMA. You know what side of the street I'm on? I'm going to collect me a fast $100. Now resistance was the old pivot point. Now you could adjust that pivot point to your first resistance right here. That previous high and that previous low. And if we build upon that 545.97 and build upon the 9, all you need is a 200 SMA on that chart. Are you convinced yet? Now we're retesting the 200 SMA. If not, we can pull back to a 1, 2, 3 bits. We don't want it to do that right now. That means I'll have to add on. This market's been a gift if you know that we're in a bullish kind of trend right now. Everybody wants to be bullish. They want to move their funds around and broaden out the market. I still think it's way overdone for it being an election year and a lot of uncertainty. But there's things that I'm understanding now that we didn't care about, that we don't care about like we did in the past, which is that the deficit, the uncertainty of a new president, none of that's being talked about right now. They think there's a big disconnect between these idiots here on Wall Street than us. Here we go. Now break it. Okay, come on. Fuck. It's not. It's depreciating. It's not doing what it should. If I can just get one big candle out of this and jump 5 cents, I'm going to get out of the trade so I can have lunch. So this is second bounce off the 200 SMA. Oh, darn, man. That dropped 90 cents just like that. I don't like this. I don't like this at all. Now 11:01. We'll see if the retail traders want to bring this up. Nope. Jenny, tell him to move the stock up. We're going to know any second. I've been studying. We got 3 black crows here for one. We have a steep. This is what I've been studying. The steepness of these here channels, of that overhead resistance, as Mike would say. So we're getting ready to squeeze any minute. Now, if this thing just all of a sudden knifes right down there, it could knife real fast, and you'd be down $10 contract, or more than that, if you got in when I did. We're going to know any minute. And I'm again repeat, this is not the best time to be in this trade. Look at your clocks. Mark it down on paper. Blake it. There she goes. She dropped. This is it. Okay, we got time to show respect. This could be, I got an 85-cent average. Just might have to back out of this one if this doesn't hold here. I could load up another 100, another 10. That'd really be sweet. Or even 20. Yeah, I could tell I wasn't liking this trade.
Look, we saw that post that came, the print that came out last month where we.
The SPX hit the 200 also. The video has a 1, 2, 3. Shop. I was looking at Shop yesterday. Man, that'd have been a good one. CMG got a double bottom here. Spy says it's ready. GME waking up now, according to Mike. She also let me stay in the losers longer. You're looking for 546.11. No. Blake it. We're at 254 on CRM. Higher lows on the SPY. I'm gonna go get my lunch ready. I'll be watching this from afar. and close.
A lot of trouble.
Right. Okay. So we'll see if we can head there. Up there, it's at 149.89. Rick Ducat is with us on the charts today. Rick, some of the thoughts on the technicals.
Price has struggled a bit over the past 2 quarters. We can see here that shortly after we had this earnings event back in January, we hit our yearly highs near 170. Since then, trending downward a little bit. We had a gap down on our last earnings event, kind of grinding sideways for a little bit, but making marginally higher highs now after bottoming out here near about 141 or so. We've retaken our yellow 21-day exponential moving average. We're bumping up against the orange 63-day moving exponential moving average today. That's the mark to beat as we continue through this trading day. We can see that momentum has also improved, though. We had a long downward trend line on the
He's good. I mean,
here in red. But recently, we managed to break through it. We've got this green trend line established here, and we're pushing above the 50 midline. So the momentum situation is improving. We're starting to push our way back above some of these moving averages, which are also starting to trend upward here. Our last holdout is the 63-day EMA in orange, which is still trending downward. If we can push above that, that would be an improvement for the bulls. Now, if we were to keep moving to the upside, we've got a couple gaps to consider here. We've got, they happen right after each other here. So around 156 was the low point that we reached right here. And then around 160 is the other low point before the gap. So that 160 strike price makes sense to me if we were to push our way back upward and take out some of those high points. To the downside, we've got our 252-day EMA and our recent lows between like 141 to 143.
Okay. I mean, when I look at Airbnb and you see that gap down in the earnings that you showed, but giving it a go of late, right? This month to date, it's up 3.5%. And the CFO recently said that 2024 has been showing stability in travel and leisure demand overall. In fact, non-urban markets were more popular than they even were in 2019. So there seems to be some good news here. Final thoughts, Mike.
Yeah, no, I totally agree, and you know, but I am going to wait for the market to confirm that for me before just saying, well, we're almost there. I'm going to go ahead and do it. So you know, we break out of those recent highs, and I think that we have one there.
Yeah, understood. All right, next up, Spotify, which is down 0.25% today. Want to hear some of your thoughts, Mike, on Spotify?
Which is kind of good, actually. You know, this is one that is, for me, is clearly trending, and so I'm looking for pullbacks here to continue that trend. It's pulling back in between where I run my whole moving average and the 20-day moving average. So anywhere in there, and until I see that we do break that trend line, I do like the upside.
They've recently offered an ad-free music-only subscription. It hit a high of $331.08, and it's not too far off of that. Rick, what do you think about the charts today?
Well, it looks pretty darn good here. We're up about 146% off our yearly intraday lows here. Pretty much just climbing straight up and to the right here.
I'll be back.
Make a pattern here, which is more of a rising wedge type shape here. We've got this lower trend line going across the lows. You could draw a less steep trend line going across
SMCI new highs.
shape where we have two trend lines converging toward each other. Now, you can see as well, once again, we're above our moving averages that we follow. They're all tilting upward here. In the shorter term, moving kind of sideways here. We've got a bit of a range between like 304.65 and the highs near 331.08. So that's our green and red lines respectively here. When we look at RSI, we can see that once again we've been making kind of a series of higher lows here. We're staying above the 50 midline. So when you couple those two things together, things are perhaps more biased toward the upside right now. If we were to move higher, if we were to take out these old 52-week highs and continue advancing beyond this white dashed line here, we could use standard deviation channels to project where we might find some potential resistance. So we've got our blue linear regression line, our line of best fit based on closing prices, One standard deviation to the upside comes in near 373.39 right now. So that could be a spot to watch, a study to watch if we keep moving to the upside. To the downside, we've got a confluence right here. We've got our linear regression line right in line with our yellow 21-day exponential moving average. That comes in right around 312.60, around that point or so. Then we've got our recent lows, and we've got this volume node right here near about 296, which also lines up with our orange 63-day EMA. So quite a bit of supportive areas, not too far down on this chart, which already looks quite strong here.
Yeah, I was looking at the RSI there on the bottom. I'm assuming that's RSI on the bottom. Is that RSI?
Yes, that's correct, Nicole.
Right, right. You know, it's lost some momentum in that phase, but still has an upward trend right now in the RSI. Mike?
Yeah. Yes, that was, that's where, you know, so I'm just looking for a continuation of the trend. And I would play this with just a straight vertical spread. The implied volatilities were not really sticking out to me for a calendar spread, and so I'm just going to do a simple 325, 335 call spread. And you know, I hope you're right, Ed. You know, that we get that linear regression up at 379 or the one standard deviation. That would be great. I probably wish I would have done something differently, but that'll max out at 335.
Yeah. I saw Piper Sandler recently had an overweight, reiterated their overweight on Uber and had an $88 target. And you're looking at this name, which is trading at 70.56 today. Yeah. Mike, some of your thoughts?
Yeah, so this one is one that just seems stuck to me. And I'm overall, I'm bullish on Uber, but I just haven't seen any signs where it's looking to break out. So I'm going to play this one with an iron condor, which means basically that we stay below our short strike in our calls and above our short strikes in our puts.
All right, let's hear what Rick has to say about that.
It's an interesting situation for this chart because what we had was a move off of our yearly lows near 40, basically very strongly up into those highs near 82. However, we topped out near that point multiple times here. So we have a ceiling near the 82 level, near this pink line here. Since then, we trended down for a while. We could have drawn this blue dashed line here for a trend line to the downside. We've broken through it after we stabilized near this green line, near 63. You can see that that was a point where we topped out several times, and then we bottomed out around the same level. So it's good to look for these kind of sticky price levels that come back into play here. Now we have a floor to watch near the 63 level. Since then, trending upward, we've got our short-term white dash line here. We've crossed above our two shorter-term moving averages, which are now basically right on top of each other here. The faster one is crossing above the slower one. Not necessarily the best trading signal in and of itself, but an easy visual indication of which way we're heading here. So we've pushed above those levels here. Now the next point that we could be looking to cross above would be these recent highs right here, this red line coming in right around 73.80 or so. That would be a point to break above for further upside here. To the downside, if we were to break to lower below our trend line, we've got our confluence right here near about 69. And then, as I said, this green line near 63 would be a key support point to hold.
Yeah, all right, Rick Ducat, thank you for that. Mike Shore, last thoughts there?
Yeah. So that lines up. Actually, I've narrowed that down a little bit. I'm looking that we don't get below 68. So excuse me, 70. I'm selling the 68-70 put spread, and then to the upside, we definitely had the same sort of idea. I'm selling the 75-77 call spread. I'm going out to July 12th, and you can sell that for $1. So basically, you're laying even odds, $2 wide on either side, collecting $1 in premium, so you get even odds on something like that, and just holding it for the next 2 weeks or so.
All right, great to see you both today. We looked at Airbnb, Spotify, and Uber with the big three. Mike Shore, Prosper Trading Academy, and Rick Ducat. Thank you both very much. Great to see you. Coming up next, we're going to spotlight the latest meme stock rally. Stay with us.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once a client knew that she was hurt, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Pettin-Levy, live on the floor of the New York Stock Exchange. It's time to spotlight meme stocks and the mentality behind it. Samantha Lamas is with us, Senior Behavioral Researcher, Behavioral Insights Group, live from the Morningstar Investment Conference. Great to see you. You said it's very lively there. I'm sure you're having lots of great discussions, and meme stocks must be one of them. What do people say about meme stocks?
You know what? I think the meme stock rally and what we've seen so far really just shows that people are very bad at learning from our mistakes, and at our core, we're just human. I mean, meme stocks by themselves may be new, but the investment engagement behind meme stocks is not new at all. Right? We can just trace back all the investors who are changing behind it. There's any trendy asset or any popular security, we all feel the pull to follow the crowd. Like, we all feel FOMO. We all want to chase after returns, or look super attention to news headlines, or now, Reddit posts. We all feel that draw, and yet, even though we just had a meme stock rally where so many people lost money, here we go again. We don't seem to learn from our mistakes.
Right, and we look at these names, AMC and GameStop and BlackBerry and so on and so forth. But you said it's a herding mentality, right? This behavior, and so is it this fear of missing out, or just wanting? Maybe is it a fear of missing out? Is it greediness? What is it?
I think it's a little bit of both. So not only do we have these behavior biases and low financial literacy that makes these mistakes easy to make, but I would even argue that our current investing landscape makes these mistakes easier to make, and maybe even on a high level and a wide scale, right? We have everyone investing and being able to invest easily, which is an amazing thing. Giving people the power of investing is absolutely amazing, but at the same time, as we dismantle these barriers to investing, we also brought down the guardrails around our mistakes, right? Before we had to make a call or wait till we got home to make a trade. Now we can pick up our iPhone and make it with just a few taps on a screen, which is amazing, but also very scary. We can fall into the behavior biases way too easily. So actually in our own research, we looked at the trades that investors made on online trading platforms, and we found that when they made trades on online trading platforms, they were more likely to chase after returns, and they traded more often, which we know can hurt performance in the long run because of costs incurred from over excessive trading.
I mean, this can apply to almost anything, shopping online or gambling online, yes or no?
Oh yeah. Yeah, if anything, I think we as consumers and investors have to put some guardrails back into our lives, which sounds so contrary to how we think nowadays, but maybe you delete the trading app on your phone, right? Maybe you only invest on a laptop or a desktop, so you're forced to wait till you get home. But introducing that friction could be that time you need to think twice and maybe not fall into emotional or behavioral pitfalls.
Yeah, you actually had some financial advice for the advisors, you know, how the conversations they should have with their clients, right?
Yes, so during our session today, later on today, if you're around, or if not, we're have the paper out on the same topic. We're talking about navigating the client-advisor relationship and the life cycle that we created by actually asking investors why they hire their financial advisor, why they continue to keep their financial advisor, and in those dire circumstances, why they decided to fire their financial advisor. So from people's responses, we created a life cycle of advice. And in that life cycle, we're kind of giving advisors a blueprint on how to work with clients at each of these steps in the modern world.
And when we look at the revival of the meme stocks, like we just saw with GameStop, right, and Roaring Kitty and the streaming segment he had and such, you know, people got back in and some people lost money, to your point. But you have using the Perma V idea. Tell me about that.
Yeah, so Perma V is a framework that comes out of positive psychology, and it simply displays the foundations of a life well lived, right? Well-being in general. So Perma V is an acronym. It stands for, I knew it was going to be positive emotions, engagement, relationships, meaning, accomplishments, and vitality. So in a previous project, we looked at how including the Perma V framework in a goal-setting exercise actually transformed people's goals, right? They weren't just giving us their financial goals, they were giving us their life values, which may seem a little high level for a financial discussion. But with these life values in mind, I mean, those are the motivators people need to stay on track. If they're being tempted by a meme stock, if you remind them that your financial plan as it stands now is meant to carry your family for their lifetime, right? It's meant for your kids' education and their well-being. That's the kind of drivers we need to make sure we stay on track. The Perma V exercise helps people get to those life values because we all need a little help to dig out what our goals are, what our life values are.
Right, understood. Just finally, I mean, you talked about some of the online tools that people love to use, but that it facilitates investors making mistakes. And so that's problematic, right?
I would say so, yeah. So these tools are amazing because they, as I said, they've given people, they democratize investing. So many people have the power of investing now, which is a beautiful thing, but because our behavioral biases, because of low financial literacy, these online tools can make mistakes easier to make. And that's what we have to be careful for, because meme stocks, these trading platforms have engaged clients. It's brought in so many more investors, which is beautiful. But so many of these investors are getting burned in the process because they're being pushed into things like meme stocks and cryptocurrency and all these very risky assets that then turn them away from investing forever. So we have to, I think it's our responsibility to take care of these investors as they come into these tools and use those tools or show them how to use those tools responsibly in a way that helps them get to their financial goals and not these short-term things that people call investing.
Thanks so much, and good luck later with the talk. To the folks there at the Morningstar Investment Conference, it looks very lively. I'm sure you have a great turnout. Samantha Lamas, Senior Behavioral Researcher at Behavioral Insights Group. Thank you, Samantha. Coming up next, the disruptors. We're going to take a look and focus on Mobileye after the company has seen enthusiasm due to Rivian's joint venture announcement and its hope to bring robo-taxis to the masses. Stay with us.
Well, I talked myself out of it.
report on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Young lady who was mid-30s.
God darn, man. I can't believe they keep playing this commercial over and over and over and over. Starting to come back a little bit here. AMD hit support. So does SPX. I've never poached an egg before. Now I've done 3 of them. And they actually taste pretty good. It goes great with a salad. Oh, I forgot cheese. I'm going to keep watching the SPY here. I'm going to try to get a trade out of it. Maybe the SPX this time. And my tuna's done. If we break the 21, the 5485s, I'll get 3 of them. And if I have to get more, I'll get 3 more. Up $30. Now I'm down. Thought you were in it. Break it. Tuna. Perfect. The way I like it. Okay, come on now. Break it. Never have liked tuna until I learned how to cook it. Nine. Man, with that egg, that really tastes good. CRM, baby. We got our resistance level. Mikey. $256, $257. $340, baby. $350. Jim. $4.10, baby. Nailed it. Good job, Betta. Damn. Mikey, 357. 357, Mikey. 257. Bingo, baby. Anybody take SPX with Bobo? A+. I really like how I cook this tuna. Managing risk and discipline. Very good. Blake it. Don't fake it. 4:30. Managing my trade. I kept a couple. Oh, we hit the 200. Mm-hmm. That's professionalism. How'd I do? I put that on the spy, man. Fuck. Well, it don't matter. You dumbass. I get a... Go ahead and deduct me a grade off that one. Oh, you didn't. I said dumbass. I didn't say I was one. That was kind of... I didn't know about that trade for a second. Oh man, that was nice. Lose 100, make 550, almost 6. The doctor said with my new diet that my blood test has never looked better. I got about, I'd say, I haven't weighed 160 pounds since I was probably 22 years old. It might break. It just might break here. Then I'm going to say, again, Jim, why didn't you stay in it? I told you so. Told you we're going to go higher. I'm 175. I weigh right now. I'm at 173, and I'm 5'9". And I can tell I still got another 5 pounds to go, maybe 7. I got a big chest, bigger bone chest, and I've lost half my titty fat. Another 12 pounds, yep, that's what I was thinking. 160. I can do it. Oh, casino trade? $5 fucking bucks. Now I'm mad. Why didn't you stay in it? Why didn't you stay in it, you idiot? Six. Because I hit my target. Just for that, I'm cutting you off tonight. You're sleeping on the couch. Okay, I gotta go beat the roofer. Always clean? Yeah. Perfect timing. I'll meet you there. Okay, thank you, sir. Okay, I got 20 minutes. Enough time to go take a shit and go see the roofer. I have to admit that was a good tasting tuna and a good salad. I've never had a poached egg on a salad before. Let me tell you something. You got to do it. Food has just become more tasty for me. Used to be bologna sandwiches and hamburgers. Maybe some homemade chicken noodle soup. Now it's salad with radishes and cucumbers and feta cheese or goat cheese and the salad is romaine lettuce and spinach with a real good vinaigrette. I was offered a donut today and I turned it down. Reba McEntire. I think it was Reba McEntire. When she went out to dinner, she'd only eat half of her food. So this shot of almond milk goes to Reba McEntire. Used to be a full glass. Now it's just a shot. Okay. I'm really pleased about that trade.
Below 190, so we topped out there a couple times. Actually, if you want to get real granular there, another time just a few days ago is about where we hit the high point, then just rocketing upward and breaking through that resistance point. So now we're seeing that prices above all our moving averages that we follow, they're all tilting upward here. We crossed above not only this resistance point, but also that blue line there, which is our yearly linear regression line. That's our line of best fit based on closing prices here, and that also gives us an important point to watch to the upside. If this move continues to the upside, that could be a resistance point that you could start looking for some potential consolidation or use to set a price target there. So that comes in near 212.36 right now. When we look at RSI, like Tom mentioned earlier, we can see that there's kind of a somewhat triangular shape here. We've got a very mildly sloping downward red line going across those highs. And it's interesting, too, because Amazon hasn't spent a ton of time in the overbought region during this past year here. So we also have a green upward trend line there, so it gives us this kind of triangular shape. We're above the 50 midline, but now today we are just on the verge of invalidating that trend line, the red trend line, and also pushing into the overbought area. So kind of an interesting development here that we're crossing that threshold as price continues to kind of break out of this range that it was in here. So in a trending market, a move into the overbought area typically regarded as a sign of strength here. However, based on past history, this has been a situation where it's resulted in a slowdown in the past. So traders have to weigh their choices here carefully as we continue to kind of digest this move to the upside, Tom.
Rick, you just made a point that really caught my attention, which is this. Amazon has a history of being overbought and oversold, but when it gets overbought, when it gets up around that 70 level, some traders can get very frustrated because the RSI can stay up there for what feels like an eternity. Amazon doesn't seem to do that. If you look at the last year of the chart, when it gets overbought, it stays there a very brief time and comes down. Is there any interpretation of this tool in terms of how long the duration it spends overbought before it backs off?
Well, a quick move into that overbought area and then an equally quick move below that overbought area would be a bearish signal here. So, the move below that level is something to watch out for. That could be a more bearish sign developing here. When, what Kevin said is absolutely right, though. Stocks can stay overbought for long periods of time. It can be very frustrating if you're viewing it, looking for more of a mean reversion trade here. So I think it'll be key to watch and see if we, first of all, hang on to this overbought area. You got to wait for the close with these situations, too, because intraday crossovers are common. You can get faked out, and you can be, once again, very frustrated if you enter a trade based on some kind of premature data here. So consider what you're doing carefully when you do this. Don't look at things in a vacuum. It can be helpful to use multiple indicators to inform your trading. Just relying on one thing, not really a best practice.
Yeah, and Rick, Kevin and I, we look at the RSI a lot. It's for me one of those, I'm a simpleton as far as charts go. But what I do is I widen out my range on it. So the default for an RSI on the platform is 30. Anything below 30 is oversold. Anything above 70 is overbought. I put them at 80 and 20 just for that reason that Kevin mentioned. sometimes they can stay overbought or oversold for longer than maybe you expect when you see those parabolic moves. So good breakdown here of the charts in Amazon. Kev, let's get into a discussion about Amazon, because they've come out, they got their Prime Day coming up, July 16th and 17th also, and then they're rolling out a storefront to fight with these Chinese retailers, Temu and Shein. I mean, I guess they're selling this really, really cheap stuff, and Amazon wants to fight back.
Yeah, you know, Amazon, to their credit, continues to evolve and find out what the competition is doing and compete. And I think the fact what they're doing with some of their retail shops, or you know, getting more brick and mortar stores, is part of their evolution. So yeah, I think it's very aggressive. Now that said, the stock has run a long way, Tom. It's taken in all this information. Even today, it's having an extremely strong day. So the trade I was looking at in this case is something in the bearish camp, just to deal with the fact that it has gotten overbought in the past. The RSI have gotten over 70, but it hasn't spent a lot of time there when it does that. So what I did, Tom, I went out to, by the way, it's got an August 1st earnings day, so I wanted to stay ahead of that because that's its own event that I want to trade. But in this case, Tom, I went to the July 26th expiration, bought the 195 call, and then go out to July 5th, just next week, and sell the 190 put. Yeah, sorry. Bullish on the brain. Bought the 195 put, sell the 190 put. I do that. It was trading about a $5 credit time. Now it's down to about $4.15, $4.20 debit. So looking at this, it's a way to play a bearish play for the next, what, as of Friday, it's 4 weeks, Tom. So this is a July 26th, July 5th put diagonal in Amazon, trading right now just slightly over $4, Tom. And so Amazon having a good day today and rallying. You're getting this cheaper and cheaper.
Yeah, and as you're speaking, Kevin, the stock went back to all-time highs, and that's why the price of this put diagonal decreased, because you're moving farther away from that 195 strike to the upside. So let's break it down. July 26th weekly series, 29 days to expiration. Buying that 195 put, sell the 190 put in the June or the July 5th weekly options that expire in 8 days. Paying roughly, we've got a $5 debit on that risk profile. It's trading about $4.10. So you get it cheaper when looking at this one, but the debit you pay is going to be the risk. In this case, if you pay $5, it's going to be $500. If you pay $4.10, it's going to be $410 to the downside. You break even about 194 because you're going to have some duration on this one. You've got some assignment risk on that short 190 put over the next 8 days also. But the idea here is, Kev, that you're taking a bearish stance. You know exactly what your risk is on this potential trade, but you don't need a massive move to the downside. Maybe you just need a little bit of a correction here as the stock's hitting all-time highs, overbought on a technical level. So you're not looking for, you know, a fall down to 175, Kevin. You just want it to kind of float down towards 190, right?
Yeah, and you've got 3 weeks from July 5th to July 26th, so you do get to extend some duration and chip away at that net debit. So yeah, this is a trade that gives you about 23 short deltas. It's collecting theta. It'll probably not collect theta until it moves a little bit closer to that 195 strike as it moves away, because both are out of the money now. But this is certainly a bearish play using the diagonal, where you don't have to be as exact in terms of the 190 strike. As you can see, as it gets towards that 190, you probably want to make an adjustment, because the longer you do duration on a diagonal, the closer it is to being wider than the price of than the strikes you're using, Tom.
Yeah, and as you get closer, as Kevin mentioned, over the next week, maybe some rolling or adjusting might need to take place there. That creates credits, increases potential profitability, reduces risk also, but you want time decay or theta to take hold there and collect some credits on those potential rolls with markets open, that you've got that liquidity provided. All right, good look at the put diagonal. If you think this thing's maybe overbought a little bit and you expect it to grind a little bit lower, you don't need a massive move though. on that one. All right, let's take a quick break. When we come back, we're going to talk another big name. You might have heard of it. It's called NVIDIA. Stock's still up 150% so far this year, even though we've seen some weakness since hitting all-time highs just 1 week ago above 140 bucks a share. Stick around. Fast Market's coming right back.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Here on the Schwab Network. Before we take a look at NVIDIA, let's bring in Alex Coffey. He's a senior equity contributor here on the network. Alex, we've got some consolidation here in equities at or near all-time highs for the S&P and NASDAQ 100, but it seems, I told Kevin, it just seems like we're waiting for PCE data and just kind of floating into the end of the quarter.
Yeah, it's sort of, to me, almost seems like institutional flows meet light volume because you have kind of nothing really happening, but clearly there's some rotation under the surface, and you're getting these big kind of vacuums within the market where we're moving, 15, 20 points at a clip, but then it sort of eases back towards unchanged. And this has happened in both directions. So, Tom, I think it's been an interesting week, but volumes have been so light. I always look at E-mini S&P futures volume as sort of a really kind of basic gauge for volume for a week, and we haven't been over our 1 month volume average really all week long. So it's been a quiet week, but all things considered, I think it's been an interesting week because neither the bullish or the bearish camp seems to be able to get anything going with real conviction one way or another.
Yeah, you think volumes are light this week, Alex. You wait till next week when we've got that 4th of July holiday, half a day on Wednesday of trading. Markets close at 1 Eastern and then off on Thursday. I don't know who's going to be in the office besides you and I working our butts off, but Alex, when you look at the dollar, I talked to Luke Groman this morning on the Futures Show. He follows the dollar pretty closely. We've seen it move higher this week, down a little bit today, but hitting those 106 levels, nearly 2-month highs on it. I mean, do you see some more, pressure for equities if that dollar reverses and continues higher here?
Perhaps, but also at the same time, it depends on why it's moving higher, Tom. I'm largely in the camp that the U.S. dollar has more tailwinds than headwinds as we go forward, because really the only scenario I can paint where you see prolonged weakness in the U.S. dollar is the rest of the world is more robust economically than the U.S., and it's just really hard to envision that at the moment. Whether or not it looks a little bit less rosy here, and it clearly does. The Bloomberg Economic Surprise Index is at its lowest point in the U.S. At any point in the last 5 years. The city version of that is at its lowest point since, I think, 2022. So clearly we're seeing softening, and you see that reflected in various data points this week, continuing claims as recently as today. GDP has certainly fallen off of a cliff from where it was at the end of last year, but the picture is far more bleak in Asia and in Europe as well. So Tom, I guess if the dollar continues higher because things are getting worse, it just depends on how much worse, because I still think that these mega cap tech names, which are so important to the U.S. stock indices, are seen as safe havens alongside the dollar. So you could see a world where maybe the broad market in the U.S. is weaker, but these big mega caps still are sucking up capital and still hold up the indices.
Yeah, and I always think like if the dollar does make those highs, maybe initially it hits equities, but then they start absorbing that, waiting for the pullback. So maybe some free airspace for equities moving higher again if it does fall. All right, great stuff. Thanks to Alex Coffey, he's the host of Next Gen Investing. And now let's bring in Kevin Green, Senior Markets Correspondent, because we're talking NVIDIA, Kevin. Ever heard of it? Because this stock has been taking a hit since hitting those all-time highs just 1 week ago. And I told Kevin Hanks earlier on the show that, hey, maybe it's just down due to the end of the quarter, maybe some rebalancing going on in this name, because it still seems like, their model hasn't changed and, their trajectory looks pretty good here.
It's still a heck of a run too, though, Tom. So at the end of the day, we are seeing a little bit of a pullback, maybe a tight little rotation that's taking place within the industry as a whole. And then obviously with Micron's earnings yesterday, it didn't really shock the street to the upside. So right now, I think we're seeing a little bit of a cooling off period. But when you go to the fundamentals of this company, it's still very strong. I mean, when you're looking at the data center revenues when it came to Q1, they saw growth of 400% on a year-over-year basis. They continue to roll out new product offerings like the Blackwell announcement, and now they're pretty much 4 generations in from the H100. So their refresh cycle is really boxing out a lot of their competition as well. So I think right now we're just going to wait until we have earnings season, and it's not so much waiting for what NVIDIA reports. It's going to be what Meta reports. It's going to be what Google reports. It's going to be what Microsoft reports. And if the CapEx spend remains at these particular levels or increases, the market's going to automatically kind of translate that into top line growth when it comes to NVIDIA. And I think that's really been the driver of this name over the last couple of quarters.
Kevin, when you look at what NVIDIA is doing, one of the reasons this stock has done so well is because every time they bring out a new chip, it really sets the bar even higher. And they're currently using the Hopper chip. They're about to start shipping the Blackwell. And what does Jensen Huang do? He brings up the Rubin chip that's coming in 2026. He's got one waiting on the horizon that's even stronger. They keep raising the bar, pulling away from AMD, pulling away from any type of competition. We keep waiting for competition to show up. We keep waiting for valuation and decelerating growth to show up. Kevin, it's not showing up because they keep raising the bar and then hitting that bar, Kev.
Yeah, I'm right there with you. I mean, it's going to be an odd refresh cycle that we are seeing with NVIDIA. Traditionally, they will wait around 2 years to 3 years to kind of refresh these GPUs. But now we're seeing a refresh cycle when it comes to announcements at around 7 months, 8 months, which is remarkable. But the question goes is if they are going to potentially cannibalize some of their business as well. And does that make a lot of these bigger names, these mega cap names that are spending this money, do they hold off and wait for the next best thing because they are bringing products to market too early? And I think that's a really key question there. And then also, how long is this CapEx cycle going to last here? This type of growth rate is not going to last forever, and competition will get into the space. So margins for pretty much any hardware product that we've seen over the years should also contract as well. That's my biggest concern, is if we see some of these bigger names starting to pull back and say, you know what, we're going to wait until Rubin comes out. Why get Blackwell? Why get an H200?
Yeah, Kevin and I talked about that when they announced that new Rubin chip. I'm like, what are they doing? If I was, using my CapEx spend or a company trying to buy these servers and these chips, I'd be like, I'm waiting. I want the better one, right? Do I need AI built in right away? I mean, you have to start wondering if CapEx spend starts to pull back a little bit as they wait for the next innovation in the space. All right, great stuff, great breakdown for us. That's Kevin Green, Senior Markets Correspondent here on the network. But Kevin, talking about this stock, you know, people forget, you know, they're like, oh, Nvidia's down. What's going on? What's going on? It's still up 151% so far this year. So it's had a good run, maybe overbought from last week when it hit 140 bucks. So I looked at two different strategies, Kev. I want to get to these example trades because we got two different ones. They're both directionally the same, Kev, but they're two different ways to play it, two different risk setups, two different risk profiles, but they're directionally the same. So I think this is a good lesson for our viewers here. So the first one that I'm going to take a look at here, Kev, is buying a call butterfly that's skewed, right? If you think this stock's going to rebound, you give yourself a little bit of duration. I looked at going out to the July 26th weekly cycle on this one. You're not going to have any earnings. That's not until the end of August. But going out to the July 26th weekly cycle, you're giving yourself a month in this position. Buy one of the 124 strike calls, sell two of the 134 strike calls, and buy one of the 136 strike calls. So you're buying, in essence, a $10 wide bullish call vertical embedded with a short $2 wide 134, 136 call vertical to offset some costs. You're paying a $3.30 debit for that, Kevin. You've got a break even of 127.30 on this bullish trade. So you need this stock to basically move up only about $3. That's less than about 2% basically is all the move that you need on this. And anything above that break even is because we made it skewed or a broken wing call butterfly is profitability, Kev.
Yeah, from the call side, $10 on the call vertical, $2 on the short call vertical. You can see the big graph there of profitability in that on the call side. So that's just one day that if Nvidia were to go on one of their runs, remember you're using that short call vertical to finance the larger long call vertical, and that insulates you from any losses on the upside, Tom. Pretty, that's one way to play an upside. Use the butterfly, but use it so it doesn't come all the way back down.
Yeah, and that's a strategy that you need to move to go the stock to go above that 127.30 break-even levels to start profit. So you do need to move higher, even above the 136 strike call within this call butterfly. It's more than a double as far as profitability. The apex of profitability at or near that short strike of the 134 strike that you sold two calls on. So keep that in mind. But this is one way to play it bullish if you think it's going to return to the rally state that it's had throughout the last year or so. But Kev, the other strategy I looked at, a little bit different, but directionally the same. You want it to go up, but you're giving yourself a cushion on this one, Kev. So I looked at that same July 26th weekly series, so 29 days to expiration, and I'm going to sell a cash secured put as an example here. And I'm looking at the 120 strike put on this one, so basically about $4.50 out of the money to the downside, but I'm collecting a credit on this one. It's neutral to bullish in stance. I'm collecting roughly, we've got a $4.70 credit on this one. It's trading closer to $4.50 right now, but the credit you collect is your potential profitability, and it takes your break even if you collect $4.70 down to $115.30. So basically giving yourself about $9 to the downside on that break even. Now the risk on this one, unlike the call butterfly where the risk is what debit you pay, the risk on this one is about $11,500, and that if the stock somehow went to zero. But you'd have to buy the shares if it goes below 120 at expiration, or you get assigned on this one, Kev. So this is a little bit different, Kevin, but it's bullish, but you're giving yourself a cushion to the downside.
Yeah, the 120 put is the key strike there, but remember, you buy it, the 120 put plus the credit you took in, whatever that is, Tom.
Yeah, just a different way to play it. You got more risk, but you're giving yourself a cushion, better probability of success on that one also. So good look at two different trades and two different ways to look at this if you're bullish on Nvidia on that one. All right, that's going to do it for us today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. All so you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. So she had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. Alex, we're seeing some green across the board today. I would say unchanged mostly here outside of the Russell, but a green session nonetheless. It's been a long week and it's only Thursday.
Yeah, a little deja vu. Long because it's been kind of slow, but there's still like those whippy kind of pockets of volume where you see big moves and then they sort of work their way back towards unchanged. I'm not making a ton out of today. We've been a lot lower, we've been a lot higher in basically all of these indices. And I'm kind of expecting more of this for the next week and a half as we get through the holiday. The summer's really fully in effect now. There's not a ton on the calendar, no earnings, and the market just doesn't seem to have a real feeling of conviction one way or the other. Buyers come in on the dips and sellers are coming in on the rallies.
Yeah, and of course this week, I will say that I'm like historically, I feel like the week of 4th of July is relatively slow, so of course that's next week, but this week does close out obviously the month and now the first half of this year. So excited for what's in store in the back half of 24. I can imagine it'll get interesting as we come upon the election in the US here. But as always on this show, we will kick things off with upvote and downvote. We'll chart and trade those upvoted names. FOMO today, we are looking at Micron, which was able to beat on its overall quarterly report, but clearly was not enough for the street as it's dragging on most of these chip stocks today. We will also be looking at a Bitcoin mining stock, Hut 8, as it's jumping in reaction to news that's being added to the Russell 3000. We'll close things out with under 30 here. We'll look at Walgreens Boots Alliance, which is heading for one of its worst days or lowest levels seen since 1997. So that is a brutal move to the downside in Walgreens today.
Yeah, more pain for Walgreens investors. It seems like it's been a long few years for really that space, but Walgreens in particular. So we'll get some thoughts from Jeff on that later on in the show. Let's do upvote, downvote, though, not endorsements, not recommendations. We'll talk Micron for FOMO, but we're going to do the other name that we kind of say bookends the end of an earnings season. That's Nike to kick things off here. Jenny, we're there. The end of one season, which means that the beginning of another is just a few weeks away.
Yeah, and maybe when it comes to Nike, it could be at the end of, we're starting to see the light at the end of a very, very long tunnel of disappointing sales. So the report is expected to wrap up what's been a pretty lackluster year for Nike. They've been plagued by these slower sales in their overall key markets, sluggish product innovation, and rising competition, as well as cooling consumer spending here in the U.S. So the street is projecting that overall revenue will be pretty much flat from where we were a year ago at around $12.9 billion. Also expecting to turn a profit of around 84 cents a share. That would be up from 66 cents reported a year ago. But overall, it seems like I was looking at some of the analyst commentary into this report, and I cannot say it sways one way or the other. But there's an air of caution. Jeffrey said that they are definitely taking a cautious overall stance as a result of the overall brand momentum, they said, or lack thereof. And Wedbush also is not expecting any fireworks after earnings, particularly because they don't think that Nike's management will be able to be particularly upbeat about their guidance. So it's been an interesting retail earnings environment, as we've seen a lot of these actually shoemakers like On perform phenomenally. Well, also, though, there's been some disappointment in those particular areas. So it's not like it's been necessarily the clear winners. So now Nike finally will get answers on how this overall, the largest athleisure retailer is faring.
Yeah, I think this will come down to, is it better or worse than feared? I think there's fear right now in Nike. You see it in the kind of amount of volatility in the options. You see it in the stocks, the way it's trading. This could be a situation where the numbers aren't great, but you see the stock rally simply because it could have been worse. And I know that isn't necessarily the best reason to buy into something for a long-term trajectory, but in the near term, I think that's what the market's hoping for.
I totally agree, and I think it's why that actually we're seeing a lower move today in Micron after its earnings, is I think that in that situation, the street is thinking it could have been better. So I think there's always a good gauge on expectations, and that's somewhat, I think, definitely based into the reaction here. But next name today is a name we don't discuss often, but that is International Paper, as it did slump after Suzano did say it will not be pursuing a transaction that is involving International Paper. According to a statement from Suzano, after negotiations with International Paper regarding this potential transaction, the company has reached what it believes to be a maximum price to generate value for the company without engagement from the other party. So late Wednesday, this news was further announced. We also have seen no engagement back from IP, so many are saying that overall this seems like a dead deal at this point. No financial details of the offer were necessarily disclosed, but according to media reports we got in early May, Suzano did approach IP about an all-cash acquisition that was worth almost $15 billion. That was neither confirmed by either company, but that was the estimated value. But I think at this point that we could say that based on the reaction, this was received as maybe a negative, but also this name did jump on the report. So it's like the giveth and taketh of these potential rumored M&As.
Yeah, I think that's it. I mean, I don't think there's much to overthink here. You see the jump on this news, and the news isn't going to come to fruition. The repricing takes place. So back to maybe more of this, which is what you're used to with International Paper, more of a sideways type name, but we'll see what happens. Also, might not be the end of this story, just the end of this chapter of it.
Yeah, and obviously we can also see things change. A lot of times with these negotiations, companies will come back and it'll end up working out. As of right now, though, it doesn't seem that it's going to be that way. Now, next name today is RH, and quite a different chart. This name's now pulled back about 20% this year and about 14% so far in the month of June. But their chairman and CEO is perhaps using this as a buying opportunity, as we did get reports that Gary Friedman completed the purchase of 10 million of the RH shares at a price of around $216 a share, representing around 46,000 shares roughly. With this purchase, now his total ownership is around 25% of the overall outstanding shares of RH's common stock. This, I may have to say, had some disappointment after its earnings, and the analyst community is fairly mixed. There's 7 buys, 12 holds, 1 underperformed, but no sells. The average price target right now, though, is $302 a share. So that does imply like 30% upside, and a nice move higher today.
Yeah, it's exciting, I think, as you're seeing insiders selling elsewhere, but this chart looks a lot different than a lot of those names. Pretty standard, right? Buying low, I guess, but this is a really small purchase for the size of the position that he holds. He holds just over, let's call it 5 million shares, 5,050,000. This is less than 50,000 shares, so I mean it's less than 1% of what he already had, but it is meaningful, showing that the leader of the company, the largest shareholder of the company, believes in enough to increase the position a little bit.
I know, I always am surprised when you see this much of a move, because I kind of looked at it as like, yeah, this is like chump change for someone that has 25% of the overall outstanding common shares. But last name today here, we are looking at Palo Alto Networks. Now, Palo Alto today, Bear did maintain its outperform rating with a price target that was raised to $360 a share from $340. Also, a lot of analysts have become a little bit more favorable on this space as of late. I was reading a B of A note from earlier this week that highlighted the overall adoption of cloud computing has increased. Obviously, the need for cybersecurity as applications now consist of these third-party microservers. But this migration does cause a lot of growth opportunities, especially for these cloud-native application protection platforms, or CNAPP as they're known. One of the largest players in this space is Palo Alto Networks, and there's not really any formidable competitors either. So they see that as obviously upside in terms of its more long-term story. But we're up about 5.5% here, and this name is still very much loved. There's 39 buys, 14 holds, not a single underperform or sell in this name.
It really does seem like this is the exact type of chart that you'll see in a bull market, right? We spend all the quarter talking about how great this earnings is going to be, and then it just gets whacked down on earnings. And then we wait a couple weeks, and then we spend the next few weeks building up for the next quarter. It's almost as if we have no memory of the bad news, because that was a massive move, and it's basically all gone now, despite the fact that it was a pretty disappointing report. So in a bull market, down moves, opportunity, and that's what you see in Palo Alto Networks.
Yeah, this name has made two, I believe, or if not three now, massive moves to the downside, and it's somehow been able to recover. So
big move lower, then stair step back up, big move lower, stair step back up.
I guess that makes it now an interesting earnings mover, because for a while it was like consistent. Now it's like, I mean, well, anything goes. You can see it just absolutely sell off as we have now over the last several quarters. But we will leave it there for this segment. We will be diving more into our upvoted names. Palo Alto Networks is one, as well as Nike, of course, ahead of their earnings due out today after the closing bell.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's time for our Chartmaster segment. So joining me, as always, is our Chartmaster himself, Rick Ducat, to break down the technicals for us. We will kick things off with Nike ahead of its earnings. This is like pretty much the last of the earnings. I know we keep saying that, but it's finally here. Nike's reporting today after the close. What are we watching?
You know, the nice thing about the end of earnings season is the new earnings season is almost around the corner.
That's
here.
how I think. It's like it's always earnings season if you think about it.
But you're absolutely right, though. This is kind of the end of the season here. And if we take a look at our chart, we can see that Nike has been in kind of a triangular pattern in the shorter term. We can see we've got two white trend lines here, one going across these highs and starting shortly after we had a very severe gap to the downside after one of these earnings events here. And it's counteracted by an upward sloping trend line going across the lows here. So this thing can move on earnings, so you know, beware. And we can also see that we had a significant bottoming price here. That was our low point that we reached before we had this earnings from a couple quarters ago, and then we held the line here during the set of lows that we saw back in March. So now we can see that we're in a situation where price is kind of struggling to stay above our moving averages that we follow here. We've got our yellow 21-day and our orange 63-day exponential moving averages. They're basically right on top of each other. Clustered moving averages suggest that there is not a strong trend direction either to the upside or the downside, which makes sense. It kind of reflects that we've just been moving sideways ever since we had our last earnings event to the downside there. So we can see that we've got a notable confluence point to break above. It looks like we had a little bit of movement beyond the boundaries in both directions here. So we could be getting primed for a breakout. Low volatility is often a precursor to high volatility. So be ready, you know, have a trading plan in case we do get one of these breakouts in either direction, Jenny.
Yeah, and obviously that's very possible, especially I think given the low bar set forth for Nike here. But now as far as momentum of this recent, I would say we're trying to revive an uptrend, but it's been more of a downtrend. What are you seeing as far as RSI?
Yeah, the prevailing trend is more toward the downside here. Even though we are able to draw this upward trend line here, you know, we're down on the year. We're down from the highs significantly here. So what do we do when we look at RSI? We can see that, like the discussion that we just had talking about how kind of price is moving sideways, RSI is mostly reflecting that here, kind of bouncing around this 50 midline, not really giving us a strong lean one way or the other. We are below that 50 midline today, though, just a point or so below it. So maybe a bit more biased toward the downside in this situation. And indeed, we are closer to the lower edge of our triangular pattern here. So, you know, maybe keep an eye out to the downside here based on this. If we start to fall off more, especially if we start to break below this trend line here, that could be the doorway to further downside and to a test of this green line that represents our low points near the 89 level here. But, you know, RSI not really giving us any kind of strong signals at this point.
Okay, so RSI not doing much for us here, but as far as some levels now, you're watching obviously into this print. What are you seeing? I mean, like, what jumps out to you as far as support and resistance?
Well, oftentimes when we include volume profile on our charts, it reveals important information. Case in point, we've got our thick red line here. That's the volume profile point of control. It's the area of heaviest trading on our chart. And you can see that mostly it's centered, the price action is centered around this level in the recent term here. Turns out it's also almost exactly on the nose with our two moving averages that we are looking at here. So this is a key point that price needs to overcome as we progress through this trading day. That comes in right around 94.65 or so. Right around that area is where all these three things come together. So that's an important point to clear. If we do keep moving further to the upside, we kind of topped out here a couple times near 98. But the level that I and likely many other traders have their eye on is this gap right here. The pre-gap lows near 99.76, just shy of 100. That would be a notable area to clear, or at least to fill the gap. To the downside, like I said, we've got our trend line, then our double bottom support near 89.
Okay, so lots to look at here, and I will say that it's fairly muted right now as far as its overall price activity, up about 0.2%. So with all this in mind, now Alex, walk us through a more neutral to bullish leading example strategy, just maybe looking to see some recovery.
For most traders and investors, the first option strategy that they're introduced to is the covered call. If it's not the covered call, it's likely the cash secured put sale. And that's what we're looking at today in Nike. We talked about the narrative around Nike being kind of a fearful one that is uncertain. Using that uncertainty kind of to the advantage of the trader, selling a put in elevated implied volatility around this event could produce an opportunity to either become a shareholder at a lower price or simply collect the credit overnight here and utilize that as the potential profit. So the recent lows for the last year are around 88.66, I believe, and so the 88 strike is the strike that I selected here below that year-to-date low, below that yearly low. And so for $1, break even be 87. It does have $8,700 in max loss, but that's essentially just how much it would cost to actually be put the stock and be assigned those shares at a break even of 87. So you wouldn't do this strategy, Jenny, if you weren't potentially willing to become a shareholder, or at least take the risk on of a shareholder of 100 shares of stock at 87. But if you were, this expires tomorrow. It reacts to earnings essentially, very binary, but a chance to make $100 or become a shareholder at $87 a share.
Yeah, but I think a good way of explaining, of course, you have to be comfortable with that potential ownership, but obviously that's the risk you'd be willing to take on if you were looking at this for example purposes. But next name today, Palo Alto Networks. Now making a nice move to the upside, 5.5% here. This name, though, has been, like as Alex and I were saying, like the earnings move disasters we've seen in this name. I mean, it peaked out at around 380, just below 381 a share, and it's been choppy ever since.
Well, it's easy to see where the earnings event happened on this chart here. Very obvious, very large, notable decline there. Happened shortly after our yearly highs that we saw near 380. So that was a tough move for the bulls here. We did bottom out shortly after we had that earnings event, though, near 260. We haven't tested that level once again, and we saw a pretty good rally to the upside after that point. That gave us this area, 327.57. That was the high, that red line that we were having our eye on as a potential range. We tested it a few days ago, then boom, big breakout to the upside today, and that's why we highlight these levels. You know, I drone on about these things over and over again sometimes. This is why, because when you have one of these notable resistance points here, oftentimes, you know, around gaps or some various other indicators, the reaction can be quite energetic once it starts getting broken here. So overall, we're more geared toward the upside. We're above our moving averages. The moving averages are pointing upward, and we're breaking out above resistance. So kind of an exciting day here.
Yeah, it is kind of an exciting day. Not really any like major news catalyst linked to Palo Alto Networks either. But that's the thing about these tech names, is they can move like this without real major news. So as far as momentum goes, are we seeing any degree of momentum now match this nice upward price momentum?
Momentum is also showing a noteworthy sign here. You know, first of all, you could argue we've been trending upward for a while here, and now we're in a situation where we're rising above our previous peak on the RSI and making new relative highs. Now, we're also crossing above the overbought area, that 70 threshold. That's commonly regarded as a sign of strength in a trending market here. So if we were more range bound and we were overbought, then you might be more interested in kind of a mean reversion trade. But in this case, this is more of a sign of, as I said, of bullishness to the upside here. So keep an eye on if this move holds. If we do cross above that overbought area, it's not unheard of for it to cross back below it before the end of the trading day. So wait for the close if you're trying to base decisions on these technical indicators. Fake outs are common. It can reverse quickly.
Yeah, and I will say that that's obviously been very true as far as like reversals of trends, especially in this chart. But as far as now support and resistance levels you're keeping on your radar, we have a good ways away until earnings. But right now, obviously, things can move without earnings.
That's true. And you know, when we look at support and resistance here, the same gap that I highlighted earlier now becomes an important area to watch here. So first of all, we've got this small volume node here near 340 that lines up with this period of consolidation back shortly before we had that disastrous earnings event here. But now we're finding ourselves pushing above that point, so the next mark to watch is the pre-gap lows at this pink line here, just shy of 360. It's 359.93 if you want to get really, you know, on the nose there. But so around 360 would be the mark to clear, or at least to fill the gap. To the downside, we've got our old highs right here, this mark near 327.57, this red line here. So once again, it would not be an unusual situation if price pulled back and retested this support level. I'm not saying that's going to happen or anything. That's just a common situation to look out for. Some traders use that as a buying opportunity when it does happen. If we do retreat back below support, 21-day EMA comes in near 315.63.
Okay, so yeah, great charts today, Rick, and I think great insight on two names that have seen A degree of weakness as of late. Palo Alto Networks, though, not ahead of its earnings. Just moving today on overall optimism in this tech space. But as far as now trading this name goes, Alex, walk us through your thinking. I mean, leaning into, say, an optimistic scenario again.
Yeah, we talked about next week maybe being a quieter week. Sometimes that week can be kind of an upwards drifting week, just simply because there's not a lot of eyes on the screen, especially with the holiday disrupting things in the middle of it. Maybe you see upside continuing after the nice move today, going into next week in Palo Alto Networks. It's an option strategy expiring on the 5th of July, so just next Friday. And we're looking at buying a call vertical, the 345, 350. This is basically at the money to slightly out of the money. And we're looking to spend around $1.50. Could be as high as $2. The stock has moved quite a bit since I looked at this before the show. That's fine. Anything up to $2.50 would be that 1-to-1 risk reward. Of course, the less that you spend, the better the risk reward. So in this case, at $1.50 debit, you'd be risking $150 with a chance to make $350. Break even, simply take the debit, add it to your long strike. So in this case, that's the 346.5 mark based off that $1.50 debit. Need the stock above 350, but you don't have that resistance point that Rick talked about until in the 360s. So not a lot of technical resistance overhead, at least till 350. So plenty of runway for this move to continue if it was to.
Yeah, like you said, this name also has been moving all over the day. So one that's definitely capable of making these volatile swings. But we will leave it there for our Chart Master segment. Now coming up next, it's time for FOMO. We are talking Micron as it heads towards one of its worst days in nearly 2 years in the back of what was objectively a strong report. So we'll dive into the details and what perhaps the street is reading as negative coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's time for FOMO, and we are talking all things Micron. Objectively, one of the biggest stories of the day, moving to the downside of the back of its quarterly update. So here to break down what perhaps disappointed the street, I'd like to welcome in Diane King-Hall, Senior Markets Correspondent for the network. So, Diane, I've looked at this name a few times today already, and I have to say it's difficult to find what the weak spot was, what really was the key catalyst of disappointment. I mean, these were good numbers.
I know. I mean, if we look at adjusted EPS, they beat there. If we look at revenue, they beat there. It was a variety of metrics and even the forecast. But that is one of the challenges. That's what Wall Street is. It seems like a little disappointed in. The forecast was in line with expectations. So it's kind of like the theme of the not what have you done for me lately, but what will you do for me next, and what will you really do for me next. So just quickly running through the numbers in case anyone missed them. Adjusted EPS was 62 cents a share. That was better than the expectations for 50 cents a share. Revenue was $6.81 billion. Again, both better than expected. The forecast, they're expecting adjusted EPS of $1.08 on revenue of $7.6 billion. The street is looking for $1.05 on revenue of $7.6 billion. But again, it's that kind of they're looking for that big multiplier when it comes to AI. Now, look, the CEO highlighted AI and the chips that it's been relying on, those high bandwidth memory, HBM is what they call those for short, that power the AI systems. The company said it's sold out of those chips for this year and next year. So, one of the problems is clearly not demand, but supply. But given what they said with regard to their forecast, that's what it looks like. That's one of the issues. Swiss Quote Bank said, quote, anything less than fantastic is not good enough when your share price got multiplied by 3 in just about 18 months, end quote. And, in terms of where the stock is year over year, it's up basically double.
Yeah, Diane, I was looking at basically it just gave back the last month of trading. It's not like it's crashed. I know it feels like it, oh my gosh, we have a semiconductor name that's in the red for a day, but we're still up 1% over the last 21 trading days. It's down, 4.5% for the week. Are analysts jumping ship at this first signs of maybe the tailwinds fading a little bit, or are they doubling down?
It seems like, in some respects, more doubling down than jumping ship. Yes, you have some naysayers, but it's definitely not largely throw the baby out with the bathwater kind of thinking here. When you look at some of the analysts, Goldman Sachs sees this pullback as an opportunity to add to positions. Piper Sandler says, quote, at a high level in markets for MU Micron, continue to improve with demand increasing and supply still relatively tight. We know supply is tight for Micron. Piper Sandler saying we envision those conditions will continue to persist at least through the vast majority of 2025, and nearly about a half dozen brokerages have raised their price targets. So again, it's clear that the analyst community is not out on Micron. Now, Bank of America did lower its price target to 153 from 155, but it maintained a buy rating on there. So it looks like it's some measured optimism when it comes to how analysts are viewing Micron. Now, Micron did have a little bit of weakness. They talked about, some weakness within smartphone and PC, but there was obviously major significant growth in AI.
So do you think that a lot of this is just the expectations had become too advanced at this point? Because I have to say that it's encouraging to me that this has been the encouraging case, I think, for Micron all year, is that this high bandwidth memory aspect of their business is in such demand. They're sold out of those products through 2025. And that is an objectively good story, no matter how you play it. But again, it just didn't seem to matter as far as like this earnings move.
It does. It seems like that, and it seems like some of it, especially with this, kind of last inning of earnings that we're seeing with some of the players that have come out, that there is a knee-jerk reaction that if they didn't beat big, then fine, let's sell. It likely, we could see this moderating in, weeks to come. It does seem more of like a knee-jerk reaction, and maybe some of it's algorithms as well. If you don't see big beats, you're not going to see a big jump in the share price. And by the way, obviously the share price is up big year to date.
Diane, as kind of a counterpoint to that exact point Jenny made, though, if you're sold out for the next 2 years, how does your story improve?
Oh, that is a good question. Well, they'll have to, come up to the plate with filling that need, filling the supply. They'll have to build up these data centers and, find other ways to meet that threshold, or they will have to return to, some of their old verticals, whether we're talking about PCs and smartphones and the demand in that sector. So we could see Micron handling and having to do a pivot in that respect.
Yeah, that's a good point. I think that's a good counterpoint to I guess my thing about them being sold out. I guess that doesn't really matter because that doesn't excite growth. And I think that's more of the story of what's next, not what's in the rearview mirror. And I can definitely understand that, especially when it comes to AI. But great discussion as always, Dan King Hall. Appreciate the insight on Micron today. Pacing for one of its worst days actually in almost 2 years. So now when we look at trading this name, Alex, given the fact that we're looking at it on a pretty major dip, although I have to say that as far as like the recent AI trade, I feel like it's been NVIDIA, obviously, and recently Micron has become a lot more interesting. So even with today's move to the downside, it's amazing we're still up almost 7% this month.
Yeah, it feels like there's probably going to be buyers that step in. Is there enough buyers to drive this back to highs in a short period of time? Possibly, but to get to highs, you have to stop going down. And so rather than trying to look for this V-bottom, U-turn kind of price action, I looked at a neutral to bullish strategy, Jenny, in which we're just simply selling a put vertical below the market into the weakness. And so right now the stock's down $9. I would say this is kind of mid-range for the day for the stock, which is a little bit over 6%. Looking at selling the 125, 120 in the July monthly cycle. So that's July 19th. It's a little bit shorter term than some of the trades we look at, but also, of course, longer term than both the two that we just looked at in the last segment. This is about 3 weeks from tomorrow. $1.25 credit would create a 3-to-1 risk reward. You'd be risking $375 to make $125, but your break even's down at $123.75. So you have almost another $10 of cushion to the downside, a little bit over, let's call it 7% or so to get down to that level. So Jenny, with this, it's less about trying to find the bottom. It's less about trying to say that this was a great report or a bad report or the stock's going to turn around or it's going to go lower, but rather just saying, hey, we've seen the action. The market's repriced the stock. We're going to give it, a few weeks to kind of settle down and maybe trade in a range, going sideways over the next few weeks.
Yeah, I think that's a good point. And also, I think a lot of times when we see some of this negativity surrounding the stocks that have been like riding the AI high, everyone starts to be like, look, is AI overhyped? Is AI, at this point, like overvalued? I don't think this is necessarily
that. I would say a lot of are not saying that, right? There's still plenty of analysts that like this. It's just on a day like today, what headline makes more sense?
Wrong.
So that's just how the world works, unfortunately. It's, you have your cutout headlines, AI trade over, AI trade booming. Well, on Micron being down a lot, the AI trade over makes a little bit more sense, so you're going to see those copy and pasted in the chat GPTs of the world.
Yeah, you are seeing that for sure. And I think seeing that also reflected in a lot of these other semi-stocks. Like the SOX index is down today about 0.6%. NVIDIA also down now about 1.5% and down about 1.6% this week. So of course, as we know, with NVIDIA's momentum, where NVIDIA goes, it feels, although the market somewhat follows. But Micron, the biggest laggard of the group today, down about now 4.5% on the week. But we will leave it there for all things this segment. Now coming up next, it's time to dive into the world of Bitcoin and the world of meme stocks as we are seeing some action from the Roaring Kitty. We'll discuss that more with Kevin Green coming up next.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I I think he'd be extremely proud of me. Yeah.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Now it's time to bring in Kevin Green, senior markets correspondent, to discuss all of the various movement we're seeing in some of these hype trade type elements. Like I would say the meme stock trade and as well as the Bitcoin miner trade. So areas of the market that are seeing enthusiasm on this relatively quiet day, Kevin. Maybe that's a better way to describe it. But first and foremost, my favorite discussion being everything Warren Kitty. I have to say, for as much as people try to discount this guy, he moves the market. I mean, because he basically tweeted, we now had a Chewy up 15.5%, so no one can discredit the power this guy has.
Yeah, definitely. But once again, it's more of the followers on his account really kind of attributing this particular picture of a dog that it is Chewy that he's referencing. So we did see a significant spike to the upside here when it came to Chewy. It actually traded up to $39.10. It was halted briefly because of volatility, and once again we saw a significant amount of call buying in this name here today. Now we haven't had any other contacts, no portfolio screenshots at the moment here, just the particular meme, but it was very interesting to see how much power he does have, as you kind of stated, and then also the fact that maybe the first person that can comment on his post and refer to a particular symbol could also then lead to this domino effect, which is kind of, I believe, actually what happened here on the intraday session. Now let's see if it's going to actually pull back. We get more information, you know, we can push even higher from now. We also have you know, individuals that are posting that maybe if you were a holder of Chewy stock and you've been waiting for a pop to the upside, that you know, now was actually the time to be able to do so. So an entertaining move to say the least.
Kevin, this is a big move, though. I mean, this is a stock that already had made a nice move post earnings. It bottomed out around 15 bucks a share, but then before earnings traded around 17. I mean, this thing got to about $30 a share even before this move. Now this move pushed it to almost 40. But even here in real time, it's doubled in the last quarter. I mean, this is a huge, huge change of pace for Chewy, which has become one of the more shorted stocks and certainly been on a pretty disappointing trajectory for the last few years.
Yeah, so the short interest right now, I think, is sitting at around 18.5% for the current float. And if you're looking at dark pool, if you're looking at pretty much institutional selling off exchange, you're looking at about 60%. So there's a significant amount of hedge funds that are trying to short this name and borrowing stock in order to do so. So you can see this type of short squeeze action taking place. And when you're looking at the fundamentals for Chewy, yes, it's been very difficult. Margins have been squeezed a little bit. They're trying to get into new areas of the business in order to be able to sustain themselves, because we have seen a little bit of a fall off when it comes to pet purchases and things of that nature. So once again, very interesting move. We kind of can talk about the fundamentals of this company, but as Jenny was kind of talking about earlier, he's able, you know, Roaring Kitty is able to move a stock more than probably what the fundamentals can show for this company right now, unfortunately. And so that's kind of the entertainment value that we see with this intraday trading action.
So Kevin, I was also seeing, because I follow the Roaring Kitty very closely on social media, so I was looking at some of the comments because they are always very insightful as far as like entertainment value goes. That some are saying it's referred to the dogs of the Dow, that some of these high yielding stocks we could see come into favor. So I mean, like, this just goes to show that we don't really know that it's involving Chewy, correct?
Yeah, it doesn't even have to involve a stock at all. He could just be posting something. That's what's wild about this whole situation. I mean, he's just posting pictures, and sometimes he does little like mini clips, and they're very obscure when it comes to its meaning. And I think the market and those that follow him try to figure out what the meaning is, and then assign something to it, and that's when we see this next push to the upside for whatever stock. If it's GameStop, if it's Chewy. So I just find that to be the most interesting dynamic throughout this whole trading cycle here, is that we have enough influence by just posting a picture to be able to move a stock substantially on an intraday basis. It's remarkable.
Kevin, maybe there isn't a big takeaway here, but we have things like this, GameStop, kind of the excess, kind of trading speculation. We have crypto, that don't really have any intrinsic value. And of course, there was the meme coin. Some of them are just, who who knows what those names are, dog with hat, things like that. And then you have names like Nvidia and Apple moving hundreds of billions of dollars a day. Like, this isn't normal, is it? Or am I the one that's not normal?
No, this is not normal behavior at all. I mean, even if you're looking at the #1 market cap in the S&P 500 at one time, Nvidia sliding around 20% if you're counting after-hour moves in a matter of 3 days, that's not normal either. So I think we're just kind of in this frothy type of dynamic in the market. There's a lot of money that is just trying to find a home at this point, and we have seen more of a desire to just really try to flip trades at this point. So I think that's kind of where we're at. Does it signify froth in the market? Maybe. Are we at levels that we saw in the 99 and .com era? I don't think we're there quite yet, but it is eerily similar in some respects.
Last thing, Kev, before we get this Bitcoin miner story, I want to get your thoughts on this. Is that indicative, you think, of excess money and risk assets looking for a home, like you say, or is it that people are struggling and they're almost like gambling at this point?
Oh yeah, I mean there's a gamification type of aspect to this market that we didn't see 5 years ago or 10 years ago. So I think that's going to be the case there. Obviously, leverage and derivatives products are also kind of fueling this as well. But you know, Alex, I know where you're coming from, and yeah, I think there's a gambling aspect when you're looking at the stock market here. What I do find very, very impactful though and good to say the least is that you're seeing more participation from the retail side, and they're learning these products and they're learning how to leverage certain products in order to give themselves a little bit of an edge in a system that over the years has really been geared towards the institutional traders. It seems like we have more of a level playing field right now when it comes to retail and institutional traders, and I think that's actually really good for the broader market and in order for individuals to be able to try to lift themselves up when it comes to trying to build out their overall investment portfolio or stock portfolio, trading portfolio.
So Kevin, I think that's also a really good point and something that's like underappreciated right now, and everyone just focuses on video. There's other aspects of the market I think have become really interesting. And so on that note, we have to check in on all things like the Bitcoin space, and so specifically Hut 8, which honestly is a stock I had never heard of before today, but it's joining the Russell 3000 and seeing some optimism, and we're seeing overall some enthusiasm in this crypto space today.
We are, yep. So Hut 8 has seen a nice reaction to the upside here over the last couple of sessions. If you actually look at an intraday chart today, we actually did round trip though, and it actually is in the negative. So Hut 8, it's a Bitcoin miner, but it also has some other businesses assigned to it. It has 9 Bitcoin mining operations, it has 5 high performance data center operations, and then it also has ownership of 4 power generation assets as well. So somewhat of a diversified business, but obviously the Bitcoin mining is really what it's known for here. But it is going to be joining the Russell 3000 here, and we actually do have some analysts that do cover this name. I mean, we have Canaccord Genuity raising their price target on the stock to $22, and that's up from $14. And they have a buy rating on the shares. Then we have Benchmark also maintaining a buy rating on the shares, raising their price target from $12 to $17. What's very interesting to see here when it comes to the Bitcoin mining space, we know that it's all about compute, we know that it's all about processing power, but having the dynamic of power generation on the back of that to be able to try to sustain your own operations or maybe even put energy back into the grid is something that is being talked about a lot more within the mining community here, and it allows them to have a little bit more of a diversification when it comes to their business. So a little bit of optimism when you're looking at analysts. A nice move to the upside if you're looking at the last couple of weeks here, but once again, an obscure name that's finally kind of getting into an index that could actually provide some positive institutional flows here once this reconstitution does happen for the Russell.
I think that's the big key piece. I mean, there's a lot of passive assets and things and funds that track, let's say, the Russell 2000. This is perhaps new money that would buy into a name that perhaps they never even would have heard of in the case of Hut 8. To call back to kind of the whole thing and tie it together, though, Kev, I think it's well said regarding kind of the financial literacy piece to this. My point was more, are we trying to get rich overnight because we feel like that's our only chance, as opposed to kind of the long and slow compounding interest story that we learn in school?
Yeah, no, you're right. There's people that are taking very speculative trades out there in order to try to 10x their account in a matter of a day or 2 days. That is definitely happening out there. And I acknowledge that too, but I also kind of go to the other side of that and say there's traders that are doing that, and those same traders are also probably building out their own long-term investment portfolios. That's kind of what I was referencing. So I agree with you. I mean, some of these trades that we see, especially on unusual options, are very aggressive. And if they hit, I mean, we talk about them, but a lot of them don't hit. And so, you know, it's a balancing act. More traders, more liquidity, though. Tighter spreads. That's what it's all about. You know?
Yeah, that is what it's all about. And gosh, okay, this name was ripping earlier, and now completely turned around, like you mentioned. So just goes to show that maybe this isn't being read as like a huge piece of news, but
Chewy's turning it around too, guys. Only up 6% now.
the meme stocks of the trade is fading as we speak here, Kevin. But great insight on this entire space. And I'd say one that we're definitely, when we see this frothiness in the overall market, it's interesting to follow where some of the excitement does follow. But we will leave it there. Now coming up next, it's time for Under 30. We are looking at Walgreens Boots Alliance, which is down about 25% here on the session, pacing for its lowest close since 1997. We'll dive more into the numbers and what's driving this disappointment with Jeff Pierce coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It's time for Under 30. Talking some Walgreens. Joining us now is Jeff Pierce, Senior Manager of Derivatives Trading at Charles Schwab & Co. Jeff, not George, so used to talking to Mr.
Okay,
Pierce.
I'm back.
Mr. Pierce.
What'd I miss?
Just more bad news on what's
more bad news.
Go for investors in Walgreens. The stock's basically down now 75% over the last 3 years, making a big chunk of that lower today, down 25%.
Obamacare sucks.
Yeah, as you mentioned earlier, a 27-year low as well.
I'll tell you what. I went in there. Well, let's not talk about it. It's too much information. But the medicine I wanted to get was $170.
Did beat at 36.35 billion, but up just 2.6%. Some of the segments that investors are looking at closely are U.S. retail pharmacy, which rose 2.3% at 28.5 billion. Pharmacy sales rose 4.4%, while same pharmacy sales were up 5.7%. And that benefit came from some of the drug inflation that we've seen out there. But retail sales fell 4%. Same retail sales fell 2.3%. A lot of that promotion activity, plus the company says they've seen more shrink, higher levels of shrink over the past few quarters. And finally, healthcare sales.
What have I done? I haven't done nothing.
7.6% at 2.1
Magnificent.
billion. And a lot of that is some of the
I know Sue's trying to sell her house.
and existing partnerships.
I plan on moving again.
However, if we look at the outlook, this is where I think a lot of this impact is coming from. Earnings per share expectations for 2024 are now just $2.80 to $2.95. Previously, they were coming in at $3.20 to $3.35. Analysts expected closer to $3.21.
Fat cats are coming back.
When it comes to this report, it wouldn't have shocked me if I wasn't in the financial world to see this weakness be.
Okay. I'll get caught up on all the news in here. The GME bounce or something. I see Vegas sent me something about him. I see that. I got to see what he said here. He posted a freaking dog. That's it. You gotta be kidding me. Oh, God. The more he posts, the more I hate him. The Chewy have a big bounce. I can see Chewy running up. Oh, shit. Pet-related stocks are trading higher after Roaring Kitty posted a cartoon image of a dog on X. I wonder if I could post something like this. If I mean, that's bad manipulation. Okay, I'm going to post this on Twitter and see if lipstick will fly. I will add love to Roaring Kitty. I would have shorted that sucker if I had a chance. Okay, I got back from my job. Looks to me like we got the 200 set up again. Now this could go down here to the 1-2 bits. What did them options go to? I'm just curious. $12.50. Are you kidding me? No, that's what they were. We got 2 options. We got 3 options. Okay, I'm back. Mannequin. Roaring Kitty made a post. And I gave him a big old kiss. Hey. Hey June, where are we now? So if we do if somebody had a microphone, they can get on here with me. But we have to have a good microphone. I don't like to be annoyed. Means you have to go out and buy you one. Okay, we're pulled back to our first support on the Fibonacci's, Michael. 50% pullback. Let's see it. Whatever happened here, prepare ye in the name of the Lord. There it is. Wow, what happened? Somebody die? Treasury yields decline in midday trading. Let's do it. $185. I'm having no problems with my platform now. Shit. I got 185. Let's get on this other one here. Wonder what's doing that. Get rid of that one. Would we get hit with a nuke? $54.85s. Wow. Shit. What the heck happened just now? It's bonds? What's going on at 2? There ain't nothing going on. I just bought 2 of these suckers. I'm going to buy 3 more here. It's dead. I got 4 contracts at 165. I brought bad luck. That's what I did. This is going to trip people out. That's a huge drop. I'm the fat cat that just come back from lunch. today's the 27th. Shit. I wonder why it would do it like that, though. Come on. So Fed Bowman repeats Thank you. I'm going to share that with the room here. If you already all didn't know it. Come on, baby. We got a 1, 2, 3 on SPY. If it's going to do it, it's going to do it real soon. I should have got out up there, but at that time I only had 2 contracts. I wanted more. I think I had 2. I have to go back and look. It's a very risky trade, YouTube. Yep, there it goes. The air conditioner guys sent a bill from Otis for $20,000. Not the air conditioner guys, but the elevator guys. Fuck. Come on. Could get 4 more here at $1. I should probably do that. What's going on here? What have I done? I'm tripping out on this thing. What's it doing? I'm really tripping out on this thing right now.
The strikes in the money. So that takes care of some of the option premium for you. But as I mentioned, that break even at 403, I'm sorry, at 206.75, that's only about 4% above the current share price. And the key one with this is it's all the way out in the September monthly cycle. So you're going to capture an earnings event also. That could be another catalyst to the upside. But yeah, all the analysts coming out on this one recently, they like it because they're seeing a resurgence in their cloud growth. And with Prime Day coming up, and better margins than most in the retail space also.
All right, and last but not least, the equal-weighted S&P 500, the Invesco ETF for that, and that became very popular. People were trying to get away from the Mag 7 a little bit. They were looking to this. Tell me a little bit, RSP, which is around 163.59 at this moment.
This is that ETF that mimics the S&P 500 equal weight index, and that's SPXEW. That's been severely lagging the overall broad-based market, the S&P 500, which is up nearly 15% so far this year. The S&P 500 equal weight, or RSP, is only up about 3.8% so far this year. So we've seen that divergence kind of grow as this rally has gotten narrower, right? It's getting led by a few big names, especially in the tech space. And, by equal weight, that means, all 500 components have, about 0.25% of weighting within this ETF, as opposed to the market-weighted S&P 500. So that'll take NVIDIA, Apple, Microsoft, which make up nearly 20% of that. So it kind of evens out the playing field, but it tells you how important those big tech names are to the S&P 500 market cap, which is the SPX. So we've seen that divergence take place, but I think somebody thinks it's going to reverse and kind of close together. We've got a chart up right now where you see the S&P 500 in blue that's outpacing the S&P 500 equal weight index These are both indexes. So yeah, you can see that divergence there. It's widening out. Which one either breaks or which one rallies to kind of meet up. So saw some unusual option activity where I think somebody's betting that the equal weight index is going to rally here a little bit over the next couple of weeks, because we saw a big call buyer in there in the July 12th weekly cycle. So just about 15 days to expiration. They bought 9,000 of the 166 strike calls, paid an average debit of about 85 cents. So that break even of 166.85 is about only 2% above the current share price in there. So you don't need a massive move. It's only a 2-week trade, 2-week position that they're putting on. But we typically don't see volume in the option market on RSP that big at all. So this is about just by doing this 9,000 lot on this strike and opening up a big open interest position. It's about 8 times normal daily average volume that we've seen in RSP over the last 5 trading sessions. So yeah, big positioning here, expecting that maybe the equal weights are going to start catching up to the S&P 500 overall.
Very interesting, and you said you don't normally see that kind of volume there. I'm glad you picked that one to take a look at today. Tom White,
54.85
every single day here on the watch list. Thank you. Coming up next, we'll talk trends in the private equity markets that you want to know about. We'll have some of the factors that could be influencing what the Fed does or doesn't do pertaining to interest rates. It's not just inflation data they watch. We'll be right back.
It don't look like it's going to work.
My dad was a hard worker. He used to do side jobs installing
Your
windows.
dad.
Charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Keep thinking that.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you,
This
ready to
ain't
go
what I
at
want.
12 p.m. Eastern on the Schwab Network.
I like that area. I think there is potential. Right now, as we speak, I think we are in absolutely a pullback on Bitcoin. I think you could see it to go to its support area, which is in the 60,000, and then possibly base there for a while. And then long term, still bullish, where it could go up to 70 some odd thousand, which is its resistance level. If it breaks through there, I think it can run, but again, only for money that you can afford to lose.
This week on Market Overtime, hear from Susie Orman, host of the Women in Money podcast, from escaping debt to her Bitcoin investing thesis. Susie Orman offers her unique market perspective. Investors closer to retirement and investors just getting started will gain valuable insights from a longtime market legend. Tune in all week long, 4:30 p.m. and 8 p.m. Eastern Time, right here on Schwab Network. Don't miss it. And welcome back to the watch list. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Few movers for you to keep an eye on. Levi's chairs are on pace for the biggest one-day percentage decline ever, despite an earnings beat and higher dividend.
God.
Much of the negative focus has been on missed revenue targets and an outlook that fell short of expectations. Despite today's sell-off, shares of Levi are up around 35% in the past year. International paper shares also falling. Brazilian paper company Suzano saying it was no longer pursuing a takeover.
I think I'm going to take a loss on this little baby.
Just days after shares had jumped to a 2-year high. Right now, the shares of IP are on track for their biggest one-day loss since 2022, September to be precise. Now for some more trends that we're seeing in the markets and investment strategies as well, let's consider this with our next guest. Joe DeGrosa is with us, Chairman and CEO at Access Capital, live from the Morningstar Investment Conference. It's great to see you there, Joe. A lot of action there I saw over the last couple of days. What have people been talking about when it comes to the markets?
Well, I think, with the upcoming election, a lot of people are focused on short-term volatility. But there's a lot of talk now about private investments, and I think that's a trend that is sort of hitting that Malcolm Gladwell tipping point. It's an area of particular interest.
I said it before them. We're nearing close to the election, the uncertainty. I talked about it today. Well, this guy just now mentioned it. Somehow I messed up all my charts here. Got shook up. So that's a SPY one. This is going to be the SPX. Not done yet. The heck? There it is. Think they can go to 45 cents? Trying to figure out when to add it. If I want to. Just take the loss and say I got into a stupid trade. I've got a falling wedge and a breakout. We'll know here any minute. No, I ain't selling. If I was going to sell, it'd be now. Let's see if we hold this here wedge. Right now it's pretty, but not with the news. And we could be going into the election jitters, like I said. I've been saying it all week. What you got? Oh yeah, you're okay. Yoko. Appreciate it. But I don't really want to buy them here either. I could get 10 of them and that'd give me 14. But I ain't going to do it. I think it's too risky.
Here, especially when you're looking at the S&P 500. Now, obviously, we are focused on the PCE data that's going to be coming out tomorrow. We also have a quarterly options expiration that's going to be occurring tomorrow as well, which could create a little bit of fireworks. But as you talked about, we did see the S&P 500 kind of slide a little bit. And one of the reasons why is the SOX. So if you're looking at the Philly Semiconductor Index. We have not really seen a bid being caught within the semiconductor space here, even post Micron earnings. And that's really been kind of weighing on some of these sectors and indicators, if you will. Now, one thing to also kind of note when you're looking at the Russell, we are seeing a little bit of outperformance. The regional banks, after we saw the stress test results yesterday for the major banks, the regional banks also did catch a little bit of a bid, and we are seeing a little bit of a rotation when it comes to small caps. And when we are looking at the leaders, consumer discretionary and communication services continue to lead the pack, and we're seeing some laggards, especially when you're looking at the consumer staples and healthcare names that are out there. So overall, I think we're just kind of waiting here until we have this data point tomorrow. We might just see some choppy action going into the close.
All right. You're also having a keen eye on the energy markets. Some thoughts there?
Yeah, we continue to see crude oil move to the upside here, and this is actually a little bit remarkable because we actually had some bearish data.
Keep thinking in my mind, I wish Trump was in office right now. He'd set these feds straight. Because what they're doing is just going forever and forever and forever. It's not fixing nothing. Not until I see my chicken go down to a decent price. It's trying to make its mind up. Yoko, if we don't hold 5467.14, I'm out. Right now, it's not looking good for me, but let's see what I can salvage. $544.12 on the SPY.
You know, you guys are getting more.
Always clean as Jim.
Hello, this is Dustin with Absolute Roofing.
Yeah.
Are you the one that's going to be meeting me over at the building on Claremont?
Yeah, another guy. Okay, yeah.
Well, I just wasn't sure. There was two numbers on the account, and I tried to call Josh.
Let me see. Absolute. Okay, let me, can I call you right back? Okay. Yeah. Did you have more than one coming out to look at the roof? I got someone with Absolute Roof called me now and wants to go out and check it. I had A1 Guarantee Roofing call. Want me to go ahead and meet him down there? Okay. Okay. Well. No, that's fine. I'll go ahead and call him back here. Yeah, I know, but I'm free right now, so I might not be free tomorrow. Okay. Yep. No. Okay. Well, I'll call this other guy real fast. Okay. Yeah, this is Jim with Claremont. Did you want to come out and meet me? Okay, give me about 8 minutes. I'll be right over there or sooner. Okay, bye-bye. Well, that's another reason why I shouldn't. Oh, I'm coming back. Okay, I'm gonna probably be out of this trade even or better. We'll see here. I gotta head out again. One of them caca days. $135. I'm almost practically even right now. Actually, I'm up, or I'm even now. Well, let me go do this. Fuck. Sorry about that, folks. I don't have my marbles on straight. For one, I shouldn't have took that trade. I'm gonna get stoned tonight.
Jobless claims, they've picked up, but they've kind of stabilized again. So I think the big question will be, where do we go from here? What does next week's employment number look like? And that's really, I think, the key for the Fed is, they've been waiting for the job market to slow down. Are you going to get that slowdown? I personally, I would think they're probably going to want to see more than one piece of data that's going to make them move, but I think confirmation of that the market would like to see, as the bond market seems to always want the Fed to be easing sooner rather than later.
Yeah, understood. And so, Will, what are you going to be looking for within the report next week as we see continuing claims at the highest level since 2021? What's going to be key in the jobs report next week?
Yeah, well, before we get the jobs report next week, we do have the PC inflation data tomorrow, which I think will be critical. But the read through here from the continuing claims and that trend that we're seeing, that 4-week moving average, is that suggests that the trend of higher initial and continuing claims will likely lead to a higher unemployment rate. But we all know there's a lot of moving pieces, and I would suggest last month was quite a bit of contradictory information within the report. So what we're really watching and paying attention to was last month, is the trend going to continue lower, where we see a monthly change in non-farm payrolls, moving lower and lower, or in meaning was last month an anomaly, or is the employment picture perhaps more resilient than what market participants are thinking right now? Because certainly the market's very, as Lyle said, the market in the bond market specifically is very much believing that the Fed's going to cut one and more likely than not 2 times this year. And so I think the jobs number will inform that next week.
And the inflation at the same time, keeping full employment and such. Lyle, what are your thoughts on what we may see or what the Fed may take away from all of this?
Yeah, I would agree with Will. I think that tomorrow is probably a bigger number, at least near term, to see what's happening with inflation. That's been the other key driver. They're trying to get inflation back to that, they say that 2% number. We actually think if they get closer to 2.5% or slightly below, that's probably going to be, they'll consider that a win. We think the Fed wants to ease, but at the same time also doesn't want to see inflation pick up. At the same time, I think you got to look at what's going on with the consumer. You saw data that the excess savings rate has now gone negative. All the money from the pandemic, I think, has been spent, and people are starting to build up credit again. We'll see how that plays out as well. At the same time, I was just flying this week and I saw data, saying that we had record TSA, pre-clear levels on Monday, I believe. And so I think there's a little bifurcation going on. I think certain parts of the economy are still very strong, but at the same time, obviously the lower end of the consumer is being impacted by some of this, the inflation you see that's in food and in housing costs that just has been less, coming down less.
All that household savings that was stacked up, and people have been digging into that. Will Sterling, Lyle Fitterer, thank you both very much. Good to see you. I'm Nicole Petalides. Thanks for being with us here on Schwab Network with the Watch List, and with you every day for Trading 360 at 11 a.m. and the Watch List at 2 o'clock. Keep it right here. Market on Close with Oliver Rennick next.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Ethan! How's my favorite client?
Great! I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Good afternoon. Welcome to Market on Close. I'm Oliver Rennick. We're winding things up here at the Morningstar Investment Conference in Chicago. Got some great guests joining us as we look through a few valuation metrics in the market, talking about some tech still, as we've got a little sluggishness in the AI trade lingering. Stock's been trying to get going today, but just can't get a whole lot going. Earlier this morning it was the Russell that popped, then it was the NASDAQ that flipped, was the leader, and then we kind of lost some of that tech strength because semiconductors have been down throughout the session. You could blame Micron from earnings last night, showing a little bit of a drop. Nvidia also just kind of stuck right now, down a bit on the session. But if you've been watching the closing bells, it's been pretty active. Yesterday we had a solid little bid there in the last couple moments of the day, so keep your eyes open. We're not done yet. We've got an hour left of trading. Russell's looking in pretty good shape. This morning we got some soft data. GDP, personal consumption dropping, has a little bit of bid into bonds and a drop in the dollar ahead of tomorrow's inflation print, the key metric for the week. So there's a lid probably on the market here over the next hour on just how much movement we're going to get. You can see some of the limits of risk on this morning when the data came in light. We tried to do the bad is good thing, but the dollar caught a little bit of a bid here and is raised up substantially from the lows of the day, and Bitcoin was trying to rip and run earlier. Once again got stopped out around 62,000. So keep in mind, WTI, as we mentioned as well, is hanging in there too. Crude now about 1%, feeling pretty cozy above 80 bucks. So another thing to keep in mind when we look for inflation tomorrow. Let's go through some of the moves of the session and also take a look at my risk radar. Firstly, Nvidia down on the day. That's where we start pretty much all of our analysis. Right below 125, not much to say. Let's call it consolidation for now. The fact that there's no deeper selling and that yesterday we got a bid continues to show a two-way trade taking place in Nvidia. That's probably healthy and very well could be the starting point for another big rip higher. Of course, it could also be a pause before a higher correlation sell-off, but there's just nothing really conclusive right now in the chart of Nvidia. What's interesting today is the cloud complex actually perked up without a lot of clear reason. We'll talk about one analyst note on one of the winners in cybersecurity, but that whole sector is actually having a pretty good session. Think about them as sort of the secondary, maybe even tertiary AI plays. Some might be disruptive AI, others might be able to capitalize on it. So the cloud picture's been a bit murky. Interesting to see it rallying today. Maybe investors just looking for something tech related. One of the more interesting stories this week has been the housing data. We saw pending home sales weak this morning. New home sales were also soft, and pretty much everything from the housing market has been looking a little bit weaker. And so the ITB ETF, a little changed on the day, showing some impressive resilience, but $100 is basically the line in the sand for that chart. So it is one of those cyclical groups that's been under pressure. And so that kind of brings us to the main theme ahead of tomorrow's inflation report, which is if Nvidia continues to flag and move sideways and not lead this market, then what does? If we're going to get something else to lead, it probably means we need to see a light inflation print, because right now the economic data are not impressive. It'd be okay if the numbers from this morning were corroborated by a drop in the inflation print tomorrow, namely the month over month, which in theory, if it missed and came in light, could hit 0 on the core PCE, maybe even a negative. That would be one way to look at this week's data, which have been disappointing, and spin it in a positive way. bonds have been catching a bid, and I think generally for the wrong reasons. That's why my risk radar has had only one green light for a while, and it's been bonds, because it does look like we're transitioning into one of those periods where bad data shouldn't be good. Now, the catch is if inflation comes in real light, then we could take some of that bad data and spin it as something positive. The chart that I'm watching going into tomorrow is the dollar next to yields. I think yields down, bonds catching a bid because data are coming in light, but the dollar staying bid and elevated tells us that even if the numbers come in light, the Fed still can't cut. That's why we've got a separation of yields on the low end of the range while the dollar's elevated. So that's the chart I really want to watch going into tomorrow, because if the inflation print does come in light and makes us feel a little better about our weak data, then maybe that dollar comes off a bit and then you get more of that risk on move. But if the dollar stays bid while yields are down, it's probably telling us that it's hard to spin bad data is good. I got Kevin Hanks joining me, host of Fast Market, to kick things off here. I mean, tomorrow's a pretty big number, I think, Kevin, given the persistence of data coming in below expectations this week, particularly housing, puts a lot of pressure on that print tomorrow.
Yeah, you and I have highlighted the data that's missing, and some of it to an alarming extent, and showing consistency in missing, like housing. You know, I think today, the NASDAQ being up with NVIDIA down is a good sign. It's not a bad sign, right? It's something that the market can say, well, look at us without NVIDIA. We don't need it. I think if you look at the S&P right now, it's really 6 down, 3 up, 2 virtually unchanged.
Sector-wise.
So that's mixed. If you look at the real sector of the S&P, it's software, application software. It's the Oracle's, Salesforce, Adobe, Intuit, all those are up today. Palo Alto Networks. So that little specific corner of the S&P is having a good day, but it's a mixed day, and we're waiting for the big number tomorrow. And the market has a lot of chips in the middle of the table with this number tomorrow, because if it comes in firm, if energy doesn't show up as weakness, it's going to be problematic.
If it comes in firm and we drop those September cuts, that's kind of the only thing the market's kind of got going for it from a macro perspective. Outside of NVIDIA is the fact that September cut odds are at like 65% right now.
But the outtrade, the miss, is the Fed speakers aren't talking about a September cut, and the market is.
Exactly.
So something's got to give
No,
there.
you're right.
Either the data's got to significantly weaken to get the Fed on board, or that September meeting has to melt away, which a lot of meetings have melted away over the last couple of months.
It's been an iceberg.
It was 6 going on 7,
meetings.
now it's 2 going on 1. So a lot of things have melted away, but it'll still be the data that decides. Nike, I think earnings, kind of a big deal, only because it's been beat up, and you've got some mixed signals from like Foot Locker and Dick's. Believe me, if Dick's is doing well, Nike's doing well.
Sure.
But they've got a guide.
Yeah.
The number that Nike puts out almost doesn't matter. It's what's our plan for the future that will make the stock move.
And David Schwartz here, who covers them, basically said that the next quarter is kind of like already a lost cause.
They
It's
need
more
to
about
promise us something
next year. But there's also, too, I feel like for Nike, such a specific stock story there where they've gotten edged out. They haven't been too creative, and others have, and they haven't.
I heard one analyst said something that I just caught in the corner of my eye, and it was pretty interesting. He calls all the competition with Nike ankle biters. He called
Quite
all
literally?
these little companies that are nipping on the big dogs.
I thought it was
which
a
is
shoe
Nike.
pun.
Yeah, exactly. But I thought that was good, and it kind of fits, because a lot of these companies, they are a small fraction of Nike. Yet On Holdings and Viore and even Lululemon, they're not zero, and they're getting more popular. So there's a lot of things going on, but Nike usually signals the end of earnings season, and then we get the end of the month, end of the quarter, we'll see how that, if anything happens there, if that causes anything.
All right, good stuff. Nike coming out this afternoon, our main earnings highlight. Thank you, Mr. Kevin Hanks. Appreciate that analysis. Let's talk some more about the cloud trade and tech and what's working, because there's like a 2.5% rally in the hack ETF today, and cyber stocks are doing really well. Cloud companies up like 2%. Jenny Horns in Chicago in the studio with a look at least one positive analyst note, it seemed like, for the kind of sector of cyber. Jenny, what's going on?
Yes, I have to say that there's a lot of strength today. Like Palo Alto Networks, for example, is one that's like leading the charge. I mean, on analyst optimism, but it's kind of strange to me because I can't imagine that this is necessarily like what's driving so much of the strength. At least that's not how I was interpreting it. But many are saying that with like the recent pullback we've seen in so many of these software stocks now, it's the rotation back. It's like, you know, everything's coming full circle. So Palo Alto Networks, I think, has been one that's created a ton of opportunities on the back of selling off massively after its earnings. And so I think that now the analyst community is seeing some opportunity for, I mean, like overall just to get involved in this company. Baird was one that did raise its price target to pretty substantially, but I can't imagine again that that's what's driving all of this optimism in the entire software space today.
Okay, yeah, it's it feels like there's just this need to find a new narrative now that NVIDIA's been stuck, you know, so why not cyber? Why not return to that, you know, which generally has been rewarding, but as you know, and as you're talking about, as we mentioned, like, it has been pretty disappointing. The cloud earnings were not nearly as explosively good as any of the hardware stuff. There's been a big gap in the quality of those earnings.
Because it's like, as we've said so many times, it's to me the concept that we talk about AI is if it's the rising tide that lifts all boats. It's not. Frankly, I think that we should be concerned if you're a name like Salesforce that obviously benefits from having humans that are a point of contact. AI completely eliminates that. So if you're a company that basically specializes in sales platforms, I mean, AI is your biggest disruptor. So I know that they're trying to utilize it, spin the conversation like it's beneficial. I just wonder how much longer that will stand, especially for some of these companies.
Right. Come on, baby. You don't have a, you don't work for a Josh?
Well, there's a Josh that works that is part of ownership.
Yeah, I think he's the one that called me.
Josh Culbertson works the IRS.
No, heck no.
Okay.
No. No, he just called me last week, said if I heard from the roofer guy, and I said, yeah, I'm supposed to meet him Thursday.
Okay, so yeah, he is part of ownership, so.
Yeah. I wanted to make sure that I wasn't talking to the IRS people.
No, I'm sorry. When you said the big guy, I just assumed it was.
Yeah, I got you. Okay.
What you ask me about him? If you should let him know?
Well, yeah, but that's your job, right?
Yeah, I can talk to him.
Yeah, okay.
You don't have to.
Yep.
If he calls you, you can definitely tell him that you met with him, but I'll reach out to him in the morning and give him a heads up too.
Okay, bye-bye.
Okay, thanks, Jim.
Yep. Break. I think I'm going to sell this here. I've sold some at $1, but I'm. Yuck. Higher level. I know some people got stuck in this one. They're probably getting out or out.
So a melt up tomorrow would be us hitting around 55.10 to 55.15. That would be your melt up. So remember, we have a couple of events taking place tomorrow. Tomorrow's that quarterly expiration. We have the JP Morgan collar that we've been following. That's sitting at 55.70. So if you really wanted to melt up, you want to go to that level.
Melt up.
70. We have the quarterly that can create a little bit of volatility.
You gotta be kidding me.
Relieve some pressure to the upside as they roll that position off. Today, when you're looking at the open interest side of the equation, we've been looking at 54.25 at that negative gamma level. Today, Oliver, it moved up to 54.55. So that's a nice little 30-point bump. And the reason being is, once again, we have a lot more bullish positioning taking place. And actually, a lot of dealers have been selling, or a lot of traders have been selling the 54.50 puts instead of buying them now, harvesting that premium that you guys just kind of talked about earlier. So when you're looking at the structure itself, this is bullish. Now, if we have a bad print tomorrow, then we have a lot of gaps that can go to the downside. But the market is expecting at least an inline print, if not a better print. And if we do see a better print, I would expect that we would actually have a spike to the upside here when it comes to the S&P 500. It looks like the option market is really pricing that in.
Great assessment. So the converse of that would be if it comes in warm, then we could probably be in some trouble here. And I agree with that because fundamentally, it lines up. It may sound like, oh, obviously, if it's warm, the market
Go, baby.
like it. But it's particularly bad when you have a whole week of data missing expectations and soft. So you need the.
We just hit a 1, 2, 3 resistance.
Tolerable.
Right, and we just have this buildup taking place. Even from a technical analysis standpoint, when you have these consolidation patterns, there's two things that you got to keep in mind. One is maybe it's a basing formation and you're going to pop to the
15.
upside. That could be the case. Or you have this consolidation
I'm gonna take
period
it.
happening because it might be a little bit lofty at these levels where we have a pullback. If you're looking at a hot print tomorrow, and I would say a hot print for core PCE would be around 0.3% or higher, market's looking at 0.1, that would be a hotter print. That could drive us to the downside there. That kind of resets the Fed. Then you would be looking at that 5,400 level on the S&P 500, a pretty substantial move to the downside. And once again, you do not want to have that happening on a quarterly expiration when we do have that collar position where if they're rolling those puts at the same time, that's where we can have this domino effect to the downside or even the upside, depending on what the number is.
All right, love it. The JPM collar, the inflation print. We got a busy day, a good Friday for us to close this week off. Thank you very much, Kevin Green. Nice look here at the options.
I'm right on the threshold of getting out at 105 or 110. If we can get a little spike here. This is tough resistance.
NASDAQ trying to hold on as NVIDIA drops now down about 2%.
Oh, shit.
Got hit a little bit during our conversation. When we come back, we're going to talk some index versus active funds, some ideas as well. We've got the team from Dimensional Fund Advisors joining us for a conversation here, so don't miss
You think we pop hard? We still got 10 minutes, 20 minutes, but I don't know. I'm freaking out on this one here. But my mind's not all in it either. Do. I can get 105 if I want it. I'm going to stick with your thought. So if we get a little spot. Oh, there it is. Ah, fuck. I can't tell you how much has been beating on my heart for the last 2 hours. He 1.45.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech. Trends?
All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere on any device for free. Schwab Network.
Welcome back to Market on Close. We got some time until the bell. Let's keep talking investing themes and ETFs, which of course been a popular subject here at the Morningstar Investment Conference. Joining me from Dimensional Fund Advisors, Nicole Hunter is the head of ETF Capital Markets. Nicole, great to meet you. Thanks for being here on the Schwab Network.
Thank you for having me.
You guys at Dimensional Fund Advisors use systematic processes, which kind of sounds quantitative to me. Tell me generally about what excites you with ETFs right now and what's kind of cutting edge for you guys.
Yeah, absolutely. If you think about active ETFs in the industry, there's really a massive rise happening right now. We have 38, $142 billion in positive flows across most of them. It's been a strong adoption these last 4 years. And what gets me really excited is that investors now get more. They get the best of indexing, they get the best of active now in an ETF wrapper from Dimensional. So that systematic approach, which is essentially you get broad diversification. You can get the market with the different levels of tilt from Dimensional, which historically you've been able to do for 40 years through our mutual funds. Now in an ETF structure, we also have a pretty robust UMA platform we've rolled out. So different ways to access Dimensional, different wrappers. I am really excited about the ETF one specifically, and we're continuing to grow.
Tell me about kind of what is the transition from mutual funds into ETFs, right? The wrapper, the kind of end of the era, the still ushering in of the new. Within ETFs as the wrapper, what is, you think, kind of unexplored territory, or where is kind of on the margin the creativity happening right now?
Well, I think if you think about historically where the money has been in ETFs, it's been passive. And what does that mean? That means there's funds that are ETFs that are tracking an index. So when money comes in and out, or securities like ETF securities in and out, it generally is a perfect slice of the index or the fund. With our approach, we're using all of the flows to rebalance the portfolio. So what's really exciting for us, and this is the plumbing, the ETF nerd side of me coming out, is when we get securities in any of our portfolios, we're not taking a perfect slice of some blunt instrument like an index. We're going to use that security list to move the portfolio to generate that alpha in a systematic, robust way, and on the way out as well. And so we're doing something we've done in the mutual funds. We're applying it in ETF format. It's hard. The plumbing's hard.
Right.
But
I can't believe I got 145.
$142 billion against it in fixed income and equity. And within equity, we have a U.S. developed and emerging market products that are all seeing flows right now. So I'm really excited that we're able to do this at scale. And the trend of investors building full portfolios with our ETFs, we're continuing to bring more to market.
Yeah.
So I'm really excited about the innovative approach to how we're handling the flows into our ETFs in a way that hasn't been done traditionally before.
When you talk about the complexity of plumbing in active ETFs, which kind of was the mutual fund sales pitch in a way many years ago, we're doing these complex things, this is why we have to charge you what we're charging you. How do you find that balance of the complexity of the plumbing still within that ETF price?
Always clean as Jim.
Limitation there, and the kind of second point to that is, do you feel the market is reaching?
Hello, this is a recorded message. May I help you? Hello. I used to tell them I'm out looking for kangaroo rats in Africa. May I help you? Okay. Damn. Well, why ain't it moving? Oh, what am I doing here? Fuck, that thing ain't moving. You must have hoped you had a different call. Oh, that's not SPX, that's Starbucks. Fuck. I'll tell you what, it's not been my day. I mean, it has, but it hasn't. Not since I started doing this other stuff. I said, what the heck? I was looking at that stock and I said, what the heck? What time is it? We got 4 more minutes. Okay, the mistake I made on this trade, I want everybody to know on YouTube and the room, is that my mind, for one, wasn't here. It was on learning new things about a roof and about pipes and all kinds of crap. So when I got called out, I was all ready to come back, and then I saw the knife, and I said, hell, what happened? Nothing happened, you know. And then it took me a while to figure out what happened. Damn Fed speakers. You know how the market reacts to Feds. They blow it off eventually. So then I got called out again. And by this time, I was really shook up. So I added on, just in hope, and we never trade off hope. But I got to know the news. You know, the news is what keeps me going, keeps me in the trade. I got to be in the now. I can read the chart patterns, I can read the moving averages, but if you don't know about the now, the strategy doesn't work that well. So I took a big risk jumping in the trade before it was ready. I just seen 3 black crows and immediately jumped in the trade. I should have waited for the pattern. Then when I saw the falling wedge, and I was debating on selling this sucker right here. I mean, this was it. It pulled back to the top of the wedge. Perfect. Maybe a little bit too long for me, but it also had a confirmation of a support level that I had on here. I don't even know where it come from. So I was just hoping that I could get out of that trade, and then she went ahead and run on up. Then it pulled back again. I'm going, fuck. Could have got out of this thing. But I still would have been deep in the hole. So I just I just run it out. And I was ready to sell it at 105, and Randy kind of not convinced me, but I go off Randy. Randy's smart. Like Magnificent said, I learned a little bit from Randy. And so when that thing hit 140, 145, I pushed the button on market sell, and I got out right at 145. I got lucky on that one. Because it wasn't there very long. So it's all about being in the now. Let that be a learning lesson to you. I've said it before. You got to have the right mindset. You got to have confidence. You can be too confident where you get complacent. So we just now closed and it popped up. We had a double bottom. If I'd have saw that, even if I'd have pulled the chart up to there, I would have loaded up a lot more. I think I did see that, but I'm not sure. What is tonight? What is today? Thursday? I have to look up on the calendar. So let that be a lesson to you all. Don't trade if your mind's not in the game. I'm just addicted to trading. I got to be in it all the time. Do you see how bad I need a vacation? Donate to my vacation fund. Last one I took was in 2018. And we'll see you tomorrow. Thank you, Randy. You love talking roofs? Well, it's the center of the roof where these people screwed up. They didn't put the right cap, I guess, or whatever you call it, on top of the roof. And every time we get a big rain or a windy rain, which we live in Missouri, it seems like you know how to do a roof. You need to, we get a lot of rain, we get a lot of heavy rain. We get a lot of wind. We can, get a thunderstorm warnings. So far, I've counted probably 8 this year. Warnings where they want you in the basement. And the last rain we had was 5 inches in 3 hours, and it had 60 to 80 mile an hour wind. I couldn't see 10 feet in front of me. And this roof is real steep. So I'm up there looking at the roof. I'm not up on the roof. I'm up in the attic looking at this other entry where we could get a better look at the roof where the leak is. And there's a extinguisher pipe up there where the water runs in. Big pipe, 6 inches wide. It got a big ring around it, probably 8 feet around that pipe. So this guy suggested it could be the pipe. But he also went up and looked at the roof, and he said, oh, it's definitely the cap on the roof. Because, I mean, a little air come up in there, and it can blow that water right up in that crack. It's made out of fiber, not a hard plastic. The correct kind you should be using. So I'm up there in the attic, and we're looking at the air conditioners, and one of the air conditioners water flow alarm was on, but it didn't. I guess it didn't censor somebody or shut it off or whatever. So I bailed some of that water out of that little trough, and it caused the leak to go over the roof and onto the ceiling, and the tiles fell down and blah, blah, blah. That's in a empty building next to the IRS building, but I'm glad people weren't in there because that sheetrock's like 3/4 of an inch thick, and it comes down and it's got water on it. Man, it could put a pretty good dent in somebody's head. Yeah, it's shingles. They repaired some of it with a flat roof, foam or whatever you call it. Last time we called them up. Right now, I just think we're playing at a disaster. These prices are so damn high on these stocks for a numbnut president. So I'm going to get out of here and relax. I'm going to go for a walk and sweat. I got to get to 160 pounds. If I ever do that, I'm going to be shocked. I mean, I think I can do it, but most of it's a little bit of belly fat, not much. But look at 5 pounds of hamburger. Then you can understand. You got a little bitty beer belly, but not much. I mean, it's more or less. I was 175 for over 40 years. 180, 190. I got up to 200 one time. But I'm feeling so much better now. I mean, so don't forget to donate to the kitty for my vacation, you people in the chat room. I got my shingles shot last week. And I'll be getting my other shingles shot in 6 months. They give you 2 batches. I didn't want to take it, but I don't like it. I don't like any kind of vaccine. They want me to take some kind of respiratory shot. And I said, what are you going to do, shoot me up with a flu? It's a new one they got out for the elderly now. RSV or something like that. Catch you later, YouTubers.